Yo, good morning, everybody. How are we this morning? As I was saying, good morning, everybody. How's everybody doing? Uh, Flying solo for the meanwhile because Sir William Davis is running late. What a tardy gentleman he is. So tardy. No, he's sitting in the background. He was struggling to get into EVMux. All right, how's everybody doing? First things first. First things first. I took a little NASDAQ sell just before the stream started, and I'm happy to say that it was a success. I will run through this one in a moment. Will, do you want me to add you?
Okay, I'm here. Hello, guys. What's good? How are we doing? I do apologize. You get to see me in a vest. I am sweltering hot. It's mega hot here today.
Yeah, no,
So,
samesies. That's why I've got grey on today. I like wearing black clothing, and today is grey because I am sweating, dude. I am sweating.
yeah, dude, it's hot, man. It's really
It's hot.
hot.
Oh,
Yeah.
how was the morning?
Oh, how you doing? Good, mate. Yeah, really good. So, just chilled. Went out for some lunch with my partner. Came back. Spoke to my dad back in the UK. So he was up ridiculously early for some reason. And then just chilled out, chucked the aircon on, still absolutely sweltering hot. Went and stood in the balcony for a bit, and then joined you fantastic people on stream. It's pretty much my morning.
Okay, so you being late is because you were just enjoying the balcony.
Oh no, yeah, no, me being late was just my computer decided to do all sorts of weird stuff. I entered into the stream, and then it crashed, and then I entered again, and then my whole sort of Chrome crashed. I was like, what the hell's happening? Why today? And then everything just started working again. I was like, oh, now
Yep.
it wants to work.
Just because. Anyway, I was going to say
Yeah.
good morning to everybody that is in chat, and then I was going to go through this NASDAQ sell that I had just before stream. So let me just jump into that one very quickly. First and foremost, we've got MGN in this morning. Good morning, MGN. We've got Henry in first thing, well, second in. We've got Trade with Patel. Good morning, Trade with Patel. We've got Martin I. Martin, good morning. We have got Michael. Good morning, Richard. Good morning, Michael. How are you? We've got, Shane Joyce saying, I've started to realize more and more that trading is like playing the bass. A skilled bass player knows when not to play. Dude, I'm a bass player. And I think I'm a good trader. So the alignment is there, definitely. No, true. Knowing when not to enter and knowing when to enter is just as, well, knowing not when to enter is just as important as knowing when to enter. We've got Louis. Good morning, team. Good morning, Louis. We've got Zed from Ethiopia. Hello, everyone. Good morning, Zed. Passed phase one yesterday. I started my phase two today. Congratulations on passing phase
That's
one.
awesome. I'm well done.
Yeah. We'll
That's
do
really cool, man. Big congratulations.
yeah. We've got Kids Story. Good morning. Good morning to you, Kids Story. What a name. We've got Stock Degen. Hi, guys. First time here. Good morning, morning. Good morning, Stock Degen. I seriously hope that you're not an actual Degen when
How you doing, brother?
and that this is just a moniker for your alter ego. Buongiorno, ragazzi. Carmine.
Buongiorno.
Good morning to you. Carmine. I'm assuming Carmine is a masculine name. So, good morning, sir. I really don't know.
Bro,
Please.
that is a brave shot in the dark. That is a brave shot in the dark.
Confirm if indeed I am correct. If I'm not correct, I do apologize for misgendering you. We've got Cesar
Ciao
saying
bella.
good all, good morning. We've got Stramza saying good morning to you as well. We've got Pondara. We've got Pondara in saying hello, good morning, and then Watch with Solo, hello. And then Crypto saying good afternoon from India. Lovely having you all in. Welcome to Wednesday. It is the midweek madness day. We have we've just passed over that midway threshold for the week. 2 days passed, 1 day for today, and then 2 days to go, and then it's weekend again. Oh, mate, I can't wait for the weekend. I can't wait. Why? I'm boiling, and the weekend we might have some rain. So can't wait. Can't wait. Anyway, while Will is setting up his screens and whatnot for the background, I'm going to go through this US Tech NAS 100 trade that I took this morning. So I will start from
Cool.
say basically because
So
this
you
is
didn't trade NAS in the...
say again.
Oh
Will?
no, you have a morning strat for it now, don't you? I was gonna
Yeah,
say I
yeah.
thought you didn't trade NAS in the morning, but you've got a morning strat now. I just remember you saying.
Yeah. No, I've got the two strategies for one for London session and one for
Yeah.
New York session. So this one, we've had this downward trajectory for a while. So just very nice, just making new lower lows, lower highs, lower lows, and so on. And anyway, so from Monday, we started to print this potentially new bullish price action. This is on the 4 hourly. So we came into this very last area over here, trying to push price, where price pushed lower. So reinitiation of a downward trend, a base, and then a drop. So a drop, a base, and a drop on the daily. So the expectation is if price were to come back to this area, this whole section could be taken into consideration, but generally the last candle before price actually momentously started moving lower, which was this one over here. If I drew that all the way through, we had an almost reaction on Monday afternoon, and then yesterday we had the reaction there where we just tried to push through it and then started pushing a little bit lower. If I go down to the hourly, it makes a little bit more sense. So you can see that volumetric push down that we had on Tuesday, then a little bit of consolidation, and then another volumetric push down. So if I just readjust this so that we have that very last few candles before we had the momentous push down lower. So once again, the way that I see the market is it is a back and forth between the bears and the bulls. It's an arm wrestle. And over here we had basically their arms being smack bang in the middle. There's a back and forth, back and forth, back and forth. And then eventually on these candles over here, the bears completely overwhelmed the bulls, pushing the price even further down. So I expect if price were to come back to that point to have either a similar reaction or a slowed reaction. So price comes into it, I want to see a back and forth, or I want to see the bears again overwhelm the bulls in this case. So here we had a bit of a slowdown on Monday. Price tried rejecting off of it, but just very, very uninspired attempt to push lower. So not the volumetric reaction that we had on Wednesday. It happens. Anyway, so yesterday price tried pushing higher. We wicked the highs of Monday. We didn't close above on the hourly, and then we started to push lower during the New York session. Now we do have this 50 EMA, which was reacted off of. But then when we tried to push higher during the Tokyo session, we just kind of started failing. So if I go down to the 15, you will see that I marked out the last high point of the previous day before we started pushing lower, creating a new low. So creating the low of the day was on this leg over here. Price tried pushing up. It failed to make a new high, and then it started pushing lower. And I thought to myself, there is a potential, there's a gap here. There's a potential that we could fill this gap. So the gap was this little section over here. I thought that we might fill that gap, but then you can almost think, okay, so are we going to have a similar reaction as we did when that gap was created? I'm not entirely sure. It does look like the momentum is more downward from the previous day. So you can almost look at, where's my marking tool? That's the high of the previous day. This is the low. You create a lower high in relation to the previous high. You create a low over here. You make a lower low in relation to the previous low, and so on and so forth. Over here, we did not create a new low, but this high over here was indeed a lower one in relation to this one. So you can almost consider that a downward trend. This being a much sharper downward trend, which was broken, but no follow through from here. Anyway, so thought, okay, we can potentially come and fill this gap. I entered a trade just before the halfway between the London Open and the Tokyo close. It looked good to me. We filled the gap. We started pushing back, and I thought, oh, maybe I made a mistake. And then we printed this very lovely, let me just move this out of the way. We printed this very lovely rejection candle over here on the 50 EMA, which kind of aligned with this downward trend that we had coming out of Tokyo. So if I just draw this, something like that, it did seem like, okay, there is a potential for us to try and push a little bit lower. I had my 1-to-1 marked out. And yeah, that's exactly how it happened. It looked good. It was about halfway into take profit, went about halfway into drawdown, kind of struggled a little bit, and then this opening candle from London, I thought, okay, there's a potential that this might want to reject from here because we're struggling to go down. Walked away, came back. When I came back, this was where it was basically, it wasn't completely, the candle wasn't closed yet, but it was almost down here, and I thought, okay, this is definitely going to be a winner, so I just left it. And if you look towards the left, we reacted exactly upon a previous base area. So the last candle before price pushed up volumetrically, and we already had a singular reaction here yesterday. So where we are now, we literally bounced off of it. Just smack bang, bounced off of that area. So NAS at the moment was looking a little bit bearish on the lower time frame. Higher time frame, we are not looking great, even though we are coming closer to this 50 EMA, and we've already closed below it once. I want to see whether or not the secondary reaction is going to push price higher, or whether or not we're going to start pushing lower. If we do start pushing lower on NASDAQ, we do have one area over here to potentially come and test, which is the last candle before we had this very nice bullish rally. And then over here, way lower, around about 24,760 to 24,600, we have another candle as well. I should maybe do that. Yeah, there we go. Another candle to potentially come and test should it continue bearishly. If it doesn't continue bearishly, we do have some price action that we need to break above first. First and foremost, this upper section over here, 25,290 to 25,377. And then once that is broken through, we can try and look for a little bit more price action. There seems to be a very nice area over here, where we've had some reactions, as well as a base that pushed price lower. If this area gets pushed through, that's 25.56 to 25.65. Then obviously we have this very last attempt all the way up over here at 25.81 to 25.89. If first and foremost this one gets disrespected, then this one, and then we can aim for this one. So that is the two directions and the two aim points I think we can have just purely on the hourly. So yeah, that's me.
Nice. Yeah, really nice, man. That was an awesome sell that you caught there as well. I'm a bit bored with the price action. I think GU looks nice, but I'm trying to decide, like, have I missed the entry already? I think I've missed the initial entry that I like, the break and close entry. I just bring my screen up real quick. I was just making sure that I had it. Like I said, I've been having some tech issues with my Chrome, but I'm all good. So I just wanted to make sure that I did have it shared. So you guys can see my trading view okay. I think I've already missed this initial entry. Now, GU is actually looking a little bit like EU yesterday was. We're not having the price action on EU, however, so there's not really a correlation. However, I mean, it's London Open. We're within the first hour of London Open, which is really nice. So could be a potential chance for a consolidation breakout. Ideally, some bull momentum would be pretty cool right about now. If we can move into some form of direction like this, that would be awesome. If we can find some more buys on the euro and bank another $200-300, that would be sweet. NAS, I'm not looking at. I know you took a really cool NASDAQ trade this morning, but I'm not interested in NASDAQ. And S&P could be seen an opportunity for some buys on the S&P. I think really close to buying on the S&P, really close. So it's just a matter of I'm going to keep analyzing that just a little bit and to see if we can find a buy opportunity. There seems to be a nice buying opportunity on the NAS on the 4-hour setting up, and potentially if we can see some form of structure shift like this.
On the 4-hourly.
Yeah, on the 4-hourly. If we can see a shift of this high, break and close above the high, then cross over the EMA or the moving average, the SMA, and start showing some more momentum and some higher momentum to the upside, a little bit like US 30 is showing over here, we would have finally hit TP on on US 30 for those who were watching it. I didn't place this trade. I was watching it only. Euro JPY, we wouldn't have hit TP. We would have actually hit stop loss. So thank God we did close there, because had we have carried on holding up to this point here, it probably would have been a case of continuation holding. However, you guys know that I do not have a full stop on this. I trail with the moving average, so I would have been taken out about break even. So that was maybe a little bit below break even, so probably about here. So that would have been unfortunate, but thankfully I closed a little bit early, so that was quite nice. Gold is doing, so back onto my intraday now. Gold is doing nothing for me on the 15-minute other than consolidating. It is in an uptrend consolidation, but it's just very sort of stagnant. It's very sort of, I'm not really that keen. Although it's nice to see us flattening out. Now, no one likes to see flat price action because it's just a bit crappy and it's hard to trade. However, it is nice to see price flattening out. More of my Chinese CFD market notifications that I can't understand. And then Euro USD, again, would be super cool if we can break above the, what level is this? 1.19258 high. That would be really cool. However, GU, I think we've already missed the move. I would love to have been buying around about 1.36794, which would look something a little bit like this. Now, this would have been my ideal entry point, but I don't think we're going to get it now. Let's get a 1 to 2 going. There we go. So I don't think we're going to get it now, unfortunately. So I think we're just going to have to wait, see if we get a pullback. If we get a pullback, I will look and consider into entering on GU. However, for me, I'm just flat in the market now. Hence why I got TradingView up, not MetaTrader. I'm not going to bring my MetaTrader up until I have found something I like on TradingView. Once I find something I like on TradingView, then I'm going to fire up the old MT terminal, wake that dinosaur up, and then potentially look at entering into a trade.
Wake up the dinosaur. I like that. For news today, we do have the average hourly earnings on the USD. This will be at 1:30 GMT, followed by non-farm employment change, so NFP, like same slot, 13:30. Let me just zoom in for you guys. So this is GMT plus 2. So this GMT would be 1:30 in the afternoon. Hourly average earnings, non-farm employment change, and the unemployment rate. So these two over here are big movers. They are going to definitely cause quite a bit of stir in the market. So I would honestly, for anybody who wants to trade around about this time frame, do be careful. This can be some unexpected expected volatility. It's not unexpected, it's very expected. So do be careful with that. We also had the JPY bank holiday today, which kind of may make sense as to why, for argument's sake, let's just look at the hourly on on gold. You can see that this whole section here, this pink box, is Tokyo. It's a little bit flat, as well as we had that flatness yesterday as well, which was then preceded by flatness across London and New York. So this flatness that we have here is not the same as this flatness over here. The reason why I'm saying that is when we had this consolidation or a little bit of like uninspired market movements, so sideways action on the Tokyo session or during the Tokyo session, we had full market participation here. Here we did not. So this flatness that we have here is the whole of the Japanese market that is basically offline. So you have all of the other participants, but you're missing a key portion of your volatility and your volume during that session. So it's not an indicator that we're necessarily going to have flat price action going into the rest of the day, but just take that into consideration. Oopsie. So just remember that bank holiday on JPY. So it seems as though stuff like AUD wasn't impacted, US JPY wasn't all that impacted at all. But then again, I think when it comes to Japan as well, the yen pairs has a very large retail basis. So the yen pairs have the retail traders in Japan make up a very large portion of the trading volume out of Japan. So I remember, I think it was LJ that mentioned that. I can ask him a little bit later just to confirm. So yeah, so we're seeing some assets are a little bit flat during the Asia session, whereas some of the assets is showing quite a bit of volatility, or at least some volumetric movements. Oh, we've got Neko in saying, Richard the Goat, good morning.
Richard of the Goat.
The Goat, one of the goats. Or you can just once again, Richard a Goat.
The big goat.
Carmine saying, look at gold daily chart, it's Matroiska. What is Matroiska?
So Matroiska is basically, I have no idea, mate.
Dude, what is Matroiska? I'm interested now. What is Matroiska? But yeah, gold on the daily does look a little bit flat from yesterday.
That is definitely Matroiska.
Yeah. We still have this lower high point over here that still needs to be broken and closed above, which was also it's also in line with this base area. If I go down to, I think it was on the hourly, you might see the base. Yeah. So it's basically this whole last candle where we react second time, third time. So we are there right now already. I have a hair in my eye, and every time I put my glasses on, I think it just...
Oh, dude, I had that yesterday, man. It's so annoying. I hate it. I thought like maybe it was on my eyelid or like my eyebrow, I couldn't tell what it was, my eyelash, but it turns out it was actually on my glasses.
I was brushing one of my cats this morning, and I think maybe one of her hairs just kind of like wafted into my eye. Anyway,
so I've just googled here. A Matroiska doll is a traditional Russian nesting doll featuring handcrafted wooden figures. So it's a Russian nesting doll. I don't understand how gold is a Russian nesting doll.
So wait, are we referring to those Russian dolls that sit within Russian dolls
Yeah,
within
yeah,
the?
yeah, yeah, yeah. So like they go like in, ow, 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 and get bigger and bigger.
Okay, so
Yeah, yeah. Matryoshka doll, in a doll, in a doll, in a doll, and doll, and doll. Yeah, so a Russian nesting
awesome,
doll.
awesome. Thank you for teaching me something I didn't know.
You're welcome. I taught myself something that I knew. I just didn't know they were called matryoshkas. I thought they were just Russian nesting dolls.
Well,
I
you learn
further
something new every
deepened
day.
my knowledge on what they truly are. There we go.
Yeah, you learn something new every day. We've got Unbiased Trader in this morning. Good morning, Unbiased Trader. We've got Grip and Health. Where are you? I'm here.
I'm here, bro.
I'm here. I'm in South Africa, and William is in Hong Kong, and Michael in Sweden. Hello, Michael. Welcome.
Ja, hier in Sweden.
We've got Oye, miss you. Any giveaway here? Not today. However, next week, Tuesday, we do have
Yes.
a massive 10-year anniversary for the Fivers, where we have massive giveaways, $2 million worth of giveaways, as well as some awards that we're going to be giving out to some of the community members for different things that they have done. To give you an example, the community champion, the person that's always there in the Discord, just being the absolute legend and helping and assisting and always being ready to give a helping hand. Someone like that is going to receive an award, the most highest, well, not the most highest, the highest or the most consistent account, as an example. So whomever has had their account for the longest without,
Sick.
losing the account. Most profitable, the most consistent. There's a bunch of awards. So please do join us. There's a link in the description box below. You can go and basically RSVP and just add it to your calendar. And then on the day, there will be a giveaway registration link that you can join, and then you can be a part of the giveaway. Massive giveaways, genuinely massive giveaways. And then on top of
Yeah.
that, we are going to most definitely release something for the community that everybody may have asked for a while. Some of you may have already received emails saying that there's I don't know, maybe like 1,000 of you or so that is going to get a first dibs opportunity to test out this new platform that we have. But all of that is going to be released on Tuesday. So, yeah, please join us there. Hi. Good morning. That's usually how we start, Oi Miss You. You start by saying hello, and then you ask for giveaways. We've got
Yeah,
saying
be polite. If you're going to
we've
put
got
your hand on my butt, buy me dinner first.
we've got not even saying hello. He's just saying the target's given on the 9th based on the astrological cycle. USD CHF buy target at 0.7745 and Euro USD sell target at 18322 have not been hit yet. This does not mean they are incorrect. They will hit 100%. Astronomy is based on precise cycles. Precise cycles, remember that. And accurate planetary angles, which means the outcome is certain here. But a reminder that it has not been hit yet on these precise cycles. Anyway,
It's like listening to Stephen Hawkins if he was a trader.
yeah. Henry saying, Rich, USD CAD drop base drop. USD CAD is over there on the 15-minute time frame. Let's go to the 15. So you have
Dude, that's quite nice as well.
this downward trajectory. We had an attempt to try and flatten out, followed by an attempt to try and push higher. Okay, let me... Re-establishment of a downward trend, an attempt at breaking that new downward trend, follow up by a downward. So it is indeed a drop, a base, and then a drop. Yeah, so this candle over here would be considered the base, and then the follow-up candle, I'm drawing way too much. But yeah, this would be considered a drop base drop.
Would you take that as a valid drop base drop, or would you want that base to be a little lower?
So long as this base does not penetrate above the most recent attempt at a new
Okay,
drop.
that's really interesting. Okay, interesting. Because to me, that's a micro higher high. Like if you look, like that's on the 5 minute, that's actually broken the previous high. Microstructure, of course.
Here, yeah.
Yeah, exactly. So technically, that could be classed as a pullback. So to me, like yes, it's a beautiful drop base drop to perfection, but I think I would have preferred the base. I think I would have preferred the drop, break and close to a lower low, then have a base, then the further drop. That
Yeah.
to me would have been an executable order.
Yeah, fair enough. But something to also consider that even on the 5 minute, if this was the most recent high, which was broken, that was a new higher high. It was immediately followed up by a lower high. And then if
Fair,
this
true
was
that.
the
Yeah,
low,
true that.
it was immediately followed up by a lower low. So even on the 5 minute, you have this slight little, so up, attempt to go down, attempt to go down. You have this action. My drawing is horrible, but you kind of like get the point.
Yeah, fair. Okay,
So
that's
on the
understandable.
15 minute, I can see this. The only issue that I have with this specific drop is the fact that you have this double low. So now that it's pushing through this area, if this candle over here on the 15 minute presents itself as a bullish candle, and then there's a follow-up bearish candle that then starts printing, it doesn't matter how large this base candle is, so long as it does not, where is that tool? So long as it does not pierce above the most recent swing. So there's two swing points. There's one, and then there's one again, because you have the reinitiation of a new downward trend after an attempt to push up. You have the follow through to try and push up higher, but it fails, and then you reinitiate a new low, breaking an established area. So I would want to see whether or not this bullish candle over here closes, let's say somewhere up over here as an example, and then have a follow-up bearish candle, and then that would be then the continuation of, for argument's sake. Okay, I don't have a strategy specifically for USD CAD, so maybe something like that. But then I'd have to go and check to see if there was any price action towards the left that I could potentially test for. Okay, so we're already pretty low in USD CAD. So the last attempt to push price lower, break, retest. So if we were to come and test, this would potentially be the area to test. We're getting close though. We really are getting close. So if this candle on the 5 minute, 15 minute presents as a bullish candle, and then it's followed up by a bearish candle pushing lower, then there is a potential to get in trying to aim for this low area down here, and then your stop loss you can then decide 1 to 1, 0.5, 1 to 1, however. But right now this looks good, but this is the problem. You do have a double low down here. So Will, you're technically correct. I would have loved if this whole segment here was lower. So if you can
Yeah,
imagine,
yeah, that would have looked really nice.
so if this was maybe something like that, just a little
Yeah,
bit.
yeah. Now that would have been executionable. Ooh.
Yeah, drop your nice
Okay.
things. We'll drop the nice things you own. Drop them.
Just drop my bottle on my computer and just everything shifted. I was like, oh no, what have I done? It's
Oops.
okay.
So
I've saved
so
it.
yeah,
It's all
uh, Henry, this is what I would have preferred. Because the first and foremost thing about a drop based drop is it's either a re-establishment of an existing trend after a reaction off of an established area. So an established area, in this case, we've got a double low here and here. It would have been great if we struggled with the double low, then pushed through like it's doing now, and then make a base and then start pushing lower. I mean, even on the 5 minute, this is a little bit, this doesn't look great because it's not the same. It's very much the same as this. So there's a potential for you to go a little bit higher before you potentially start dropping down. So these kind of like slowdowns here don't look great, especially if you're considering it as a base. It's much better to have a base that's more like this, as an example, where there is an attempt to push up, not this indecision. So where these candles over here, they look indecisive, whereas this one looks like, oh, we want to push up and then we just fail. So I don't know if this is making sense, but just when comparing these two kinds of base areas, I would rather prefer this one as an example.
Yeah, that makes sense. Yeah, that makes complete sense. We're getting a bit of a pullback now on GU, which is quite nice.
GU, let's have a look.
Yeah.
Yeah, this is
Yeah, it's quite nice to see the pullback on GU. Euro trying to break above the current supply area. Yes, it's trying. It's not doing well at it, but it's trying.
Yeah. This was the last. Yes. See, this is the same issue. This is the same issue that we've had with GU as well. If you just look at GU's top section as well, we've got consolidation, breakout of consolidation, retest, break lower, retest, even break even lower, and now we're back to it again. But this is a much longer upward trend. But if you look at Euro, it's kind of like the same thing. If I just go back a little bit, you'll see establishment, break, retest, breakaway, the tiniest retests, new low, a much deeper retest, new low. We came back to it again this morning, retest, and it seems as though it wants to start pushing a little bit more volumetrically lower. It does feel like that. The question is it going to continue pushing lower, or is this just that fake out, pick up a little bit of orders that are sitting over here and then start pushing higher? What do you think?
Dude, I don't know what to say about it at the moment. I'd like to see it, like, we've swept that low now. I'd like to see it maybe, I don't know, maybe consolidate there a little bit. There's a lot of momentum into that downwards push. That's the only thing that's worrying me a little bit. Like, I know it's not a huge move as it is the 5 minute. However, there's a lot of momentum in those two candles compared to the last probably 5 to 10 candles. So maybe if we can, sweep the lows, consolidate a little bit, and then start moving a bit higher, and then break and close above the high that we have now, then I think we'll start seeing some bullish movement. But if not, we're going to close below the low that we are at now, and then what you've just drawn out could be a very possible outcome. Yeah.
So you can almost look at this base already as being tested. So you have this upward push, this first leg. So this is the very first rally. You have the base, and then you have the re-establishment of a new rally, which creates a new high. Breaks above this base, comes back to test it, slows down, and then pushes up higher. So this base right here, to me, is a strong enough base to potentially react off of or to push through again, because it's already been tested once. So you basically have this low over here, which is the midpoint of this initial base on the left-hand side, that needs to be broken through in order for this, let's say, high that's up over here and this potential lower high here to potentially start changing its direction and start pushing bearishly. So high up here, low down here, lower high, and then you just need that lower low. So to push a little bit lower, something like this, and then eventually carry on breaking lower and lower. Something to do to this effect.
I could see that. I could see that happening. I don't know. I mean, time is a big tell sign on what's going to happen.
Yeah.
But we'll see. We'll see. If it breaks and closes above the 19203 level, then I think none of what you've just marked out is going to happen. However, if we break and close below the 19106 level, then I think what you've just exactly what you've marked out is going to happen.
On EU.
Yeah.
Yeah, potential. So let's just refine these little areas a little bit more on the 5-minute. So the very last candle and the lowest point before it started pushing lower. Missed one. This one. Well, this one overlaps, so we'll take the overlap rather than that one. So these are potential areas to come and test should price start breaking lower and not break higher. Pradita saying, took a trade today for the first time on AUD JPY, shorted from 109.26. 109.26. So let me just, sorry, AUD. I don't know why. None of my stuff is in alphabetical order anymore. 109.26. So all the way up over here. All right. Wow. If you shorted from there, that's a great trade. Target was 109.02. So 109.02 was right there. Oh, the lows. Yeah, that makes sense. That makes sense. Myself, personally, once again, because I do drop-based drops and rally-based rallies, this drop that we have here is such a nice drop, followed up by the tiniest of bases and then a continuation on the drop. My trade would probably have been there. Stop loss would have been a back-tested stop loss, but let's say hypothetically just above the recent swing and then a 1 to 2 or a 1 to 1.5. So 1 to 1.5 would have been somewhere over there, and then a 1 to 2 would have been somewhere over there. Now, personally, I would have, if I was trading this, I would probably have waited for this low over here from yesterday's low to get broken and then closed below and then continue lower. So instead of myself taking this trade over here, I would have waited for this to happen first and then probably taken the trade from there. So I would have probably taken the trade from there with a, I don't know, like something like this 1 to 1.5 or a 1 to 1 to 2 in general. That's more towards how I trade. But your trade looks really good. Tell us why you decided to take that. Is it based on the fact that we had this low break over here after a high and then a lower high, basically? No swing point though. So if this here is the high and this here was the low, this would then be a lower high. But no, maybe the closure of this candle over here would be the lower low. However, there was no swing. I don't know. Obviously, I don't know where your stop loss was. I'm going to assume it was a 1 to 1, which makes sense. But anyway, good trade. But just kind of like tell us why. Because in general, when you have like these lower highs and then lower lows that gets taken, you kind of like wait for a swing. And then based on that swing, or at least an attempt to try and push higher and then lower. But yeah, very, very nice volumetric push down lower and a very good trade. Congratulations.
Yeah, well done. That's awesome. Dude, I'm waiting for GU. I want to see what GU is going to do. It's pulled back, but now it seems to be heading up again. Doesn't seem to want to pull back as far as I thought it was going to. I don't think I'm going to catch a trade in this session. And then thing is, though, next session sort of overlaps with high impact news coming out at 1:30 GMT.
Mm-hmm. I'm on saying Gold view, please. Gold, yeah, gold is a little bit sideways at the moment.
Gold's the same as EU at the moment.
We do have this slight upward trending portion from yesterday's lows. So lower high, a higher low, higher high, another higher high, another higher low, and so on and so forth. But it's very slow. It doesn't look. If you look back to what was this, Monday? If you look at Monday's price action looked very purposeful. I think that's the right. Like, you have an area over here that was created, a singular reaction off of it, pushed off of it, secondary reaction, nice rally, an attempt to push lower, followed by another rally, another base, another rally. Very, very, very specific, very well thought out, very well executed upward trend. If you look at today, what portion about this looks like it wants to carry on going up? There's a lot of wicks. When it does push up higher, it immediately comes back and takes it. So you do have an upward trend. It is incredibly slow though. Very slow. So to me, it does not look as appetizing to be going and buying gold right now. I would want to see clear, momentous breaks, clear, momentous movements. None of this opening up, small candle, large wick. And this is on the 15. On the 5, it looks even worse. This does not look appetizing whatsoever.
No, it doesn't. If we can push up from here, though, I think it'd be nice to see some buys.
Yeah, but what is it based on? Like, where are we testing? What are we testing? If it pushes up right now, you're just pushing up.
For the sake of pushing up from a potential breakout of a consolidation. Yeah, that's the only thing I can think of. We've not got sweeps of liquidity. We've not got tests of order blocks. We've not got fills of imbalances. We've not got any relevant pullbacks to balance price out whatsoever. It would just solely be the basic supply and demand of buying of gold.
Yeah, so I would have loved it to push a little bit lower, to drop to, let's say, 5,015 to 4,982-ish, and then react off of it to try and push higher. The only problem is we're so consolidative over the last few days that it needs a breakout. So first and foremost, we do need to break above. Let me just go over to the 4-hourly so I can drag this line back. There we go. We need to break above this previous high swing over here, which we came to test once on Monday. Yesterday, we failed to even come close to it, and now we're printing yet again another lower high. But the point still stands. This high over here, 5,091. We need to break and close above this point. Like, really break, close, and then continue higher. This kind of like price action that we have here is too subdued, too slowed. Considering how volumetric gold has been over the while, whether it's volumetrically pushing lower, volumetrically pushing higher, this kind of price action over here does not inspire confidence. Pondara is asking how to join your community. It's very simple. What you need to do is you go to thefivers.com, you create yourself an account, you go into the hub. The hub is basically where you can go and buy evaluations. You can see all of the data of your evaluation accounts, when you've passed them, all of that kind of like stuff. It's that central hub for all of your information pertaining you. You go there, you get yourself an evaluation account, purchase one. You can purchase any one of the several ones that we do have. And then the moment you have confirmation that you've purchased your account, you have a little button, the top left, Discord, where you can click and it will take you to Discord, and you can join our Discord community. A lovely community. We have over 30,000 members. We have close to, I think, 5,000 or 6,000 active members every single day. We have live events every single day, live webinars. We have everything ranging from people talking about indicators, people creating and sharing ideas around EAs. We have an absolutely amazing community there. So get yourself an account and then you will gain access to that community. Champion mate. Stock DGen, can you do a quick analysis on a daily chart frame on gold? And what are your thoughts? So like I just explained now on the hourly, you will see it basically on the daily as well. On the daily, my apologies. The daily is still based on the same idea. So if I just move all of these areas a little bit back, and then I'm going to just remove just that one so you can maybe see the chart a little bit clearer. On the daily, we've had all-time highs at 5,600. From there, we've had 1, 2, 3 absolutely tanking days where we've sold off a lot volumetrically. So if you consider from all-time highs, we dropped from 5,000 all the way 5,600 to 1,400. It was almost $1,200 drop. Now, that is almost 20% drop. So 5,800, if you dropped 1,200, that's 20% drop. So we had, give or take, an 18 to 19% drop, which is one of the largest drops we've had in a long time. So just consider that. Okay, so we had an 18% drop, give or take, on the daily. So we've come back into the previous area where we had a nice volumetric drop. We came back into it, we wicked onto it, and it seems as though we've tried to push higher. When we had an opportunity to try and push lower yet again, it was short-lived, and it seems as though we were trying to push higher yet again. Now, here's the problem that we have. We have a lower high swing based on this high, and we have a higher low swing based on this low down here. So what we need to have is we need to have either a volumetric break above this recent low swing with a retest and then a continuation, or what we need to have is a breakdown to come and either retest this recent low point, bounce off of it, and then reestablish a new upward trend, or we need to come down, test this low, try and push higher, fail, and then try and push lower to come and test the lows down here. So those are the three things that I would say we would kind of need to see to actually really get like volumetric movement. The problem with this is that we can literally just be stuck here for quite a bit of time before we actually really start gaining momentum again. So on the daily, I would say that we're kind of like stuck in limbo at the moment. So over the last few days, this last week or so, we have really not been moving all that much. This is, I think, $120 per fine ounce move over the whole, yeah, it's 121 over the last 3 days where we're just kind of like stuck. So we need a breakout, and we need a breakout volumetrically strong, retest continuation. And it doesn't matter which direction that is.
Yes. I'm first. Awesome stuff, man. Well, welcome to the Fivers. That's super awesome, man. Welcome from India, or welcome from Hong Kong to India. Let's get that one right. I'm not in India right now. I'm in Hong Kong. But no, welcome, man. Make sure you subscribe to the channel as you are new here. This is the only place you're going to need to be for absolute positivity in trading. Not only do we chat absolute garbage, like point in hand, just proven, we do have a lot of laughs, but it is also super high value here. So we got super amounts of value. Maybe not coming from me so much at the moment. not today anyway, apparently.
Dude, don't worry. It's got you, mate. The accuracy of that miss is impeccable.
Oh, man. Yeah, literally. Thank you, MJ.
That's really good. Martin saying, Rich, your TP was my entry on NQ. I just got TP'd on it. Oh, dude, that's awesome, mate.
Beautiful. Yeah,
So I'm assuming you took a buy? And so if my TP was down here, yours would probably have been something like that, and probably a 1-to-1. I'm going to assume. I don't know, something.
Maybe a little bit more. I'm gonna guess that he was targeting a little bit higher. Maybe.
Maybe, but I know Martin
Yeah.
likes posting his in the Discord, so I will go and have a look at Martin's
Yes. True. Yeah, I'll have to take
Martin's
a look at
NQ trade. My NQ buddy, Martin.
that. Friends, thank you, friends.
Friends. Rich, is that a 50 EMA you're using the green one? Yes. I just use a 50 EMA. I used to have the 100 as well as the 200 on, but visually I just don't use them all that much. The only reason why I'm using the 50 is because to me I'm a lower time frame trader. I want to be in trades a lot quicker and then get out of them within an hour to 2 hours. The 50 EMA to me is just a lower time frame, faster visual representation of where price has been most recently. I don't really care all that much about the previous day or the day before's price action. I'm very caught up with today's price action in relation to yesterday's price action. So if yesterday had areas that were created that we reacted off of, that's what I concern myself with. The 50 EMA just gives me a very, very visually quick representation of what happened yesterday and maybe the day before. So as a 5-minute or 15-minute entry point, 50 candles to me is good enough. So much drawing on the chart, mate. Yeah, I do tend to go crazy, but what I do is I will, after I've taken a trade or something, I remove all of the drawings and then I redraw everything that is prevalent to this specific time frame. So right now, all of this information up here at the top to me is not important anymore. It is the most recent swing point as well as the most recent low swing point as well. So I will redraw and then start continuing my new analysis. So I don't want to be caught up on something that happened here as an example. Let's say there was a, am I misclicking? There we go. Something that happened here and then something there and then something here again. It just, it fills up the chart way too much. So I remove and redraw as I've taken trades.
Dude, I love drawing on the charts as well, though. You know, you gotta draw. It's like your doodle spot. You know, it's so you got two types of people in the world. You know, you got the very simplistic people who draw what they need to draw, and then you got the other side, the other people who just draw everything, and then they just draw absolutely. They put their mind onto paper. I was one of those in school. You know, I was one of those. When I was making notes, they wouldn't be like really neat bullet pointed notes. There'd be notes all over the page, like just all over the place. It shows in my trading as well. Like I'll just bring my chart up real quick. When I'm drawing on the chart, I will literally get my highlighter and I'll just like go like that, and then I'll go like this, and then I'll get this one out, and then I'll mark like an area there, and then I'll just do like a little question mark, and then it's just I'll place something here, and then I'll put text on. I'll be like, could we see this? You know, and then I'll just delete everything, and then I'll literally go, okay, cool. Now that I like that, I'm just gonna get rid of absolutely everything, and then wait and see what happens. And then you get the other people that's super neat, and they'll just draw like, just look at that, and they'll draw a box, wait for it to happen, and then go, okay, cool. Now that it's happened, there's my entry criteria. Off I go. Whereas I'm a very messy person when it comes to drawing on my charts. Also, GU, in fact, case in point, GU, we had this high here. I wanted to see a pullback down to this area and then come back up, but we didn't get it. So invalidation trade for me on GU, unfortunately.
I'm just reading through comments at chat at the moment. There is some interesting back and forth between Machine of Wall Street and Barry.
I did see.
Yeah, I'm not going to bring it up, but you guys are welcome to go and
No.
read.
Yeah. No.
So,
I stayed clear.
Machine of Wall Street, I'm just going to say this. Please refrain from spamming information. If you've already said it once, you don't have to say it several more times. Please, let's try and keep the chat clean. I'm not going to ask you again, so please keep
What? You know what that means.
yeah, prevent yourself from spamming information. It's not how we like to have our chat.
Mm-hmm.
We don't mind the banter, we don't mind people chatting, but don't spam.
You heard it here first, people.
Just
It is
going to
annoying though. Yeah, it is annoying. Like, guys, please don't spam.
got Akram saying good morning.
Yeah,
Good
it's good, Akram. Good morning, sir.
while, mate.
Yeah, I haven't seen Akram in a bit.
Yeah.
Akram, it's good to see you, bro.
We've got Ayan saying, hi guys, good morning, Ayan. How are you, my friend? We've got Jeran saying, hello guys, just finished the first phase of a 5K USD account. Congratulations. We're very happy to hear that you've passed your first phase. Now, you need to replicate what you've done in the first phase in the second phase. And then you're all gravy, baby. And it's all good.
Yeah. Now that you congratulate yourself, but go back to thinking that you've not passed it. Like, just go back to thinking that you're back at stage 1 again. Don't let yourself get euphoric that you passed phase 2. Like, a lot of people will do that. They'll pass phase 2 and then get nervous that they're in phase 2. Oh, sorry, they'll pass phase 1, get nervous that they're in phase 2. Just pretend it's phase 1 all over again. Just pretend you're back to square 1.
Sadar is saying, AUD JPY buy. Based on this downward trajectory that we've had, and we have a little bit of consolidation over here where we've reacted upon, we have a double low over here, which we've broken through, came into this area over here, and then it seems as though we've had a slowdown with the potential to buy up. However, if we look at the 50, the 100, and the 200 EMA, we are well in a downward trend, just so I can visually show to you that we are definitely in a downward trend on the EMAs. This area where we are right now, we're slowing ever so slightly, so there is a potential that we are going to use it as a retest. So here where we are right now, this low of yesterday, as well as this low section during the Tokyo session, this could potentially be a retest to try and push lower. We do have the lows down here, which we can potentially come and test if we start pushing lower again. Like I said, just take into consideration, we have these areas of consolidation where we've started to push lower from, consolidate, push lower, consolidate, push lower, that kind of like thing. I don't know if I would buy exactly where we are right now. Personally. I would first wait for the reaction here to show me that we're pushing lower.
We got a nice sort of break of the consolidation. I don't like it. Yes, we got consolidation on the 15, which is nice. Yes, we got a break and close above it, which is also quite nice. But I'm not hugely keen on it.
To me, it's always important that we have to create a new structure. I think that you don't just buy mid structure hoping that it's going to go up. In this case, so we are clearly. But that's our
strategy, If your strategy says to do that and you've got data backing it, don't let us change that thought process.
Yeah. Like we're just giving you our opinions, and my opinion is I won't buy from here because I need to have that confirmation of the re-establishment of a new trend. So
in this case, we like a little bit more confirmation.
Yeah. But if it's according to your strategy, you go ahead, mate.
Yeah, 100%.
Do
Oh,
I
Isaac,
offer,
you're literally bringing that
do
up.
I offer private lessons? No, I do not. The only thing that I do is you will see me here Mondays through to Thursdays on the Fiverr's channel, where everything that I know I'm safe for free. I don't offer private lessons or whatnot. However, if you do want me to explain a little bit more in detail what it is that I look for, I'm happy to do that, but here, live on the Fiverr's. You won't ever catch me create a course or do private lessons. No.
I like this. I agree with Will. I put my mind on the chart, forget what others think. Absolutely.
Yeah.
Don't be afraid
That's how it should be.
to express yourself in the charts because
Mm.
the charts are literally your mind bubble of or your interpretation of price. So this is your way of looking at and understanding and comprehending price and what it is doing. So
Yeah.
don't think that you've got to have a black background with white and blue candles, or I don't know, green and red candles with a white background. Don't think that you've got to be generic. If you want a bubblegum pink background with a lime green and I don't know, ocean blue candles, so be it. That's absolutely fine. You do what works for your eye and what works for your mind. And if you, woof, woof, that is bright.
That is, I think this is bubblegum pink.
That's actually quite nice. That looks like a salmon thing. That actually looks, that's quite nice, actually.
Anyway,
Yeah, moving on. But yeah, point being, like, don't be afraid to really express your mind in the markets because that's how you're going to interpret price. No one's going to give you the money, so you're going to earn the money. You're going to take the money out of the market. So if you want to draw all sorts of garbage and squiggles and doodles on the chart, then go ahead and do it because forget what others think because are they even profitable? If they're going to judge you, there's a good chance that they're not profitable. And same goes with you guys in chat. We can tell who's profitable and who's not. Usually, the ones that come in and absolutely slam, myself and the other hosts, guys, look, you're kind of exposing that you're actually not a profitable trader, because most profitable traders that come through the Fivers in chat, they usually see what we're doing here and they share nothing but positive energy because they realize that in this space it's so hard to become a profitable trader that when you find what works for you, it could be super like niche and unique to you and completely against the trend or against the flow of what other people do.
yeah,
So
I
just bear
mean,
that in mind when you do decide
yeah,
to troll. We can
I
tell.
mean, if you're gonna be a troll, it's fine. We can reflect that energy. It's not a problem. Um,
Oh yeah, yeah. We're also human beings, and we've also grown up with a childhood, and we've also grown up with siblings, and we can also troll.
yeah,
We're also human beings, and don't think that we're not afraid to troll back. We
yeah,
just tend not
fair.
to because we've we don't need to.
Dude, we're professional,
Uh,
mate. Come on, if I
yeah,
had a bow tie or a tie, I would be doing this right now. We're professional.
yeah. Clearly, we're so professional. We show up in vests.
We've got LJ. Good morning, stream. Good morning, LJ.
Yo, what's good?
Let's hope that you're dressed for success today, my friend. Yeah. Polly saying, Rich, do you trade using support and resistance, your strategy? So generally, I don't trade off of the support. So if I deemed this to be a support area based on the bases, and we have a reaction like we have here, I'm not going to put my stop of my my entry point there and then aim for a top point, and then I'm not going to do this. What I do use the supports and resistance for is to see how price reacts when it gets to that point. I trade trends. I want to participate while there's a trend currently in progress. So I do trade reversal trends as well. So where price starts to show that, for argument's sake, yesterday, I'll just give this to you as an example. If we just look at this Tokyo session and then this London session, what I do is I look for an area, what I call established areas. So this established area can be a low of a previous session. It can be a base. It can be a reversal point, like up over here as an example. I look for the reaction on that one. So there is the low of the Tokyo session after an attempt to push price lower. What we have is we have a low. So you can consider this to be a support zone. Like the terminology that you use for it really doesn't matter. But what it is this is a low. So we have the low. We have a recent high swing, the most recent high swing. So from where you're drawing your low, immediately left, this is the high. Now, once again, this is within a downward structure. So this that we had over here was the downward structure. Now, at some point, we fail to push price lower in the structure. So what happens is we start breaking above it. In this case, there's a high, there's a low. We've printed a new high and a new low, another high, and another low. And all of these are now contrarian to this most recent downward structure that we had. So effectively, round about this area over here, we're starting to get a reversal of sorts. So what I'm looking for these specific ones is I want to see at what point price fails to present a new low, because we are in a downtrend. So what happened is this was the low. We failed a new low over here while simultaneously breaking the most recent high point. So what am I looking for? Now I'm saying, okay, there's a potential that we are going to establish a new bullish trend. And then I will look for entry points for that new bullish trend, which is exactly where I entered here yesterday with a little bit of a gap. I got a little bit late. And then I will trade my strategy, which is a 1-to-1 during the London session. And then that is what I would be looking for. So you can consider this a area of support. The only criteria that I deem to be important for support is to see that it's had multiple reactions off of that area, either bullishly pushing off of it or breaking through it, coming back to it, reacting off of it and pushing lower. So to me, this would be considered an area of support because we've already had a singular, my apologies, we've already had, get out of the way, we've already had a singular reaction off of it, and when price eventually came back to it over here, we had a secondary reaction as well, and then price tried to push up. Now, obviously, the New York session has its own rules as to how it's going to move, but in general, if I'm going to be trading one section, like for argument's sake, the London session, I generally look at the Tokyo session's areas as supports and as resistances. So I hope that helps kind of like answer that question, because to me, support and resistance is just a confluence area, not the actual strategy itself. Remy reminded us 97,846 subscribers. So we're tantalizingly close to 98,000, which means that we are getting closer and closer to that 100,000 mark. And the 100,000 mark is going to bring along with it more giveaways, more events, more prizes. So please, if you guys would be so kind.
Subscribe.
Yeah. Sub, like, share, bring more people in. We would just be eternally grateful. Akram,
100%.
evening to Lockie. Lockie saying to Machine of Wall Street, love your cosmic input. Pooley saying, ban him, boss man. Who? Who must I ban? I can't ban anybody.
I think it's something about the Jordan Belfort. The Machine of Wall Street.
Stock DJN saying 2374 on MAG is a nice pivot point. I would like to take from the long of a ES, otherwise, so established zone, I'm assuming. Otherwise, if we break it, it's going to be a nice long short for me. Okay, so a long-term short. 2374 on MAG. What is MAG?
Never heard of it.
Stock DJing, is it a stock? Are you talking about a stock price? I don't know what MAG is. What is MAG? One
I
physicist to another. LJ, I can guarantee you that neither one of you two are physicists.
Woof.
Yeah, you actually need to complete your studies, mate, and have that certificate to be considered a physicist.
Ouch. Ouch. LJ, bro, I wouldn't, I mean, look, I wouldn't take that if I was you.
Yeah.
One, the physicist comes from within, doesn't, it's not a qualification, just saying.
Jeron is saying, thanks for the tips. We'll grind hard, patience, and survival. I love this.
Yeah, I love that, man. Lucky Akram.
Barry saying, spam, eh? Trailblazers are always ridiculed. Yeah, fair.
Facts.
That is what it is. Simply Mentor. Oh, so sorry.
Oh, my bad.
Simply Mentor saying GBP JPY sell. So look. So we have consolidation over here, which was the lows of yesterday. Price volumetrically reacted out of it, started pushing lower. We made a little bit of a base area, which we then, well, not really a base, but also a very short-term consolidation, which we've broken and retested and then pushed lower. This is on the 15-minute. We've now come back to that area of consolidation. It is in line with the 50 EMA pushing lower. However, the only concern that I have here is the fact that instead of making another base like we did over here, we've kind of we've established a new upward trend. So this was the low. This was the most recent high swing. That was the most recent high swing. This was the most recent low swing. Let me just move this out of the way. We've created a higher low in relation to this previous low over here. We've already taken the previous high point. Now we need to see whether or not there's going to be a continuation from here, or whether or not this is indeed the same reaction that we had from this consolidative zone, and price now re-establish its downward trend, and then this just being a bit of a retracement. Short-term retracement.
Yeah, nice.
What do we look
at? I'd like to see us pull back a little bit further to see continuation sells on GJ.
I mean, we've had a massive sell-off, and then we've got this area all the way over here that we've literally come and test now. So there is actually a potential for us to re-establish a bullish movement from here. The only problem that I have is I always want to see a slowed reaction coming into, a slowed reaction and then a continuation up. I don't like a hit and then push off of.
Yeah.
So, yeah.
Yeah, Vinny saying, yen pairs are selling today. Yeah, seems that right. LJ, is Will making fun of me? That was 12 minutes ago. What did I say? Bro, I can't remember what I said 12 minutes ago.
What?
Maybe I was, LJ. Maybe I was. I can't remember now. I don't think I was, but there's a good chance I could have been. Who knows? Unbiased trader. What? Yeah, I don't know. Unbiased trader. What happened 12 minutes ago?
That was me when I saw LJ's chart. Wow, there is beauty in that madness. Yeah.
Oh, regarding the messy charts.
Yeah.
Wow. Okay. Yeah, no, fair. Yeah. Okay. Yeah. LJ.
Question for you, Will.
Yeah. UJ. What do I think of UJ? Well, it will. Is it going to continue selling? Let's have a look. UJ. 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 Do you mean EJ or UJ?
UJ or EJ? Either. Come on.
I can have a look at UJ if you want, but I don't trade UJ. I trade EJ.
We don't care what you
EJ.
like. We want to know your. He wants to know your opinion. Come on.
Okay,
Give them
screw
your
it.
opinion.
Let's go with Euro JPY then. Let's go with that.
In the wild, saying he offers private lessons, just not for trading. Yeah.
Yeah. Oh man.
This is awesome. Vital saying, or Vital saying, "Good morning, my first time in the trading room." Well, welcome.
Good morning, brother. How are you doing? So I've put in Euro JPY again. Why have I done that? I meant USD JPY. Or Muppet. There we go. USD. Wow, they look almost identical. USD JPY and Euro JPY actually look identical. So this is USD JPY. This is Euro JPY. That is nuts. How similar they look. But you've asked for UJ, so let's have a look at UJ. So Doric is going to continue selling. Let's go up onto the 4-hour chart. It has clearly dropped well beneath the 200 moving average. We've got this consolidation here. I've taken out some highs, tapped really nicely into this potential zone here. So that was super nice. Continue on down. This is an over. So we've got low here. We've got a lower low here. We got this. Sorry, a lower high. We got a high, lower high, lower low. We're just waiting to see what happens here. We need to print a lower low, in my opinion. So potentially there is a chance that this could continue selling off. As we go drop down to the 15-minute, I'm just going to ignore. Actually, no. Let's go into the hourly. Let's pay it some respect. As we go into the hourly, we can see that we are having nice bases in Richard's strategy. Maybe they're a bit too much of a consolidation to be bases for Rich. I don't know. Maybe let me know, mate. But we're getting some nice consolidation drop, consolidation drop, consolidation drop. So that's really nice if you do trade those sort of consolidation breakout trades. There's been a couple of opportunities for selling pressure after this large consolidation here. 15-minute time frame. I'd like to ideally, based on what's been going on over the course of the past few days, I'd like to see this as a consolidation here before then a further drop below, so that breakout and continuation down. However, it wouldn't surprise me if we get a breakout to the upside. If we move back up onto the 4-hour chart, it wouldn't surprise me at all if we can get some form of pullback on UJ before then continuing the trend out. Trend seems to be shifting hella bearish at the moment, so it would be interesting to see where we could pull back to. Where would I want to see it pull back to? I think the area that screams out at me the most would be this area here. I feel like this just... Oh, okay, I didn't get my highlighter. I feel like this area here just screams quite significant at me. However, when it comes to validity in my trading style, we've got the Fibonacci retracement tool here, which is also in line with this consolidation zone, which also would allow all this here to be tested. So if we can get some form of pullback into this area and then a continuation to the downside, that's probably some real high time.
Where is Will? No. Will has disappeared. Yes. Is Will offline? Will is offline, but Dirk is here. We've got Dirk.
Hello. Seems like his Wi-Fi crashed or something. He was like a bit choppy already just now. Oh, but I can see him in the background now again. He said I should still be here. Welcome back, Will.
Can you
Am I
hear us?
back?
Will?
I think he cannot hear us.
Yeah, I can hear. I can hear you guys perfectly.
Okay.
Oh, we
Good.
can hear you as well. Welcome.
Nice.
Welcome, Will, to the stream.
Oh, okay, cool. That's fine. That's great. I don't know what just happened. So you guys can hear me okay now?
Yes.
Yeah. Yeah. No. No, we can't.
And now not anymore. What is happening, man?
Yeah, he's having a day.
I think so too. Yeah.
Yeah, maybe Will should go and I don't know, give his Wi-Fi a bit of a
Yeah.
rest. Work.
His shift is over anyway, so I think his PC or his Wi-Fi just said, not with me anymore. I've been here already 2 hours. It's time to go to rest, have some lunch.
Yeah, go
Or
and
dinner.
do that, Will. Go and have dinner.
All right. Good. How is everything? How's everybody doing?
Very good. Very
Yeah.
good. I had a very lovely sell on NAS just before stream, and I'm seeing now that NAS is tanking. So
It's really tanking. It's like the
yes.
pre NFP excitement we are seeing here. What?
So I'm happy that I'm pretty much done with the London session. What's up, LJ?
And he's muted also.
1-0 for Dirk and Richard versus.
Will's gone. He was talking rubbish on my Picasso drawings. All right. Not cool, man. Not cool. Okay.
Yeah, but I'm the one that said that you're not a physicist. So
Yeah. Hey, that was a nasty one as well. That's
I
nasty.
thought it was just like, oh yeah, I'm in a playful mood today. Let's see if I can stab LJ with one. But don't worry, LJ's
Sorry,
gonna
to
give me.
complete two components for my degree to fully complete it.
Maybe one day you
God
can
damn
go.
it.
Maybe one day you can go and fill up those 2 credits, and then we could have literally, well, PhD LJ.
Yeah, I have thought about it a number of times to go back and actually just get it done.
But you know what that means, no? That means you suddenly lose your ability to trade.
Ooh,
Yeah, well, it'd take me. Yeah, it would take me a while, and a bit of like commitment. I say,
yeah.
especially I've got 2 general pieces, but then yes, the PhD component, obviously, yeah, far more. So,
But you started your PhD learning, and then you found trading, and then trading was like, oh wow, really good, and then your PhD stuff just went.
yeah,
So now-
not quite at PhD. That was like the next piece to roll onto.
Well,
so,
your degree.
done that, but-
So
yeah,
your
yeah. But you get like, yeah, essentially, if you're going to do physics, right, you need the PhD for it really to be complete,
Worth-
right?
Yeah.
Yeah, you kind of technically have it, but what signifies that you're actually one of them is doing that extra. So, yeah, I don't know. Maybe I'll go back. I've thought about it a number of times just to do it as for like more of like a fun, general interest thing.
I was about to-
trouble is,
Who goes and studies for fun?
yeah, well, that's the thing where it's like you can still learn everything
Yeah.
yourself, but now you're just getting a random piece of paper you're not going to use, and it's very
Yeah.
expensive, which you
True.
kind of like, okay, I could just buy NVIDIA with that money or something, you know. It's like, right? You know.
Yeah. And there was,
so-
there was this one theoretical, what is it called, physician in English, or is a physician a doctor?
Physician is
Yeah,
a
that's
doctor.
doctor.
Physicist.
Yeah.
Physicist is
Physicist. Okay, thank you.
yeah.
And he made this joke, like, is that like, what do a small pizza and theoretical physics have in common? Both cannot feed a family of 4.
Precisely.
Oh wow.
That's the
Precisely.
Especially-
100% true. That was definitely one of the things I was thinking when I was at uni and going like, okay, I enjoy this. I actually like doing it. But I was definitely looking at the forward prospects going, okay.
The nice thing is, LJ, you have the personality of a person that is like on camera. So you could have been
I would have gone a very Neil deGrasse Tyson type
You could
aspect
have
if I
gone that
did
direction.
do it. Yeah.
The Australian version of it. Hey,
But
mate.
this was
Today we're
Yeah.
going to take about the double slick experiment.
yeah.
Me
If
and my
I did
crocodile.
keep on with that, but it was 15 years ago when that hadn't really kicked off, and it wasn't very certain that social media to the degree that it has exploded was actually going to get there. Right? It was still very much up for question. This was like just when Instagram had been invented, right? I remember taking photos of like just random like pictures of like a San Pellegrino bottle posting on Instagram back in the day when it was just like a photo kind of Pinterest type thing, right? Very different.
Pellegrino. Is that the water bottle?
It's the really terrible sparkling water that everyone hates.
But
Do you like?
they also have like
No.
the cans with fizz, like orange and grapefruit, and those are pretty nice.
Is it a green bottle? San Pellegrino.
Yeah.
Yeah.
Dude, I've had a lot of that, but I forgot
It's
that
just
it was
sparkling water.
It's just, dude,
Yeah.
it's just regular sparkling water.
I think Richard is mixing it up with a green Heineken bottle that he had a lot of.
Oh yeah, no, that's true. That's true. I've lost many years of my life because of fizzy drinks in green bottles. Anyway,
Yeah,
guys,
I just took the photo back then because it looked cool. With the bottle, it's just water, but it did look
Yeah.
cool. So it's just like
it's
a
just,
little
it's
aesthetic.
just a pricey bottle of water. You know?
Yeah.
I don't know, from the I don't know, mountains of Italy. I don't know. Anyway, guys, I'm going to love and leave you. I'm going to be jumping out for a little while. I'm going to go have lunch. It is 7 minutes past 12 here by me, and I'm a hungry boy. So I'm going to go and have lunch, and I'll leave the chat in your very, very capable hands. D&D. So Dirk and Doc LJ.
Yeah, beautiful.
Alrighty.
Beautiful.
All right, guys, have a good
Take
one.
care, man. See you soon.
Bye.
Cheers, man.
Yeah.
How
How
are
is
we
it?
doing, Dirk?
Pretty good. Got some stuff done this morning. Didn't take any trades though because of NFP today. So I want to wait until we see how that turns out to be. I think the market's very much afraid of it, if I can put it like this. So we see NASDAQ tanking. Was just about actually to think like, oh, I should buy down here, since we are approaching 25,050. But yeah, with NFP ahead, I don't want to be stuck in a position like this for too long. You know, the closer we come, the more irrational the market is probably going to get.
Yeah, I was going to say tonight's NFP is a bit weird, to be honest. The economists' like forecast numbers are a little bit higher than I would have expected.
Yeah, likewise. Yeah,
It seems very odd. We've seen a bunch of the tangential data actually being a bit worse. Most of the hiring has come from, as we've had for some time, education and what's it called like nursing, healthcare. Sorry, healthcare is what I'm thinking of. We've had the drop in construction. No surprise there, though. That's very much a seasonality type thing. You know, it's cold, there's snow, etc. That always happens this time around. But we have seen quite a big drop in professional services. And there's hence the ongoing question, is this AI? One, in terms of actually dropping people, and also in terms of not hiring new entrants, right? So potentially some people retiring, that kind of stuff. There's always a backwash of that as well. Yeah, but very much like whenever a company hires, they're trying to look through not just like, we need you now, it's a 6 months, a year, 2 years, 5 years, potentially more type aspect. And obviously they're going to be looking at AI right now and seeing that we could drop a lot of people. Probably don't need that person, that person, that person, that person.
To that regard, I just this morning, I actually I wanted to screenshot that, but I forgot about it. There's like this job portal in Germany, which is very popular, called Indeed. I think they're actually operating worldwide now.
Yeah, they're quite global.
Yeah, they posted like this comparison, like open IT jobs. What was that, like 24 months ago and now? And it really is
Yeah, I did
dropped
see
off
that. Yeah.
massively. You also saw that. So maybe it was like the
Yes.
worldwide or US statistic actually. And I was like, oh wow, okay, that kind of resonates with the whole vibe we are, for example, feeling in Berlin here, which it was like, at least for Germany, like the startup hub. And like one of my neighbors, who's a still quite young gentleman, but he is very gifted coder and a software engineer. And like he said, like, wow, Dirk, like 3 years ago, every week I would get job offers over LinkedIn by headhunters, like, oh, we're looking for this, and I basically could like select which salary I want. He said, now
And then also
I'm
ask for
happy to
more
have,
on top
yeah,
of
exactly. Yeah.
Yeah.
And he said, now I'm just happy to have a job, because it's very difficult to find something. And this is, in his opinion at least, predominantly due to AI. He said you just don't need like those software developers anymore. What you need now is, or his job scope is more like, I'm like overseeing several AI coding agents that they, keep heading into the right direction, but I'm not writing any code myself anymore.
Yeah, so you just got to manage them. It's almost like a management position
Yeah,
of
exactly,
managing the
yeah.
AI themselves. Like the AI are the general employees, and now you're almost like a manager, and just you make certain corrections. Sometimes you got to delve a little bit deeper, that kind of thing. But definitely reduces that headcount, because same deal. I've got a couple mates in IT and stuff. Exact same deal. 2 years ago, whatever offer they wanted, that kind of stuff, they've got leverage, that kind of thing. They always get like more. I've got another mate that worked for like Domino's, doing like the app type stuff, and then got laid off. They've been doing cuts recently, that kind of stuff. But yeah, then transitioning into something else, like it wasn't so just bang, done, cool, good, right? It was like, dude, I'm actually concerned, right? So yeah, I'm definitely seeing the same thing here in Australia as well. Like on the ground, people I know, that kind of thing.
Yeah.
Yeah, it's weird. So same with like, I mean, we've also had the talks of was it Hassett that came out, was saying the jobs numbers will probably be a bit worse, a bit poor. Yet the forecast numbers from economists are actually quite high, which is, like I was saying, I don't quite understand, because as well, just in general, January is always one of those really bad months.
Yeah, exactly.
It always has a large amount of variance because of the weather effects. The seasonality rebalancing never quite keeps up. And then we have had some actual, poor weather coming through that I actually expect we might see a bit of a downside element here, even though you would think, I think this every year for the past 10 years, that should be somewhat in the price of the forecast, but never is, which always perplexes me in general. So
yeah, I mean,
I don't know.
Today's forecast is like, which, like you just said, surprised me a little bit that they are thinking about 70,000.
Like 70K.
After the 50K we saw last year, this is like totally not in line with the reality we are seeing out there now. There could, of course, always be a little bit of lag in the data, obviously. But yeah, I mean, as a trader, I have to say, I actually would like to see a worse number. Not because I want the market turmoil, but it kind of pushes the Fed into the direction of further rate cuts. No, because this is what the Fed is looking at. Inflation, they really don't care very much about anymore. It's now all about the job market. So Jerome Powell, this is what Jerome Powell was talking about in 2025, like the whole time. Yeah, we want to see a weaker job market, that we have a reason to cut rates. So, I mean, today's numbers could be like give a defining direction maybe for the next months in terms of, are we getting another rate cut sooner than we are expecting it? Or, is the Fed still going to play the waiting game, especially since in May we are going to have the handover of the chairman from Paul to, what's his name? I can only call him Kevin all the time.
Kevin Walsh.
Yeah. I always mix it up which ones of the Kevins he is, of the two candidates that were there. And so interesting months. Again, I'm a little bit afraid that like 3 or 4 months down the road, we are going to see what we saw last year in early autumn, that they basically tell us, oh, all the non-farm payroll numbers, they basically were BS. We miscalculated where the correct numbers are these. Do you remember this still? And because it's a little bit like, how much can I trust really what I see there in terms of publications? So yeah, interesting one. I'm going to stay away from the markets until then, because I'm a little bit afraid I'm going to be caught up in a position.
Yeah, so I do agree with that. So first of all, I'm very happy with the Fed actually moving away from the inflation thing. As I was definitely harping on last year, saying like, I just can't see anywhere inflation is actually going to come through. The companies aren't passing it through. They've got inventory.
Yeah.
They don't want to increase pricing because the consumer is actually very price sensitive. They will happily shift to whatever general retailer, to Target or to was it in America, TJ Maxx? That kind of stuff. The lower, Walmart, that kind of thing, if we take a US-centric view. So there was very much that hesitancy to do that. We saw energy prices come right down, interest rates right up, so you're not going to get the same exchange of housing. So obviously everything is pulling against it. Plus you've got AI, consumer tech, everything coming through. So the only component was basically the government spending aspect to drive inflation. Now, obviously, we had the Biden era massively pumping that, and Trump reduced that hugely. So I couldn't see anything, right? The tariff thing is just a random hit. It's also, it's not like they run these margins where you just get a direct like 10% or 50% increase, because obviously their actual cost of goods is far lower than the profit margin they actually run. So that's where I was getting quite confused how people are trying to extrapolate like massive inflation with this. So I think it's good that they've got that now down. I also do wonder about the revisions, right? Because the start of last year, we had massive revisions. It was 800K plus. Then we had the mid-year revisions, which were another, what was it, like 400 or 500K back in, it was like August. October
I don't remember, but I
can't
just
remember the exact number for that. But it was just a lot. Like it got to
a different picture than the narrative.
Yeah. So the same deal here, where I'm very very speculative. I still don't think they've quite got the. I mean, obviously they don't have the accounting numbers correct. They haven't figured out the right measurement. It's the same thing with Australia here, where we had the Australian jobs numbers with the ABS here, and we went kind of from 4.1% unemployment to 4.5 in 2 months.
Okay.
And then back down from 4.5 down to 4%.
What is that? How is that possible?
2 months later. Yeah, after that. Yeah. So clear accounting error, right? And then the central bank has made decisions on that both prior and now, which is just insane to me. They've also produced the numbers for GDP, etc., which is going to be the lowest medium-term growth for the next 6 months in Australian history.
How's the GDP growth in Australia anyway? Because as a German, I'm used to something like, wow, Germany was growing like insane last year, 0.8% or something. We're not growing anymore anyway here. So
I forget what the exact number is. I'd have to look it up. But I know that it is positive. I think it's 2 point something, like 2.8. Off, I could be completely wrong with that. But the thing is, I forget what the exact GDP number was, but I do know that GDP per capita has been declining. It has done for 4 years, basically since COVID, and it's about 80% per input cost per individual. Now, GDP as a whole number is up, but that's only because of the increase in migration, right? Which hence more people number go up. But per person, GDP per capita is way down and still declining. So that's where I don't get it. And they've given out the lowest growth, median term growth projections, which was they're projecting 1.6% over the next 6 months, which they reduced from 2.2%. That's a big downgrade, and yet you increase rates.
Yeah, that's
What?
I don't understand this as well. I mean, you've been talking about this during our streams a lot, and I also thought, like, what is the logic behind that? You know, if you're not going to stimulate the economy like this, on the contrary. So there must be. Is there like something wrong on the balance sheets? I mean, fair to say, since 2008, I think, running a central bank has become more difficult, because before that we didn't see to this amount, for example, the programs of buying bonds from banks and basically guaranteeing them. This is like something that started in 2008. Actually, if you want to go into all the regulatory stuff, for most central banks out there, this is actually something that was forbidden. So they were kind of breaking their own laws, but never mind. It's gotten more complex, and of course it helped the world to survive by injecting more capital into the economy. And of course, we can discuss this, but like just for the benefit of a couple of large companies or the economy as a whole, and so on and so forth. I don't want to get too philosophical here, but I think, like, judging nowadays, when I hear, for example, here in Europe, somebody like Lagarde holding a speech about, and she was criticized a lot why the ECB didn't cut rates in the last setting. I think there's more that acts to the picture and to the decision-making process of either hiking or cutting rates than we actually see on the surface. I think it's really much more a game of how do they balance their balance sheet with all the interventions they have to do, not necessarily the ECB, but especially true, for example, for Switzerland also. We see the same effects of this now between Japan and the USA as well. So yeah, and sometimes I think, like, I really would like to be a spy in those meetings behind closed door, what they are really discussing there and how they come to the decisions and that they make by the end of the day. You are muted, my friend.
Sorry, yeah, I was. Yeah, so I'll jump into this because this is actually a good point. Because as you guys know, I've. Sorry, I'm not actually sharing the screen. Hang on. Here we go. So as you guys know, one of my biggest trades for this year has been Aussie dollar higher. I'm looking towards 71.72. We've now crossed that 71 cents. So we're definitely on track. Trouble is, I feel like we're now on track for kind of the wrong reasons, which makes me uncomfortable with we get some kind of sentiment push with this, and then eventually you get like a big 500-600 pip drawdown, from 72 cents back to 67, 68. When, this is where you look at some of these currencies that might be a bit more secure than some of, like we've talked about the dollar yen, where there are bigger opportunities to get those 500 pip or even 100, 200 pip if you capture a part of it type movements. But the dollar yen is much more, it's got a lot of moving components. It's far less clear. It's very mixed, very choppy, very chaotic, right? So stuff like this. Now, if we look at, so this is the Australia. So basically this is the inflation rate, right? This is just through TradingView. So if you guys, I don't know if you need the premium version. of trading for you. But basically, if you guys go to the main page, you go to markets here, you go to countries, you've got, I guess, kind of some of the majors up here. This is Australia. You can go to more countries. And then you go through here, it'll actually bring you to this page, first of all. It'll show you all the stock markets for that country, highest volume stocks, if you're interested in that in general, most volatile, that kind of stuff. You go right down, futures, commodities, blah, 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 blah. This shows you the currency outlook. So you can see just how much we've gained. So these show negative, but they're...
It's because Aussie is the second.
Because they're inverse.
Yeah, exactly. Yeah.
So, I mean, the Aussie is now, in the past year, almost appreciated more than the Swiss franc.
It's insane. 11.7% for currency is really, really insane per year.
Yeah.
Sounds like not a lot because we're used to gold and silver and crypto or whatever and stocks, but for currency, this is really, really a lot. For a major currency, I should say, maybe.
Yeah, and so the main part is because we're at 66 cents at the end of the year in December. And hence you can see on the month per the dollar, the Aussie is appreciated 6%. So we went from 66 to 71 and what do we want? Yes, 71.11, 71.10 right now, right? So massive gains. I will say, anyone living in Australia, if you want to go to Japan, it's a good time. Wait, that currency is in the bin. So yeah, basically we go to here. So this is what we had. So this was back in June, where inflation was apparently 2.1%. Then we jumped up to 3.6, 3.8, down to 3.4, and now 3.8. Trouble is, that jump was due to government subsidies, that kind of stuff that came through. So them, this was around where they reduced rates the last time, and now they've decided to just pump them up just because of that. When really, you'd actually look at this level and say it's quite stable per the government subsidies. Now, a large portion of it is energy, like I've said before. So this is why I don't like it. So basically, the point of this is we could actually see some kind of topping element on the Aussie and then see quite a collapse with that. Because each time you increase rates right now, part of why we have negative GDP is not because the economy is actually bad, but it's because so much of people's discretionary spend or excess capital or even just money they earn in general is now taken up by either a mortgage or by rent, right? So each time you increase this, and they brought in rules, legislation that you can only increase rent every 12 months. And what that sets is the precedent of when you increase rates once, mortgage holders on average across the country goes up like $150 a month.
Yeah.
Not too bad. Trouble is for renters, the people who have the rental properties perceive that they might increase rates 2 more times. So they go 150 times 3, and they only have the opportunity to increase the rent once per 12 months. So they just jack it up just in case to protect themselves, which then deletes that lower base. And now you get this massive splitting of the economy, and then it's just terrible. It's more of a hollowing out. This is why I don't like the government interjections into these kind of things. It means well, it doesn't end up with good outcomes.
We saw to a certain extent when I was reading the morning briefing of Bloomberg this morning, they also wrote about that especially amongst lower income, let me pull that up here so I can quote it directly, their delinquency rates on loans, for mortgages and credit cards. You saw
since 2010?
Yeah, since
since
2017, actually. But especially much, much higher on lower income households and younger people, which I find interesting.
Is this US?
That's US, yeah. That's US.
Yeah.
Yeah.
I thought it was higher since.
I don't know. Maybe it's
no. Actually, no. You were right. I was looking at the same chart. I think I've actually. Yeah, go on.
if you have it, pull it up, and I think that's very interesting.
I think I've got it on my phone, but I have to download it onto.
Because it kind of shows, what we've been talking a lot on here as well, that you have a further eroding not only of a middle class, but in this case, especially of people that have a hard time getting by anyway already, and
yes,
which is, in my opinion, like another brick in the wall that shows that we should have much lower interest rates in the USA than we are currently having. There's no reason to be hawkish, in my opinion, right now. And the problem, of course, is that especially this group of voters is like underrepresented. This is not, if you're a politician in the USA, at least, same for Germany, honestly speaking, this is not the group of voters that you cater for, because they don't make up a majority of voters. But it's interesting, and for me, it always paints like a kind of grim picture for the future of an economy that is like centralized around like the 1% more than the rest of the population.
Yeah, I think the very interesting thing is that this time around we have, so GFC was very much like an abundance thing for people that potentially didn't earn it or deserve it, right? In the sense that, say, housing, you're giving out no interest, no income, no, the ninja loans, that kind of stuff, and just giving these pieces of paper out to everyone. And then all of a sudden they now have money and have gotten wealthy because something is appreciated, quickly. Those that played the musical chairs and got out got some cash. Those that didn't got cleaned up, right? And that was very much a raw, extreme push of abundance. And then it blows up. We've now got like more of like a vacuum circling the drain.
Yeah.
And then people are getting like squeezed out and poof. So it's kind of like a different element. And then I think as well, where that's interesting is that people are comparing like the stock market's very different. Currencies, bonds, everything they're trying to compare them as the same, but the profile is very different of what is actually going to trigger a potential either increase or a collapse. So in both manners, right? The same way that people are talking about AI being a bubble or something, they don't quite get it.
Yeah.
Same way that people are talking about everything should collapse, they also don't quite get it. It's like people have got it flipped on its head, which is very interesting, which I think also provides opportunity, obviously, as well.
Yeah, I think that's something people do not understand, or a lot of people actually do not understand in general, that there is too much money involved in AI. It's the biggest investment in human history. There's no way this is going to collapse, at least not in a way, when you think of a bubble bursting or it's going down by 99%, stuff like this. Are there going to be hiccups, like devaluations of like 20, 30, maybe 40 or 50%? Even for sure there are, but that doesn't change the fact that we have trillions of US dollars invested by companies. What did I read just now? I think it was also yesterday, something about the amount of money Google is pouring into AI, and especially also the IT infrastructure you need for this. So we're talking about data centers. Funny thing, by the way, there's a town in Germany that just rejected a data center built by Amazon. And everybody was like, "Oh, why do you guys are so dumb? Why do you let like local politicians decide on whether there's like a giant data center being built?" But the reasoning for that I found quite interesting, because they said, "Yeah, but the problem is when we are going to have this huge ugly data center in our landscape here, which makes our town unattractive.
It's an eyesore. You're like, get that out of here.
And it's not creating actual jobs." They're like,
it's just creating robots.
Robots, and of course you have like maintenance or something like this. Maybe
like security, maybe some gardeners, people that got to clean
people
the
like
place.
working there, but and
They're
then they
gonna,
get a lot of tax
like,
breaks, of
dust.
course.
Yeah, they got to dust like the GPUs, get all the dust
Yeah,
off, so you don't
exactly,
get
yeah.
overheated. They got a little duster, right?
So I found that just as an anecdote quite interesting, but
Yeah.
it shows again kind of dystopian cyberpunk of future that we are slowly seeing unfolding. And excuse me if I get again too philosophical, but the segments with LJ and me, we are meant to be sometimes talking about fundamentals and not only about scalping and so on and so forth, especially today with an NFP coming in. So like a kind of a dystopian future where you don't have a job and you're not allowed to raise your voice or protest against it because like the narrative is controlled, or the media is controlled by maybe not the government, but the powerful corporations out there.
Yeah.
And for me, that's quite scary, honestly speaking. I'm always happy that I'm not one of those people, that have to compete on the job markets right now.
Yeah, exactly, dude. I'll just dip into chat just for a second. So, when is the anniversary event? So, 17th of Feb, I believe. I think we got like $2 million worth of giveaways
Wow.
of accounts and various stuff, like big. So, furthermore, over the year as well, though, each month we will have, for the 10th anniversary, it will be like a long ongoing gradual thing as well of more and more giveaways. So if you guys turn up, there's going to be like a very long, drawn out, year-long type thing for the celebration. The first, or at least the first or next main event is going to be the 17th. Right, so we've got a bunch to give away there. It's going to be, I think, Rich was saying it's going to be 2 mil of giveaways on the 17th. We got a bunch of announcements as well coming through then, so can't reveal to you guys now. I gotta keep my lips sealed, but there's a lot coming through then. And then also we're getting pretty close to 100k subs as well.
Just looking at it, I think we're like at 97,800.
Yeah, 97.8. So
Ooh.
There's also going to be a double bubble event at 100k subs. So any guys that are not subbed, if you're just joining into the stream, your first time or second time or third time, definitely sub, because once we hit 100k as well, there's going to be a major milestone event for the 100k subs on top of everything else we're doing. All right, so definitely punch that if you haven't, because it's all given away to you guys. It's not for us. It's us giving away to you guys to appreciate you all. And we do have a large basket to actually give away. So you guys will have a good shot at everything. So we appreciate you. And hopefully you guys checking in here every day. Obviously, now we're starting an hour early. We've also got a couple of different segments. I can see this comment right here, visit chart, nonsense talking. So I will say on that, mate, this is not nonsense talking. This is what actually moves markets. So the same way when we're talking about this stuff, this is the kind of thing where you catch the massive drawdowns like we had on dollar yen earlier through this year already, right? So Dirk and I come in here, we hit up some of the actual drivers that are moving the market. We also do the technical stuff as well, run through all of that, but we try and communicate to you guys a bunch of the macro fundamental stuff, the news, the data, high impact stuff coming out. Where is it driving things? Why is it driving things? What you can expect going forward, what the next outcome for the week, the month, etc. is, central banks, all of that. And oftentimes you get these kind of movements where if you're actually stacked up and you're informed on that, you can start to pick some of these elements with the technical structure, and you'll be able to pick up these large drops. Like that's a 700 pip move. That's an absolute cleanup, right? So this is the only way that you're going to be actually prepped to actually take that kind of a trade is if you're actually fully informed with these components, right? Otherwise, you'll just have no idea. You'll jump out through here or there, or try and inverse the trade or something like that. if you're fully informed with this stuff, you can actually clean up some of these trades. They're not all the time, but they do happen through various periods through each quarter, right? And some of those big trades, they can actually make up the majority of your portfolio for the entire year. Even with hedge funds, the majority of like returns come from 2 to 5% of the trades for the entire year, right? And these are the kind of trades that they clean up the majority of their returns. The rest is kind of chop and trying to like feel things out. But then when you see it, you know something's coming, you punch it, done. So the same way for you guys, that's what we're trying to present for you, as well as the general day-to-day trading, intraday stuff, where we're going, what's happening, just like we're talking about NFP today. Obviously, very important component. You guys can position or protect yourselves, take advantage of it. So there you go.
Very well said. Thank you, LJ. And yeah, just to add to that, maybe it's important, you know, you have to understand what makes market moves. And this is not technical stuff, at least not in 95% of the time, but it's like what is going on fundamentally under the hood. And I think dollar yen is such a great example. The reason why we see these crazy candles and like 200 to 500 pips of volatility sometimes is the carry trade, and many people being caught up in the carry trade, meaning they borrow yen and invest dollars. And they pay like less money for borrowing the yen than they get for depositing the US dollars. This is called a carry trade. So you exploit interest rate differences between countries. The problem is always when because you're not doing this with $100. Obviously, if you run a hedge fund, you're doing this like leveraged, you know. And then if that trade goes against you, you need to deposit more money, like on your trading account with the fivers. You'll get a margin call. Either your position gets closed automatically, or the bank is going to call you. You know, you need more cash to keep this trade open. And funny enough, whenever this is not possible for companies anymore, hedge funds, it's not possible not only for one, but for a multiple range of hedge funds or institutions that are forced out of trades. Then at the same time,
It snowballs.
It's a snowball.
Yeah.
Absolutely.
Yeah.
This is why you see those crazy candles, because it's basically everybody needs to get out at the same time. There's no liquidity in the markets. They have to accept any price for execution out there. And if you are aware of something like this could happen, then you're not going to be so surprised anymore by crazy candles like this. Same if we look at metals, especially silver at the moment. LJ and I have been talking about, you know, especially for silver, maybe don't engage into a long trade there, especially leverage. This is like exaggerating too much to the upside. Not because we knew when precise it's going down again, but what we knew is that if it starts moving against you, then it's going to move severely against you. So we don't want to be in that trade. On the flip side, then, and this is, we saw ULJ doing that with gold, for example, also last week. When that happens, and you are prepared that things like this can happen, well, then you can apply techno analysis to kind of time your entries into the volatile trade direction. This is what it's all about. Trading, if you just want to use, and I'm not talking about like scalping on 1 minute charts or something like this, but you know, day-to-day action, so to say. If you just want to rely for that on technical analysis, you have a 3-dimensional market and you're trying to analyze it with a 2-dimensional tool. It's going to work sometimes, obviously, but a lot of times it's not going to work. And the times it's not going to work are massively against you then.
Yeah, so exactly. Like, try to bring you guys some of these the volumes. Like, this was an example, like Dirk was talking about with silver. So yes, you've got this volume profile rising. This was basically through the liquidations. That was the prior period where we had the CME increase margin requirements. Then we had the slight dip, massive increase. Obviously, silver collapsed. So some of these things, basically, one of the big things in same with looking at this stuff, like, you know, speculators have established one of the largest ever bets on euro rising, 24 billion wager. is built on euro dollar surpassing 120. So many potential sellers, harder for euro dollar to sustain above 120. If that buckles, then we've got basically more downside. So this is one of the things I've iterated to you guys a number of times with euro dollar being above 120. That was my Q1 target. And I have iterated to you guys a number of times. Once we get above 120, it is very thin air, very low oxygen. It's like being on, top of the mountain. You got to put your oxygen mask, and then you start running out. You got to run back down, right? So that's basically what we've got with the euro, and then that's where you guys can pick up some of these, very well-informed. If you find then the technical structure, whatever you're trading, we hope to come in and do the macro stuff for you. Find your technical structure that aligns with the macro. Then you've got a very nice risk-reward profile. Yep. You could have traded this right down, knowing that, right? So that's kind of the aspects that we're trying to go through here. So with there's a bunch of yen stuff I bring to you guys every day, etc. That's kind of the aspect. So to ignore that entirely would be very naive.
I think what we are seeing right now this minute in gold, and I know a lot of people are commenting right now on gold, but it's like skyrocketing, is a good example for that as well. We see this is a 1 minute chart here on the left, so it looks like more dramatic than it probably really is. But we basically jumped up just now from 5,070 to, at least for the moment, be rejected again at 5,100, which ironically is also the 4 sigma on the 1 minute chart. So there you have like confluence again, right? That doesn't mean, I want to short it, obviously, but it would have been a good profit target, for example, for you, where probably we'll get into trouble. But on a fundamental level, like this whole structure we've basically seen for the past, what is that now, 2 hours here, with gold shooting higher, is a combination, in my opinion, of Europe coming in, NFP coming later, people, institutional investors kind of want to, hedge their bets for risk on. And since the US dollar is not a good hedge at the moment, they buy gold. I'm very sure if we have NFP later that are somewhat in line with the expectations, so with 70,000, we're going to see gold coming down again. Because for the moment, it's just like I need to be in the market, but I don't want to be in stocks. I don't want to be exposed in a currency pair. I mean, to an extent, of course, gold is also a currency pair because it's gold measured versus US dollar. So the only safe bet I can make in the past would have been US treasuries, which is not the case anymore for a lot of them. Something, by the way, we can talk about in one of the episodes.
60-40 portfolio is dead.
Yeah, exactly.
Yeah.
So I'm going to buy gold, basically. And this explains what you are seeing right now. This explains also, in my opinion, why it would be dangerous, to short gold at the moment, just due to the fact that you see it trading up at the 4 sigma up here on the 1 minute chart. I wouldn't do that. But
I think
if you are aware, like if you only look at technicals and you totally ignore fundamentals or sentiment in this case, you run into the situation where you are suddenly or you have at least a higher likelihood of being stuck into trades that are not good for you, and that are going to draw down your account.
Definitely. I like this guy though. He was like, nice explained, thanks all. I like you, Tech Doctor. Very good.
Thank you.
I appreciate that you heard us out. So, because I would definitely agree, Dirk. So I am looking at next port of call. Let's say it, 52.80 to 75.
Ports of call? Did you?
Port of call, right?
Port of what? Sorry.
Port of call or point of call, same deal. It's basically like the port. Like
I was just because I used to play
like
a trading game when I
port
was
you're going
young,
to, right?
it was called Ports of Call. It was like a shipping game. So
Yeah. Well, there you go. Shipping
yeah,
game. So that's what I'm saying. Like port of call, like where you're trying to, get to. So
to
port
get
of call, or you can say point of call, same deal. Basically, you're kind of targeted expected area. So we had this measurement mapped out. Drawdown here into the support. We got that slight tick down with last Thursday, Friday's volatility, which kicked us over. We then found some buying pressure coming through. We came up to the tops. We've now consolidated this top area. And it's a question of either we get the drawdown, or I've deleted some of the stuff that I had mapped out from last night or the past couple of days, because it's been on Discord stream or whatever else, which it gets too messy. But yeah, what we mapped out was either a break from here or the drawdown and then a run. So right now we're very clearly seeing the run. Break of that topside structure. Ultimate goal, regardless, is up here towards the 5280 as far as the interim standpoint. And some of this is to realize this kind of stuff. So traders slashed bets on gold rising in the week to Feb 3rd. So this goes down to your COT reports, futures reports, all that kind of stuff. So 165K contracts. Net long is the smallest since May 2025. Now, if you guys remember what happened then, that was when we hit those relevant peaks just after 3K, about 3.5. So gold was at 3K in May 2025. We hit the 3.5 after that. There was 251,000 longs at the start of 2026. Now 302K in Feb 2025. So we've actually seen a reduction in overall longs per a year ago, right? That has also come into why we've actually rallied excessively, primarily in silver, less so gold, right? Because people are trying to short sell the asset. Thus, they get margin called. We've had margin increases as well in silver in particular. Thus, people get squeezed, price goes higher, sellers become buyers, price moves up, right? So that's basically what we're seeing. Still, basically, this implies that gold still has much more upside in general. Mostly comes from not speculative like paper buyers. It comes from like actual real buyers. So central banks, governments, that kind of stuff that are really propping up the whole sector. Obviously, as it's definitely hit the headlines, become more popular, certain momentum trades are going to kick in, like hedge funds, institutional buyers, pension funds, that kind of stuff as well. But yeah, either way, everything says to the upside for gold overall.
And it's
Silver,
an interesting example.
question.
If I may add to this, is like if you don't know like the fundamentals behind this or what these numbers actually mean, you might think like, oh, there's a reduction in the trade size, means like, oh, people are losing interest in gold, it should go down. When it's the contrary is, you eradicate all those speculative longs that use margin, and you come back to a more healthy level. As long as we are net positives in long positions, that still means there's an interest to it. So what we've seen, like this crazy volatility lately in gold, and not mentioning silver, I think silver is much more a speculative story than gold is. It kind of feels like, what we see in cryptocurrencies. Bitcoin goes up, and then people think, oh, it's gone up, I need to find another coin that hasn't gone up. Oh, it's called Silverbuck. And this one is going up by 100x. And to a certain extent, I think this is why we saw what silver was doing in terms of price. But long story short, you need to be aware of that. Where is an asset like over leveraged, maybe when there's like too much long position stacking up, because then you'll get those crazy candles like you see, for example, for silver here on LJ's screen. Because if there's a margin call, everybody needs to get out at the same time. And then you see that drop of what was that, like 20-30% in silver. And but if you don't know things like this, you might think like, oh, it's over, there's no interest in gold anymore.
And then there's a bunch of options players, market makers having to come in. If they're short gamma, they're going to have to buy the futures to cover the gamma squeeze, etc., which further propels the downdraft, the complete waterfall, like we saw, and it just accelerates. And then market makers are not going to price the same spread, the same positioning, that kind of stuff, because it's more perceived risk in total. So all of that expands, which means the price gaps and gaps and gaps quicker and quicker. So it's a very self-fulfilling, self-feeding cycle that occurs overall.
Absolutely. And maybe like a word on that, like, because we're talking about options here, like when we talk about something like a gamma squeeze, basically means how does your option react to a change in volatility? And if you're a seller of the option and gamma rises, you need to hedge your options. Otherwise, you'll get margin calls, from the institutions, or they want more money for you. And again, where everybody does that at the same time. So it's like, for me as an option trader, these gamma squeeze events are like the worst that can be always. That is like always a busy time, and never a time where you go out as a option trader with profit. You're really in I need to protect my capital mode, where other than like delta hedging, for example, which you can do right in the beginning. But let's not go too deep into this. People are already complaining that we're discussing it to a high level. And
we'll get back to it.
So don't get me started on option maths and fair values. And
So in general, guys, like the general peak, I would say going forward, this goes out for the next couple months as well. I would say we will struggle to get beyond this kind of 95 area for silver. I think that will generally cap our price. If you guys are more long on precious metals, go for gold. Because I will say silver is not a precious metal. Okay? Some people think it is. No one is buying it for precious metal security, right? People buy gold, central banks buy gold, governments buy gold. There's like a very small slew of silver, which is more of like a technical thing because it's actually used for industrial purposes as like literally just a warehousing backup for that purpose. It's not intended for monetary protection against monetary debasement, right? The majority of the silver run has been speculative. So if you guys have a further interest in the future and stuff, like gold will probably now start to overtake silver once again. So don't get caught out by thinking, just like we've already seen with this. Okay, let's hide this stuff. You can see the price action here. Then we look at silver. Not the same. Right? Now, if you have that much of a discount on a certain asset, right? The same way if you have certain fundamental news or something come out and everything is fully bearish, but the price just can't get lower, that's a very good sign to buy, and inverse, right? So just like this, we've had that massive drawdown, but there's not a massive willingness to buy. And the futures for actual deliverable silver, physical silver, is around $77 as well. So just a touch lower.
That is insane, actually. What a discount.
Yeah. So that's why I don't really like silver. If you guys want to take part of the metals trade, I would say gold. I think palladium, that kind of stuff, also has legs to the upside, which is not quite fully participated. That is one that I'm looking at. Palladium, platinum, that kind of stuff. But I think silver is kind of out for the count.
For me, it's like something like copper, palladium, platinum. I think those are extremely hard to trade markets because I always feel like you need to be really in, like on an industry level, what is going on, who's buying right now, who's selling, what is it used for, more than gold, where like more like, okay, it's a general store of wealth narrative. I think really for like those, I'm not going to call them lower tier metals. Obviously, they are not precious metal, but commodities. Same goes like for something like soybeans, orange juice, that's like
Yeah.
traded at commodity exchanges. I think you really need to have deep knowledge of the industry itself. Like for orange juice, like or half pigs or half cattle or whatever, what is like the demand there at the moment? How much is this large plant producing, and so on and so forth. This is why I never really touched anything outside of gold and very, very small silver trades. I haven't traded silver actually in years, honestly speaking.
Yeah, I was going to say, so those guys are now playing catch up per se, the same way that silver played catch up. So there's a portion of that, plus probably one of the best ways as far as data you can rely on is some of the Australian miners.
Yeah.
We're not the majority miner of some of these aspects, but all the data is out there, that kind of stuff. They're increasing it, especially since it's a minor capacity. They're increasing it for a reason, especially when we are majority producers in certain other areas, right? So that's the way I've always looked at it. So we're definitely on the up for that. Now, that goes back to electric cars, all that kind of stuff. I don't like them. Petrol head myself, but fine.
Petrol head when it comes to fast cars. Yeah. Privately, I actually do not own a car.
Germany will probably tell me to go away, which is surprising. Being Germany, they have relaxed some of those laws though, because they know they're all going bankrupt if they do it.
Exactly. The German automobile industry is like the most stupid industry and like a prime example of what happens to a company or companies in this case, if you're too successful and you kind of have this cushion you lean on and you expect like things are always going to be like this. I thought they were already shaken up in the past 10 years by everything Tesla did, but they are not. They are not. They are so slow moving, and
Dude,
Germany is so reliant on them, and it's just, it pains me to see this whole clear scenario playing out of where a company like Volkswagen is going to end in probably less than 10 years.
Yeah, the thing is they're putting full restrictions that it has to be all EV, right? And the same with like V12s. Like there's like 6 people in the world buying this stuff. It's not like a mass consumer thing. Obviously, 6 people is not really 6 people. But the point is, I don't know why they're eliminating that. Like, let them do that, which those margins on those cars with supercars, etc., actually make up a massive portion. Same with Porsche. Yeah, and everything, right? That makes up a massive degree of their revenue. And then, obviously, if they kill that, they kill the whole business.
Yeah.
Right?
I mean, look at what Jaguar, for example, not a German company, obviously, but has done, It's like they are betting a traditional car manufacturing, traditional company with a long legacy on a promise of a great new car that's supposed to come out in 2030 or something.
Yeah. Ridiculous.
And then it's like, especially like my brother, for example, who's like, he's an engineer. He's like always like, oh, I only buy Mercedes, I only buy BMW. I never want to have a different car. Only German cars are good. And then recently he had a rental car, which was a BYD. So a Chinese car. And he told me like, what, this car was so awesome, like put aside, okay, it's electric. It's not for everybody, especially if you have to travel like long distance. But the amount of things that are pre-built into the car where you have to pay extra for a German car, like BMW charging you, for example, for a seat heater. Like you have to pay like 5 or
Yeah,
10
that was
euros every month.
that was never gonna fly. That was
It's like,
never gonna work.
I'm
Like
not
they had
going
like a
to
subscription thing.
buy
Like,
a
nah.
car for $100,000, and when you have like this subscription app and you just want everything ready in the car, you want to be treated as the client who, drops 100K on a car. There's some expectations, but yeah, they don't learn and they are going to pay the price for it. I'm 100%
Not
sure.
yeah, not a chance. That was never gonna fly. So at all. But
Pound
Sniper VWAP. I'll say pound yen yesterday. You're now on a long position. What do you think about it? Where did you get in?
Yeah, that's the big question.
That's what I would say. So if we're on the 4 hour now, so we got the our typical 2 standard deviation VWAP that both Dirk and I enjoy and have become very accustomed to, which is very helpful. We definitely dipped outside of that. Obviously, we had the downdraft for the dollar yen last night. If I actually take that off, that was the short trade I had on yesterday, which evidently I apparently took way too early. But nonetheless,
Yeah, but I mean, who can know? It's like you cannot analyze like drops like this. That's why I
yeah,
always
exactly.
say
You're just trying to clean up what you're looking for.
if you
right?
can take
So,
parts of it, you're already in good shape. Everything done right.
yeah, so I would say same with the dollar yen. I think we would get a near-term pickup because there's the portion where, like we were talking about previously in the week, the market is trying to call the bluff on the whole intervention type scene. So we've now had that down pressure since the election. At some point, if that doesn't continue, very quickly, we will reverse, just like we did when we had the downdraft from 159 plus down to 152. We ended up back at 157 for dollar yen. So the same deal, we could see some updraft through here. Now, obviously, if you're long, you're very well positioned for that, honestly. So I mean, you've got this first long point of call from back in December.
I was just
with the first pause point, and you've got the cluster of wicks through here. But if dollar yen actually pushes another 200 points higher, you probably see a move up to the 200 through here, and then potentially a move down. So if you're already long, you could have where are we now? 210.15. Say call it to the bottom of that wick, right? Which is going to be 210.60 or so, 211.60. Sorry, you probably got 150 points higher. Like if you got in down here, it's probably a fair trade. Now, obviously, we do have the specter of potential like rapid downside for the yen, especially if the Japanese, both the government themselves, per the Prime Minister, like Takaichi, Bank of Japan, Ministry of Finance want to come out and kind of catch people off guard. That's the most effective way to deploy intervention. And they have said they have $1.4 trillion worth sidelined for intervention, which right now very much seems as a threat. Though the market is questioning, do you actually have that money? Are you willing to deploy it? When? Etc. So you could get some kind of this is the type of things where they almost start trading, right? Where they will literally look for these kind of breakpoints and try then give a headline and douse the market right there, right?
I mean, it's like a bit a make it or break it situation on this particular chart, in my opinion. And because if we go up we could either be deflected at the rectangle zone you were drawing in. There's from a technical standpoint at least more than enough reason for that. But even if we go all the way up to what you painted just now and then start going down again, we have a break of market structure there. Then we really go from a more sideways range market into a market that is favoring strength of yen. So a scenario that we've been talking about a lot. The only thing for me is always like whenever this starts happening in yen, I have a feeling I'm caught on the wrong side there.
Yeah, I was going to say one of my most hated patterns, just in trading in general. Like this is on a very large timescale, but that megaphone type pattern. So where you've got the top side expanding to the upside, the bottom side also expanding down, always tends to signal that you're going to get some massive breaks. So either say huge run to the upside and then some extra, right? Or you get like a complete capitulation and we just death, right? Same if you guys look at this on like a 5-minute time frame. Once you get that expanding pattern like that, you tend to get like an inverse break and then just continues and like goes. Quite often, if it's at highs, respective highs, it will go down the downside. So yes. I will say as well, just for Akram's sake, do you have an idea on the DAX?
Asking me about it, I don't. As I said many times before, I never look at the DAX. When I trade indices, I'm trading NASDAQ. Not even the S&P 500. For me, NASDAQ is the more attractive index liquidity-wise. You have the same liquidity in the S&P 500, but for me, DAX there are two problems, and I said this many times. Like DAX has a life of its own in the early morning hours. Then it just copies what the S&P 500 or NASDAQ are doing, and you have too much heavyweight of companies like Rheinmetall, so a weapons manufacturer, that is going to skew how the reality of a German economy really is. And if something is skewed and doesn't reflect reality, I don't want to trade it. Because I never know, is this price really a fair price right now? Is this really reflecting reality, or is this driven by other stuff? So for me, it's especially nowadays also where you can trade NASDAQ and the S&P 500 almost around the clock. I don't really see a reason to look into this. It might be something else. You know, if you come from a standpoint of I've invested in individual German stocks, bless you, LJ, by the way, and I want to use the DAX, you know, as an instrument of hedging, for example, but as a sole trading instrument. And this is true, by the way, not only for the DAX. I would say the same about the FTSE or the AEX or the Australian main index. For most of the index, with the exception maybe of the Nikkei. So, yeah, no DAX from me. Sorry.
Akram sad. He blessed me. Thank you, Akram. I'm going to sneeze, but yes. Dude, that's unpatriotic, Dirk. What are we talking about?
I'm not a patriot. I've been around the world for too much to be a German patriot, really. I think you have a hard time finding somebody more in disagreement with our current our current chancellor and the party leading than me.
That's too funny. That's too funny. All right, guys, DAX is going in the bin. That's your
Yeah, we have Akram covering DAX. That's a good idea, mate. That's a good idea. Would love to see that. But I mean, that being said, I know people who are trading the DAX. I know people who are successful trading the DAX. Whatever ticks your fancy, you know, it's like you gotta find your own pocket. Like LJ with Aussie dollar that works well for you. Like You know,
Yeah.
I love euro dollar, I love the NASDAQ, and find your pocket really. You know?
I was going to say, in all seriousness, DAX probably will look to fill this gap, make new highs. Obviously, like Dirk was saying, trouble is it's global indices, frankly. We have everything following the prior evening for
Yeah.
the US, right? Typically, like you get that lead on. That's why they don't even act individual unless there's some individual mass weighted company that a CEO has had some adverse event and they have to step down or something like that, right? Typically, they just follow the US. So the US is the leader overall. So any other indices, pretty much just look at S&P, right? Now, there'll be slight variation in the total structure, but it'll be the same overall direction. So
Yeah, if you want the conservative kind of thing, you look at the S&P. If you want a bit more action, at the NASDAQ. If you want a lot more action and you are like focusing more on small cap companies, it's always worthwhile looking at the Russell. In the United States, is also not one I'm trading personally, but I know there's are a lot of opportunities in there. Some people specialize on small caps. Yeah, exactly. No? Like you said, you have to find like what works for you. Don't try to look at too many stuff at the same time, too many things at the same time. So don't try to cover like 120 forex pairs, all precious metals, commodities, all the worldwide indices. It's just not feasible. And if we look, there's a reason why I think it's worthwhile focusing on the S&P 500 and the Nasdaq and the Russell. It's the sheer volume. It's like that much higher than everything else in the world. Like, what did I read? Like this year, we are averaging in stock trading volume per day over $1 trillion US dollars. Crazy, no?
yes.
Isn't that?
Yeah,
like,
dude, I'm up on the same stuff that you were saying. Also, this is what I saw for the delinquencies. It's not okay. It's just going to show why. Okay, that's not very helpful. But I found the same chart. I think you were looking at for the delinquencies.
Yeah. From Bloomberg, the one. Oh.
Yeah, and I did also see the trillion daily market activity because it used to be like 600 billion or so.
It's like up 40-50% from last year, I think, alone.
Yeah. Right, so we'll see if that.
And then, if you think about, especially for stocks, 80 to 90% of a daily trading volume is done by algorithmic trading, like bots or scripts or whatever. That's insane.
Yeah, absolutely insane. Honestly, I will try bring up the images when I can. But regardless, so we're talking about NAS just here. So can we bring up the NAS, please? Yes, sure. So last night's options level was 25255. Once again, that ended up being very nice cap. Then we've come lower. So for today, we have 25148. Right, so if we're going to measure this out, it's pretty much exactly where we are right now.
Sorry, man. Can you excuse me for like 2 to 3 minutes?
Yeah, of course. Yeah. That's fine. Okay, so similar deal with yesterday. These are the kind of, in general, the setups I don't particularly enjoy, right? Because you are in that middle spectre. You have to be very, very clear because obviously, okay, so if we go to New York, that was down through here. So we did have that spike up, spike down, back up. We oscillated basically the options level. Then we got a drawdown. Today, we've run up through the next day to the options level, gone capped at that level. Right. So sometimes I don't like when we're trading around the options level to actually take a position. Same deal with today. We're doing the exact same. Personally, long term, put it that way. So if we say beyond today, over the next couple of days, week, something like that, I would love to see a slight tick up through today, push down, tick up, down, and then potential run higher. Right, so I think the negative sentiment around tech, SaaS companies, everything that's really driving the NAS right now is probably overblown. We did have the rally after last week from the Thursday, Friday. Pretty good rally, to be fair. Right? Like, I mean, if we look at this, that's a good rally, 4.7%. That is a big rally. But I don't quite think the confidence is there just yet. Right, so most likely we get a bit of a up and down situation through here, eventually find a further base, and then have a broader rally higher. Now, that is also going to coincide, one, with we have the jobs numbers tonight, and then we're also going to have further central bank comments going to end of the month, next month, and beyond, right, which is going to be the big one. Since we've got Kevin Walsh coming in instead of Jerome Powell. So I would be looking for an uptick. I wouldn't be crash hot on longs for NASDAQ unless we breach the yesterday's options level. Right, beyond that, I'd probably be looking for some kind of downward movement price through there.
I mean, yesterday it really turned around almost exactly at the option level. Yeah? Crazy.
Yeah.
What is it today? 25,148. So basically where we are trading right now.
Yeah, pretty much where we're trading right now. And that's why I don't like it, because it can be very, one way or the other, which also can be good, like depending how you position the trade or set orders or something like that, right? But typically I prefer to trade something very out of pocket, like we had with this guy, and trade from here up into the options level, or inversely, there down to here, here up to there, etc. So would you mind if I also grab
No, of course not. Of course not. Please go.
So I was probably saying, do I check the Shanghai middle market data? Do you, Dirk? I will be
No.
Clear
no. Never in my life have done that before. So you have the answer there. See you in a while. I want to add something to the NASDAQ actually as well here, since we were talking about this just now. So for me, like NASDAQ at the moment is something on a day trading level, I do not want to touch. Apart from everything that is going to happen with the NFP later, I stated that I'm not trading right now until the NFP are released. Probably going to wait like half hours after that and then decide if I want to prick some trades for today. But what I see here on the NASDAQ 100 is a clear mismatch of market structure. So on my go to Renko chart for this one, where I have a standard deviation channel with a length of 125, we still see a clear uptrend, right? Like this. I have to hold it into the camera. So you see that it's a rather bullish structure still. However, if we go, and I always use the double size for that, to the 1 minute chart, so with a length of 250, we see that we are in a downtrend right now. And if there's a mismatch of those two, I don't like to trade this very much, because it tells me that eventually the underlying market structure for scalping is changing. So ideally, I want to have it aligned. I want to have the 1 minute chart also showing the same upwards trajectory than, for example, here the Renko chart is showing here when it comes to the standard deviation bands. Because then I can trade those pullbacks to the lower sigma levels into the overall direction of a trend. And this is not the case right now for NASDAQ, at least, so I don't want to touch it. It's a different story, for example, here in gold, where you can see the trajectory, the momentum from the Renko charts, if I measure it on the Renko charts, is going up right now. And the 1 minute chart, the 1 minute based standard deviation channel is also pointing into the same direction. And then what I like to do, and bear in mind, this is still also for me a new trading strategy, so I'm trying out things right now. I don't know if it's going to be a long-term successful one, especially since I'm not normally a scalper. But the idea here is basically to trade the pullbacks either to the 0 sigma or even here to the -1 sigma, so the blue line, -2, the green dotted line, -3, orange, or even -4, which is going to be pretty rare probably. So you can trade with the overall trend direction, and you have all time frames and all structures kind of pointing into the same direction. I think this is very important, and like this, you can make your life at least a little bit easier if there is something like, easy when we talk about trading, of course. And euro dollar, it's kind of the same, it's more of a sideways structure at the moment, but you can see the overall trajectory here on the right chart, which is a Renko-based chart with a pip size of 2, and the 1 minute chart, they are kind of showing to a certain extent the same. So I want to trade this one here into the direction of the chart, which actually typically would mean that probably right now, as we're trading at the -2 sigma, I would trade a long trade, which I want to exit then if we return to 0 sigma, so that would mean I would enter somewhere around 119.14 and exit the trade at around 119.19. And as I said, today special NFP are going to be released. So as we slowly inch closer towards that release, which is going to be in 2 hours from now on, you're going to see the markets acting in a strange way. So it's not a good idea, in my opinion, from my experience, to then start trying to measure the market or get entries solely based on technical concepts. Because you don't know if there are large institutions out there that basically, I deleted it, that basically need to position themselves. So I want to make sure at least to not be in trades until that data is released later on. 250. And this indicator, by the way, standard deviation channel 4x, I made this open source on TradingView. You can also add moving averages or high and low levels, like weekly highs, monthly highs and lows, yearly highs and lows, previous week high and low to the chart, to kind of get the stack of zones of confluence. And if you go to TradingView, you search for crypto for money, all written together. This is me on TradingView. And when you go to scripts, you'll find the standard deviation channel 4x. So you can click on this. You can see the source code for this. Yeah, if you click on this here, for example, you see the source code for this. And then you can, adjust it to whatever you think is like worthwhile and what you think is going to help you. Like I said, free indicator, and as you saw just now, LJ is using this one a lot as well. So it's really something that's helping you a lot. Let alone, for example, something like this. You see for dollar yen on the Renko chart, a downwards trajectory of momentum. So we are in a so to say bear market or downtrend when it comes to dollar yen, but on the 1 minute chart you see an uptrend. When you know that there's a deviation right now between the lower time frames and the longer term trends. Longer term trend is, of course, here something that goes back only to Tuesday, to yesterday back, basically. So we are talking about scalping, obviously, here, not like longer term trends. But this is like a typical structure I want to stay away from, because there's a divergence between what a longer term trend is showing me and what I see on the lower time frames. Now I could, of course, depending on what time frame I choose, switch this, for example, to 5 minutes, and then voila, you see this aligns more with it. So I want to choose here possible entries, for example, on the 2 sigma band, on the 3 sigma band, on the 4 sigma band. 4 sigma band, be a little bit cautious about that one, that align with the overall trend right now. Now, it's not as simple as it looks, of course, because ideally you want to add more confluence, but it's going to help you to quickly just get an idea about, what is the momentum of a market, what direction are we heading in, because you don't want to, it's always a good idea not to go against the general market direction, in my opinion. Probably later NFPs are going to shake up the whole picture a little bit. So at least for me, I'm going to stay out of a market, not only until release, but until half hour after that. I work a lot with technical indicators, and I don't want to be caught up in trades based on technical indicators that do not reflect reality at the moment, just because skewed price and rebalancing of price is going on and my indicators are telling me something that's not reality. There we have again the connection, to like a more fundamental picture that you have to know, like, in technical analysis, not the answer for everything. You need to know when to use it. You need to know also when not to use it, and maybe stay out of the markets currently. Welcome back, LJ.
Thank you. Yeah, I agree. So NFP tonight is going to be kind of weird. I don't like where the forecast positioning is versus what I expect. Probably more interested in shorting some of the other majors, like the Aussie dollar, like the euro, that kind of stuff, given, one, where we are in general positioning, two, with expectation for NFP, right? Dollar yen, I very much see as moving higher. I think the next recovery point is about 154.40 to 30, put it that way.
No,
I don't think we're just going to get like a straight down type aspect, right? So,
but that's the thing, this is like dollar yen, such a good example of a trading pair that I would never trade just based on technical stuff. You see, it's a different story with euro dollar, in my opinion, at least. But dollar yen is like, it's like there's just some single news event is quickly going to cost you like 200, 300 pips or something like this. And this is something I want to avoid. I want reliability. I want to repeat things. I want to kind of know like what to expect when I enter a trade, negative and positive. I don't want to have in the back of my head like, yeah, I'm in this trade, I have my stop loss, but there's a possibility that we see a sudden move of 200 pips and I'm going to get stopped out at much worse prices than in a normal high liquidity environment.
Yeah. Exactly. So my next port of call for dollar yen is probably about 153.70. So I think we are going to the upside overall, at least in terms of a general retracement slash. It's not quite a dead cat bounce, but more of a. I think the downside momentum has waned overall. So I'd be looking for 153.70 next, and then potentially 154.40 to 50 on NFP, assuming it comes out dollar positive. Now, I'm not too supportive of a dollar positive outcome. That's the only trouble I have with that. FX Vinay was saying, is there any giveaway? Not today, but we do have an event on the 17th of Feb for you guys. So part of the 10th anniversary for the Fivers, long time we've been around. We will have a big event, giveaway, that kind of stuff. I think there's over 2 million of account giveaways, etc. For you guys. So if you guys come through there, and beyond that, we will have over the entire year more giveaways, etc. every single month for you guys. So if you guys turn up throughout the period, that's going to be the next major giveaway. And then at each point, we'll have more throughout the year, which everything's going to accelerate and all the rest. Big year for the Fives. 10 years, a decade. That's a long time. And ideally, if we can get you guys to get us to 100K subscribers, very close, at 97.8 or so, like we were saying before. If we can get to 100K, you guys will get a very big double bubble effect for the giveaways for you guys right there and then. So if you haven't subbed, if you haven't liked the stream, please do so. Please share all the rest.
It's the one bubble you actually want to pop or to burst, because it's going to rain down
It's a good bubble.
cash prices onto you.
It's like shorting silver at the tops. Hey, you'd be very happy.
Or selling Bitcoin at 125K.
Yeah, so we got some big giveaways for you guys. If you guys tune in, they will be 17th is one date that I can give you that is scheduled, but the others will be a bit more sporadic. So you guys will have to check in. They will be a bit more random. So if you guys turn up on the day, you'll be in. There you go. I will say as well, if you guys have anything else you want us to scan over, have a look at, delve into deep, post your questions right now in the chat. Let us know, and we'll give you guys a deep sort of breakdown, whatever you're looking at. Tell us where you entered, where you're looking to enter, your stops, your take profit, the whole bit. Let us know. We'll run through it.
It's funny for silver, like I'm on a daily chart here right now, that like this whole thing to the downside stopped exactly in the bull market support band there again. Such a powerful not indicator, it's just simple moving averages, obviously, but they work on daily charts. If you apply weekly moving average to that in a trending market, that is, so bull market support band is nothing else than a 20 weeks simple moving average, 21 weeks exponential moving average, and you want to apply this to a daily chart. And when you have an asset that's really trending nicely, like silver, works very well on gold, obviously. Likewise on, where do we have it? For example, NASDAQ. It's very often a very good zone to buy. Yeah, it will undershoot often, so it's not going to save you, of course, from when we have those dramatic events like where there's total FUD out there, everybody's panicking, like we just had again in because of AI bubble fears type of stuff. But nonetheless, long term, usually this is a very good area to buy. Same in trending bear markets, when it's of course flipped to the upside or flipped to the downside, however you want to interpret this. But also a tool that can kind of help you to judge, like in my shorter term trading, where do we stand in the overall momentum right now? Oh, I see the NASDAQ with its long term, very long term. I mean, no matter how long I zoom out, it's always going to be a curve that sooner or later is going up again. Of course, interrupted by phases where markets go down and correct, obviously, again, as well. But overall, it can kind of show you like, well, we are trading below this right now. The narrative out there, growing economy, AI demand, and so on, is still ongoing. So it might be a little bit exaggerated. So I should, if we're trading below the bull market support band, maybe expect kind of like that the narrative is changing soon again and reflect this in my trades. This is how you actually can probably help you to pick out those trades you were talking about this earlier, with 2 or 3% of the yearly trades that end up being the biggest winners for you. Especially, I mean, look at this here, trading below the bull market support bands, and then we change direction almost exactly at the 3 sigma for an NASDAQ.
Yeah.
And sometimes, in a hindsight, everything is easy, of course, I have to say. But yeah.
It is, but it isn't, because everything is so mathematical these days.
I couldn't put it in better words, actually.
Hedge funds, everything, blah, blah. Like everyone's running quant strategies, all this kind of stuff. So at a certain discount, a discount looks pretty good.
Yeah.
Right. So, yeah. So that's why the standard deviation bands are very powerful. You get closer to a quant element without going full into like the depth of quant, breakdown of data. You've got everything, right? So, but it's much more aligned to that same type of practice or thinking, that kind of thing. So I like it.
Same S&P 500.
Very effective.
It's so effective, really. Yeah. But it's difficult, because we are, and understand this, normally when entering the market, we are very focused on day trading, like short-term trading opportunities. So sometimes it can be difficult to zoom out and look at the overall picture. Where are we right now in relation to the overall long-term trend? Easier to buy into FOMO, easier to buy into FUD.
Exactly. Krishna, is there a possibility of price drop of accounts? I have no idea on the exact principles of what may or may not be given out with the celebrations. Right, I just do know, as Richard Butler, who you guys have seen, was on earlier, I think it's going to be back a bit later, has said we do have a bunch of giveaways. So I do know that. I don't know about specifics of like account cost drops or discounts or anything, but I do know we do have giveaways. So how do you analyze news regarding FX anticipating big moves beforehand? Look, so I mean, that's a very hard one. It comes down to the macro fundamental type picture. It's one of those analogous type situations where you have to run that stream of data over a long time period and also be sort of educated not just on the past 6 months, but say the previous January after that, and before that, and the past like 5, 6, 7, 8 years, because of seasonality effects like you get with the jobs data with Winter in the US, you get a lot more snow. Sometimes you have blizzards, sometimes you don't. You got to be educated on whether that was actually a large effect, and then it gets revised over the next period, or etc. Now, it tends to be a bit of so basically. With that said, it's like a running concourse of keeping up with all the now time data, both with the tangential data, so the employment components of like the PMIs, the ISMs, plus looking at the actual ADP, NFP. You look at the expense components from CPI, PCE, all the rest, and then you try and gauge like a general outcome, general aspect of what you believe. Then you actually crunch the data like quantitatively as well, right? Because there's always the kind of the data is never perfect data as well, because it depends on what is actually being collated from the populace, right? So oftentimes you can see where I don't really feel like that's what people are seeing or that's the general experience from certain people. And then you got to cross compare that to how they actually aggregate the data. If they're like calling people on the phone or something, you might get a certain demographic that might be differential to what you're actually seeing from general populace that may not like answer the phone per se. Great example was during COVID. So it's a very there's no one way to do it or one right answer. That's kind of why it's also a successful, approach to trading the market. Still, even macro used to be much bigger. I guess 10, 20 years ago, macro was like king. Now, since data has come in, the alpha has definitely come down. But yeah, it's one of those things you kind of have to do the work yourself to a degree, at least to actually generate trade ideas, etc. You can't just go off like okay, we got data today. This is what the economist forecast is going to be above or below, and you just like flip a coin, right? I don't know what else you have to say on that, Dirk.
Yeah. It's. I would always stay away from trading around the actual news because it's a coin flip situation. There used to be a trading strategy back then which was quite successful. Actually, know a guy who made millions with that, and he would like have his own trading server very close to the forex broker, and he was able to very quickly analyze, is the number that came out different, like NFP, for example, is there a big surprise to the upside or downside? And then the edge was he was able to execute the trade a couple of milliseconds before the majority. And so it's like latency arbitrage in a way, if you want, not really latency arbitrage, but you are faster. But I just a couple of months ago talked to him and said, "Are you doing the same stuff?" He said, "No, I'm not. I'm not doing anything anymore because it's just so crazy. You're hunting for nanoseconds now there." So you have to ask yourself then, of course, can I compete with this? The probable answer is no, except you have like tens of millions or hundreds of millions of budget on your hand, that you can design the algorithms and the infrastructure for something like this. So don't try to compete with this. It's better to look at something like news is released. What is price doing then? Is it moving up? For example, we're back to the deviation bands. Is it moving up somewhere where there could be like a sign that it's reversing? Looking at dollar yen, for example, right now, like something to look at later would actually be here the -1 sigma. Like a -1 sigma, the 1 sigma. I always just say -1 because it's on the lower side here to differentiate. And so around like actually the price we are right now 153.30, something like this. However, what I wanted to say actually is I haven't looked at dollar yen on the daily chart for quite a while. I just noticed it's like interesting how we are surfing, how stable the trend really still is. from when we made the bottom last year in April. It's like whenever we retract to the -1 sigma, of course that looked different then, but in a hindsight now, it's like people are buying into that carry trade again, I have a feeling. So I agree very much with you, that probably we're going to see more upside in the upcoming days again for dollar yen. Maybe until the 0 sigma around 156 right now. Maybe even we go all the way to the 1 sigma, so to 160 back. It's a total possibility.
Yeah. So
this insight is like very important for if you are scalping something like dollar yen, if you're like trading on the lower time frame, you can directly translate this like, what should my preferred direction be on the lower time frames as well?
I was actually reading a Reuters article the other day that, yes, the carry trade is very obvious, but funnily enough, most of the participants haven't actually been jumping in on the carry trade per se. It's more the speculative aspect.
Yeah.
And then the carry trade is just the bonus.
It's like kind of like this self-fulfilling prophecy, You gotta be into invest. There's like, at least if you want to play major currencies, there's no alternative currently to that. Well, there is with Aussie hiking rakes, of course, that potentially could become carry trade as well.
Yeah. But yeah, so that's one of the things where I think watching this, like, yes, we do have, like I've said, I think it will be much more of a graduated downside. I think the market is very willing to call the bluff on the Japanese trade in general. They will want to see the US actually fully coming to the board to actually knock it down and intervene, not just Japan, Ministry of Finance, Bank of Japan jumping in. I think that's what will be needed to really knock it off, because it has been very speculative. Now, at the same time, because it is slightly more speculative even than the carry trade, that actually sets more tinder under the pot for it to crash even harder, which I think was also exemplified by them touting the certain rates where we saw dollar yen drop from 159.5 down to 152, right? 700 pips of speculation of just rates prompting. I think that's an exact example. So obviously the next port of call on the downside is immediately going to be that gap that we have never filled for months now, right? So that'll be the first port of call, and then eventually below 140.
You're talking about this one here, probably, no?
Yeah, so once it does kick on, so that'll be the immediate push, right? And then they'll look to establish the hold in that area. So below kind of some of the structural levels you can see, and eventually weed the currency off a bit lower based on where, say, the Fed goes, that kind of thing. So
that type of event would be kind of in the same category as this one and this one, no?
Yes. Yeah.
Yeah, I can see what you mean there. And also like kind of points to an overall shift in market momentum, like long term for dollar yen, where we had like, high moving upwards trajectory until we eventually topped out at almost 162. And since then, we have this sideways, slightly structure to the downside again. I mean, you could argue like that this, for example, is a series of lower highs. This one doesn't fit so much into this, although it's pretty much at the same level as this. So, pardon me. I kind of buy into this, honestly speaking, that like the narrative is slowly changing, but because there's so much money tied into this, it takes time to change because people, are very unwilling to adapt to a new world. order, so to say.
I think that's as well why they have to do it that way. Because if they did it too aggressively, it would just be unwound very quickly,
Yeah.
and
Nobody
end up
wants something like we wake up tomorrow and are trading at 140 or something, no?
yeah. So it's a very progressive, continual downside pressure, slow, painful, da da da. You know, I think that's the only way they can do it. Which for them, they don't care because they're not trying to trade off this. But for traders, that's exactly what they want because it provides that
Yeah.
pain point that like trade's not really working. Some days we're up. I'm a bit of like capital profit, not just the carry trade. But then we're back down. And it's like there's better options elsewhere, and so that's what they're trying to divert capital to those better options rather than segment it in the yen carry trade overall. So definitely. So we've got a few.
That's such an interesting currency pair, and yet I lost money with this one last year.
I know, dude. It's it's wild.
Very, very elusive, but I think really I need to look at the longer picture there.
I did end up, but there was for that big drop that we had. I kept holding it, and then took profit basically after it reversed another 200 pips higher, and when it looks like okay, we're actually not going to continue, right? And then after that, I actually reversed and went long. So that's where I made up the other portion. But yeah, very difficult trade. But that's one of the things where you can't marry the trade per se.
Yeah,
right? You got to hold the concept, but be flexible within the execution.
And the detachment between where price should trade and where price is trading can be detached for a very long period of time.
Yes. Yeah. The classic markets can stay irrational longer than you can be solvent.
Yeah, exactly. Yeah.
That whole thing. So, maybe a question here.
Oh man, Bitcoin.
I might just have to let my partner in, so I'll be back in a sec. If that's right. Sure. Welcome, Rich.
Welcome back, Rich. First of all,
hello.
To answer the question, do you think Bitcoin still can go down right now? Yes, we have to live with the reality that we are in a downtrend. We are in a bear market when it comes to Bitcoin again, which is natural also. In the 4-year cycle, you will have 3 bull market years. 2025 was still considered a bull market year, although it was slightly negative, I believe. And then you have a bear market year. And I think Bitcoin will still continue to make new lower lows until probably somewhere between August and November this year. Now, does that mean that it's going to be in a straight line, like going down to 45 or 30K or something like this? Probably not. You can see here we are extending a little bit. Actually, we bounced off the -3 sigma here. That's a huge extension. So in between, there will be rallies again back to, for example, 79 or maybe even 85 or 90,000 for sure. But this is going to be just a series of new lower highs. So what you should be looking at is really this structure here. As long as we're making new lower highs, new lower lows, there's no reason really, at least long term. Different story if you are scalping Bitcoin, for example, but long term, not a reason now to necessarily be invested in Bitcoin. However, I also think it's a good chance to build up slowly position again due to, let me look for the correct chart here. Due to the simple fact that we've broken out of the long-term logarithmic regression. What is a logarithmic regression? It's like a mathematical equation trying to formalize or describe in a math way markets that are moving very fast, very high. So in the case of Bitcoin, long-term going from basically nothing to 125,000. You cannot really describe this with a kind of like standard regression channel anymore. So you want to have a logarithmic regression for that. And we've broken out to the downside already now of this logarithmic regression channel. We've done this in the past, but usually very long term means like the next 3 years, by the way. This has been a good time to buy Bitcoin. So if you are like in for the long ride, if you don't mind like buying now and potentially seeing it go down to 50 or 40 or 35K, something like this, these are good prices. What you shouldn't do, in my opinion, you shouldn't try to time the market. It's extremely difficult. You're not going to be able to catch the very low. You're not going to catch the very high. Like my average exit for Bitcoin in the bull market was at $93,000. Yeah, when we were trading at 125K, was like, that could have been a fortune more in profits there. But in a hindsight, it was a good exit, especially if you entered between 20 and 30K. So if you want to be in for the long ride, a good strategy would really be to DCA here, like on a monthly or weekly basis, slowly start getting back into the markets. Because I remember very well still, it's a shame Jonathan is not here right now, when Bitcoin was trading at $16,000 or $17,000, Jonathan and I were doing a live stream. Was it for the Fivers back then already? No, I don't think so. Doesn't matter anyway. And, we were telling people like, hey, this might be a good time now to slowly get into Bitcoin again. And we had all those comments. No, it's going down to 12,000. It's going down to 10,000. It's going down to 8,000. And that's very typical. No, we like try to time the bottom. But when a new bottom comes in and when we think it's going even lower, it's this typical cycle of FUD. I think it's going lower. I'm going to miss my entry. And then you have it on the opposite again when it tops out. The FOMO cycle, no, it's going higher. I'm afraid to miss out on more profits. And so the truth is, like my advice is I just bought some Bitcoin again for my long-term portfolio. Because of
65 to 50K.
Yeah, that we broke out that to the downside.
Very nice, very nice.
And as long as we trade below the logarithmic regression, the lower green band that is, I'm going on a monthly basis to add to my long-term portfolio with the goal then in probably 3.5 years from now to sell it again.
Yeah, I think me and you had this conversation yesterday or the day before, Dirk. I'm thinking the exact same when it comes to Bitcoin. Over the course of the next 12 months, I'm going to be refilling my Bitcoin long-term hold portfolio, which I haven't done probably in about 3 or 4 years.
Yeah, it's like, honestly speaking, it's a no-brainer, but it's easy to say that if you've been hardened by like 3 bear markets already that I've lived through and you're used to, well, it can go down 80 or 90% basically. It's easy to say that now. And
Mate, I still remember like 620 back down to 140.
Yeah.
Like, like, that was
and back then it like tend to happen within hours, no? I mean, now it's like more reasonable if there's like
3 days,
like something to say about being reasonable when it comes to crypto, of course, but we don't have those insanity anymore where it basically can just disappear or go down to $1 within a couple of hours.
Yeah, I don't think Bitcoin's being rug pulled anytime soon.
No, not really. All right, guys. So I'm going to get my lunch now. Thank you for sticking with us for the past 2 hours, and going to hand over again back to Richard and William in the more than capable hands of Richard and William, that is, of course. And yeah, thanks LJ for being with me again for the past 2 hours, and take care, everybody. Remember, NFP is coming, so you want to think twice about being in those trades. And yeah, see you again on Monday. Bye-bye.
See you, Dirk.
Thank you, Dirk. A good one.
See you again, friend.
What's up, LJ and William?
Good day and Rich.
How we doing, crew?
How y'all?
Good. Yeah. How
Let's go
y'all
to,
doing?
Yeah. The richest.
Dirk
Any
LJ.
trades? Anything interesting? Any juiciness for updates for me?
No, I'm out of all trades at the moment, waiting for NFP myself. So I did have trades on last night, which was long Aussie dollar, long Euro dollar. When we were on the Discord with Akram, they've now come through. I am in one singular trade, which is a short on Euro dollar. That's it right now.
Euro dollar short.
Yes.
Yeah, nice. Especially with the breakout under that consolidation, it was stunning. What happened with? So I'm using Vantage Markets, I believe, for Euro and for the pound. What happened around about? Let me try and find the time. It was about 10. Do I say 10 o'clock? About quarter to 10, 10 o'clock. What happened? It seemed to have gapped. Did we have any news, or was it just a data gap?
Wait, what's this on? Euro dollar? Is that what you're saying?
Yeah, euro dollar, and then we had pound dollar. We also had a gap between 9:45 and 10.
So it would be 2 hours after my time. So what, here?
Yeah, I don't see anything. Nothing on the Fivers GU or
I don't think so. So I will say typically that's when the majority, so basically the majors of Australian markets open. So hence you see right here, 10 o'clock, we got this major pop through here. It's when sort of Asia, New Zealand's already been open, that's very small. Then you get Sydney, Australia opening, and then you're going into China and then Japan after that, right? But there's no gap, I will say. Right?
Yeah, just seen Offie24 saying there's a data gap in Vantage.
Yeah, it might just be their feed.
Yeah, possibly. Because I got that video. Second.
I say it does happen from time to time.
Yeah, of course. Yeah. It's to be expected,
LJ, with your Euro trade, where are you aiming for? So your 1.
So yeah, first port of call is 118.95 or so, like just above there. It's about 96. Now, ideally, I'd like to see this actually run further, capitulate, come right off. Next, so we say like TP1, TP2 type aspect. TP1 would be 2, so 1, and then potentially 3. My good old Picasso freehand drawings for you guys down here. So the levels are basically 118.
Dude, I love the What's one about?
No, it's good. Oh yeah. You love it, don't you? Don't you, Will? Talking rubbish. 118.70.
What was that about, by the way?
118.40. You were talking rubbish about the Picasso. You're like, oh, we got some Picasso stuff here, whatever. I was like, wait, is Will talking trash on me right now? People drawing on the charts, like
talking smack.
Like this is talking
absolute garbage.
Like this is Will right here. Like right, that's you. And you're like
as you can see, guys, clearly the Picasso of the crew.
That's him, not a legend.
There you go, right there. That's you.
Kong. It's
cool, man.
That's it. That's Will, guys. Perfect image.
Vincent Van Gogh put another shrimp on the Barbie.
But yeah, so we'll see if the euro dollar kicks off. Obviously, I've talked to you guys about how euro dollar or euro in general running much higher is very stretched as far as positioning to actually give the impetus for actual volume coming through the market to actually drive prices higher. There's a large bit of sort of full investment to a degree. So it doesn't mean we can't go higher because we're not at all-time records for longs, that kind of thing. So you can definitely go higher, but it just will be more of a grind, and we definitely have the susceptibility for larger drops versus those runs higher overall. Once you get above towards this 118 and a half to 119 plus, that's sort of where that friction comes into the market, put it that way.
Yeah, nice.
Sounds
What
good.
are you going to hold through the news, or are you expecting this to hit like before?
I'm considering taking profit here, to be honest. I don't want to hold through NFP today. NFP is very weird. Like I was saying, the economist forecasts are much higher than I would like. We've had a bunch of rhetoric about the jobs numbers coming in worse, which is then surprising that that's not quite fed into high positioning. We're also going to get a bunch of revisions for the prior payroll numbers. So it's going to be like a slew across the board of variance. So I must say, this is probably one of my most hated payroll numbers of the past year or more, in terms of like prior positioning or general lean of prediction. So you could take the economist forecast prediction numbers as being a bit high, which I do still think they are. But I don't like the fact that they are in the specter of we've had a lot of rhetoric around the downplaying of the actual numbers coming out. So that's what gets me kind of weird, especially amongst the administration right now and sort of their, I don't know, effect that they've had on a bunch of these economic numbers and those in government positions that are actually calculating this stuff. It's just the whole thing is a bit odd, so I don't like it. So this is probably my main payroll that I will sit out of. As you guys know, I do like to join a payroll number here and again when things line up or a central bank decision, but not today. So I will say be careful.
I would always say be careful around NFP. Always.
Nah, screw it. Full port it.
Yeah.
You're
Just
either
100
do one or two things. You're either gonna make money or lose money.
or lose money. Yeah, literally that.
There's only two outcomes when you do that. So
Oh
one of them
man,
involves losing an account.
there has been so many times that I've been tempted to like go on a live stream, like open up a random YouTube channel and just like go live and put $100 into an account and just full port NFP and just see what happens. Or like I set two different like personal accounts up with NFP, like maybe one with Vantage markets, one with Oanda markets, and just like full port hedge them, just see what happens.
How'd that work
Yeah,
out for
go
you?
ahead and do that. Do it.
Yeah, but
Do it.
then no, just
Yeah, just
no.
do it. Don't tell us to full port, and then when you say you were thinking about it, stop thinking about it and start doing it.
Yeah. So how did I decide to enter when EU is ranging? How do you feel comfortable setting TP beyond the range? So for that exact reason, we've had this massive uproar through here. We've broken a couple of these highs. There's now this this is the specter range, what I call, right? Where we've kind of had an excess of the trading range, but it's not necessarily like high volume committed trading lots. It was more after we had like a break of structure, certain key levels, and then stops get run, and then the price just explodes. Right. So I always treat these areas as a bit of a misnomer. So I tend to just cut off the head of this high level. So once you retrace and find some of these heads, I say this entire area from here is kind of dead. Right. So it's about 119.80. And I treat that as kind of more of the true price range. Right. So this is the extent of price after stops being run. Etc. There was very little time that market participants actually agreed on the price of the euro in that range. Right? It's literally a couple of hours, which means nothing in the world of finance. Right? Now, this range where you get back and forth for a day, that now says a bit more. Right? Okay. So beyond that, given the recent price range after the run up, basically the recovery of the euro from that downdraft, and last week's chaos with Thursday, Friday, as far as the market scaries, with the various bits and pieces that we had going on, NASDAQ, stock markets, everything falling, very much a risk-off attitude, even gold, silver, commodities, safe havens falling as well. We've now had this recovery up here. We had the peaks on the euro, slight downtick through the Asia, another pick up,
Excuse me,
downtick
guys,
again, pick up higher. We've pretty much got like a bit of a triple top through here, right? And so since we've got these 2 wicks through here, I'm comfortable taking a near-term downtick on this, especially given, I think I had it before. Where is it? So let me see. Feb. I'm trying to find the piece for you guys. I think it was this one. So yeah, so speculators have established one of the largest ever bets on the euro rising. So $24 billion wager has been built for euro dollar to surpass 120. So many potential sellers, harder for euro dollar to sustain above 120. If 120 does buckle, long positions will provide drag and slow gains. So even up through here, very much you should expect slightly slower gains overall. This also comes back to Monday's piece that I presented for you guys. So this comes back to it as well. 2023 longs exceeded 25 billion before 112 to 105 euro dollar drop, right? 122 to 95 cent fall was followed by establishment of $31 billion long in 2020. So right now we are pressing the upper end of some of these prices. Now, like I was saying before, that doesn't mean euro dollar can't actually push up into 120 again. But the point is that going from here, it will be much slower, and especially then ahead of something like NFP announcement, and we've got kind of a triple top after a very, very strong extended push. Then I would take that trade based on that technicals of the triple top, as well as the sort of macro fundamental backdrop with NFP, ECB being neutral, and then the general positioning of the actual market. That as far as a day trade heading up to NFP is of reasonably high probability. So
sounds mucho interesting.
very interesting.
That's one thing I want to get into a little bit more is the depths of the market. Like technical analysis is great and all, but so like my dad has started really sort of going into a little bit more depth when it comes to a bit like the macroeconomics, a bit like the sort of what you really dive into, LJ. And he started talking to me on almost on like a macro level, and only about the pound, like only about what's going on in the UK at the moment, because obviously that's what he's interested in, being in the UK. Yeah. And because he knows I'm a trader and I love him to bits, but I don't think he fully understands what I do after 7 years.
Yeah. Classic.
That was standard, mate, innit? And so, he's like, oh, like I was telling him about the pound. I've been earning a bit of money with the euro and with the pound. And we started speaking about what's going on with all the files being released and what's going on with the current prime minister and all that good stuff. And he starts talking to me on like a macro level. I was like, Dad, like I don't really do fundamentals. I'm more on the, technical analysis of the charts. And, like, it's one of our areas where we enjoy talking about, but it's still, even though it's in the same industry and the same passion, we're still finding we're in a room where we don't actually know what each other understands. So I'm starting to dive a bit deeper into the fundamentals. But dude, it's deep, man. It is deep. I'm trying to take it like a slow, steady chunks, digestible chunks. I feel like I'm learning how to trade all over again.
It just gives you that extra a confidence in the current momentum, and then a potential idea of what threats from like a risk management standpoint are potentially in the future. So those can either be threats as far as risk management, making sure you don't have extra drawdown, or potentially could be a double bubble, which I love, the double bubbles. That like boon type effect that in the future are actually going to get things rolling into your direction, plus the technical.
I feel like it's going to help me a lot with my swing strategies as well, because I've got very little confluences with my swing strategy. It's very basic, 1 or 2 confluences, bosh, I'm in it. And I can be in it for weeks or months. And I feel like with a bit of macroeconomical data in my brain, where I can analyze like the overall trend or like what's going on globally with that asset I'm trading. Predominantly, a lot of them are US PIS, but as you guys know, I do trade EJ. So if I had that macro understanding, I feel like I'd be able to add that as a bit more of a stronger confluence. So it's something that I'm looking into.
And the good thing is, like, over time, it gets stronger and stronger. It only increases in the value of what you do. So it's the same deal when we had the trading competition last year. If you go all the way back then, I think Akram clipped one of the things from way back then when I was talking about Aussie dollar going, from here, we're basically going up to 70 cents plus in Q1 next year. And that was 6 months ago. Right, and saying that the UK, like the pound, will be in the doghouse, right? And then we, tanked from there down to 133, and so that's when you start to build that back knowledge of the whole complex, where you can actually start to see,
exactly,
3 months, 6 months in the future. But it's not going to come immediately. Immediately, you might find like the next week, the next month, 2 months, 3 months, but eventually, once you've built the whole like codex. It's like having a library in your house where you've got all that now stored in your head that you can actually project stuff forward and see it come through. And then it's also very satisfying, very gratifying, at least I find it that way, of trying to pull those puzzles apart, pull all the strings, and then see it actually play out. And when you do, you're like,
oh, yeah, look at that, I was right.
Yeah, it's cool. It's fun, right? It's fun.
See, so my goal is to be able to have
the thing.
Yeah, exactly. Yeah, exactly. Like my goal is to be able to have my dad go, didn't know that. Like at the moment, because like I'm still learning bits of it, I'll say something to him. He goes, "Nah, you got your data wrong." I'm like, "How?"
That's the other thing with non-trader type people. Sometimes they don't get it, or they don't want to hear it, even if you.
Yeah, I was gonna say I think it's the latter.
Yeah, all the reasoning, all the actual facts. They're just like, no, I've decided what I want to think, and not.
Yeah.
So that's another.
I think it could be the latter, mate. To be fair, like I've said to him stuff before, and he was like, "No, that doesn't sound right." And I was like, "No, I'm pretty sure it is." I was reading this the other day, and then I was reading that the other day, and then I put like 2 and 2 together with that, and then I was reading that a couple of weeks ago. I was like, "It sounds like this could happen." He goes, "No, you definitely got your facts wrong there. This is actually happening." And I'm like, and it just blows everything I said out the water. I'm like, am I just absolutely full of crap? Am I super wrong? Like, yeah, fair. Yeah, I was like, everything I've learned, is that just a waste? Like, is that just wrong? But yeah, man. That's when sometimes I think, oh, screw it, I'm just sticking to my charts. You know, if I'm wrong, at least I find out in like 3 hours' time.
Yeah. So that's the thing, but it's good fun. It depends how you
Yeah.
do it. You can't take it too serious. The same way with like people talking to you
Yeah,
about
exactly.
stocks. You're like,
I think
oh,
the
like,
luxury. Yeah, I think the luxury of trading as well is once you look, you're never truly going to master the markets, but I think once you've found a way that you really enjoy and it suits you, you can sort of find a way to challenge yourself further. And like with my day trading strategy, it's great. It's keeping me afloat, should we call it? It's not making me millions, but it's certainly not making me poor. It's making me enough money to be like, yeah, I'm a profitable trader and I'm enjoying my life. It's also giving me enough free time to think to myself, okay, what else can I do? What else can I expand myself into? What like I've got a bit of free space in the back of my mind now. What can I cram in it to sort of occupy more time? And instead of another day trading strategy, I thought, screw it, let's go with some swing trading. And so yeah, that's where the sort of macro is starting to like worm its way into that void in my head.
yeah. The good thing as well when you have those conversations that someone can say whatever, and you can be like, all right, well, I've taken my stance, and we'll see what plays out.
Yeah, exactly.
When you do get good at it, like down the line, you'll be correct, and they're like, oh, right?
Oh, crap.
So you don't even
Yeah.
have to try and challenge them. It just speaks for itself. So that's one of the good things that it's very
Just
difficult to
financial
do.
aura farming.
Yeah, but you build that credibility, that kind of stuff. So I was just going to answer this. So sorry. So do I use COT reports in my analysis? So I do look at positioning with certain things. Same with the options. So right now I'm showing you guys options strikes. For instance, this is for Wednesday. So I do look at options positioning, 25 delta risk reversals, that kind of stuff, and general positioning from the futures. Just like I brought up some of the pieces with the euro earlier. Key to remember, especially with the COT report, it's always very much delayed. It's slightly lagged. And the thing, particularly in FX markets, is a day or 2 days can be basically the equivalent of like a week or 2 weeks or a month in like stock markets, right? So what I'm trying to say is the information fidelity in FX markets is much quicker. It's much more rapid. So sometimes when you get this information, I do look at it in general. So the position changes, that kind of stuff. But it will be a bit lagged, a bit delayed. Kind of like looking at your, just to use an indicator example, like RSI's, moving average, that kind of stuff. It's got like a bit of a lag element to it. So as long as you take that into account, use it as like an interesting piece of like thought-provoking element. But you might want to combine it with more of like you would with an indicator, like a stochastic is going to be much more real time. So the same way, then I go from that and then looking at the options profiles. The options profiles are changing hands like every day and the rest. So you can see the differential from where we were, where we're going, and then the shifts each day, right? And then obviously combine that with any kind of big macroeconomic shift or fundamental shift, whether it's Trump tweeting something, talking about tariffs, or the Fed, or something else, whatever big implementation or a geopolitical event, right? So if you take each of those into perspective, then it gives you a holistic view. But any individual one won't give you a direct indicator. So
Yeah, nice.
yeah, I will have to say bye to you guys, sadly.
Goodbye.
Okay.
Today.
LJ, can you stay on for like 30 seconds? I just got to refresh my page real quick because nothing is coming up and showing on my stream screen. So if you give me 2 seconds, refresh my page and I'll be back.
No, that's fine. That's good.
Well, I was about to say we're still here, so
no, that's fine.
if you need to go, mate,
No worries, brother.
I think I'll be okay.
No, that's right. I can hang around a bit more. My partner just got here. That's all. So
Oh, dude, you
I
can
can hang around.
go and open up for her.
That's right.
Don't have her, like, ring the doorbell. Bing, bing.
I already let her in. She's fine. She's in the.
Okay,
in the
good.
That's good. Yeah. No, she's
Awesome.
So,
Okay, so I
have you
see.
been in any trades? I will say, Rich.
I'm gonna be that guy. And I'm gonna show you. I
Being too
took
busy.
no. I entered your EU short
Oh,
on the stream account.
bro, you might. I mean, dude, I got in way higher, dude. What are we talking about? You might be a bit late. Like, I got in at
No,
119.
dude.
19.
This is a scalp, dude. It's not even 10. It's 10 pips.
Okay.
I'm willing to close it at like 5 pips.
Okay.
Yeah,
All right.
it's a very.
To be fair, I was nearly that guy. When
I'm aiming for this.
yeah,
So 118.97. So if I can get there, so it's something like this.
That is literally where my terrible little drawing is. Literally right there. So yeah. Fair.
So I'm just stealing. I'm stealing. It's the stream account, so it doesn't really matter, you know. This account doesn't really matter, so it's for fun. Let's just put it like that. It's to do something.
valid.
Because I'm doing admin work in the background, and as I'm doing admin work, I'm like, okay, I need to keep this account active.
Thanks for the trade, LJ.
Let's just take a trade so that my 30-day counter like resets.
Fair. Well, then no worries. I was just concerned. I was like, rough. Like the risk reward profile is a little bit different now, right? So,
yeah, it's okay.
but that's
it's
okay. Yeah, you got that.
Like we're still a little bit away from NFP. So I will just, like I said, I'll close it when, like, even if it just like goes and hits stop loss. So what? It is what it is.
Yeah.
Yeah.
No, I think you should be right in there.
It would have been a little higher up. I was looking around 19.08482. Let me have a look.
You know,
my entry?
there was a perfect drop-based drop on the 5 minute, exactly here. So we had this low from over here on the Tokyo session. We broke through it and exactly retested on it, as well as there's the base after a drop and another drop.
Yeah.
So you could have, if I had like paid attention, I could have gotten in there and looked for, I don't know, something like this for like a 1 to 1.5, something like that as an example. But anyway, just this is for fun. This is a for fun trade. Like
all right, fair enough.
Yeah.
Yeah.
There's a risk that we get a pick back up to about at least 119.06.
Well, look at that. I just closed the trade.
Right. So, well, you got some profit. There you go.
Dude, it's a little scalp. It's I haven't been paying that much attention to the live stream account as I should have. Because there's so much stuff so much admin work in the background. And I'm like, okay, I have to do this now. So I can't always just focus on just the trading. So every now and then I just pop a trade.
It's just not good enough. Not a good enough excuse. Sorry, mate. Yeah. Be better.
What do you mean be better? Do you want to be put on disciplinary leave? I'm joking. I don't have that power. I don't know.
I mean,
Hasnain is saying, give away me 5K account. He was very adamant.
You know what? I was about to bring that comment up. I was about to bring this one up and say they never read our comments. Yeah. I was actually going to say we do. We just don't read your comments. And the reason why we don't read your comments is because we don't read spam comments.
Yeah.
Well,
stop spamming.
I was gonna say, Hasnain, that if you rock up next week, Tuesday, the 17th, we have a 10-year anniversary event. And this 10-year anniversary event, we will be giving away $2 million worth of accounts and giveaways and whatnot. So come, if you're not going to get an account today, because I don't have any accounts to give away today, unfortunately. But you can rock up next week, Tuesday, from 2 o'clock until 4 o'clock GMT, and you can potentially, maybe, win an account. But you have to be there on the day, and we don't just give the accounts, we give a free chance for everybody. So it's going to be a random number generator that is going to be utilized in order to give away the accounts. But you have to be there to, participate. So come and join us on the 17th. We've got some awesome, not only giveaways, but we will have some speeches with the CEOs, with Mickey and with Sol, as well as Gil Ben-Hur, the person that actually established and founded the Fivers. He's going to be there as well. And then we've got some awards that we're going to be giving out to members of the community. 2 million that's huge. It's a lot of accounts. And the thing is, it's for free. You just rock up, you be in chat, be active, ask questions, hype us up, drop a like, drop a subscribe, all of that stuff. And then you can get entered. Just on the day, there's going to be a link that you just need to click, and then you enter, and there you go. Bob's your uncle or your aunt. And you'll have an opportunity to win some of the prizes that we have. And then on top of that, we will also be announcing one or two things that people may or may not have been asking for the longest time. Which is very exciting. And not only that, but we'll also have potentially some very special offers for said announcement. So just stick around with us. Unfortunately, Hasnain, I can't provide you with an account today. And yes, we do actually read the comments, but sometimes we do get into a little bit of a chat, and then we need to kind of finish that process.
It's actually why I refreshed my page, is because I couldn't see your guys' comments, and I wanted to be able to read them out.
So, Sarah, in the description box below this video, there will be a link. And then also, we will post a link in the chat itself for that event. So if you want to, I can show you here on the Fivers homepage. This is what you'll see. There's a little, hey, there was Will and I and Jonathan. We were on this little video.
Where am I? I'm not included. I feel left out.
I think you're at the bottom right. I think you're at the bottom right.
Just unseeable, just out of screen.
Yeah. If you click on this section up over here that says 10-year anniversary, if you just click on that, it'll go to a page that's going to have that exact same nice, awesome video that's going to be playing. And if you scroll down, you will see that there's the calendar basically for the year. So February, we have the 10-year anniversary. Then March, performance coach courses. Ooh, I wonder what that is. That's also something very awesome that we've been working on in the background. Specifically, Richard Wells. So, yeah. Anyway, and then we have celebrating 10 years on Discord in April. And then we have the May special surprise. Ooh, I wonder what that is as well. And then we have another exclusive event coming in June, and then we have another month of specials in July, August, September, October, November, and December. So all of these, let's call them advent calendars. This advent calendar is going to be filled up with all kinds of juicy things. So if you haven't already, link in the description, go to the Fivers website, go and click on this leadership, this February 10-year anniversary. There's going to be a video that plays, so I'm just going to pause it immediately. Once you've watched the video, click on this Celebrate with Us. Once you've clicked that, it's going to take you to a reminder page. Live event, 1600 to 1800 South African Standard Time. It's going to this date here, Tuesday the 17th of February. the time is going to be based on your local time. So this information here, I'm in South Africa, so it's showing South African Standard Time, but it's going to be 2 o'clock until 4 o'clock GMT. So if you click on the read more, it says there's going to be exclusive offers, a new program release, early access. I wonder what this is. We've got the leadership keynotes and then the awards, as well as the $2 million worth of giveaways that we're going to be doing. So I don't know how many times I'm going to have to kind of like shamelessly plug our 10-year anniversary event, but right there.
Many times.
You can just add it to your calendar, and there you go. On the day, rock up, join us. It's going to be worth it, guys, honestly. And then questions such as this are going to be answered, hopefully. Potentially. Yes. Anyway, that's my shameless plug.
Yeah, so we got a full year of stuff going on for you guys. Like Rich said, full advent calendar. So you guys keep dropping in. It's not just like a one-time thing. We're going to have bits and pieces drop throughout the whole year. A lot to give you guys back for coming here, supporting us. Hopefully you guys get a bunch of value and everything from us as well. And this is our way of giving back to you all. So there you go. Like Rich said, follow those links. Put it in your Google Calendar. You'll find what the exact time per your time jurisdiction
Time zone,
is. There you go. So,
Shot.
beautiful.
All right. Pretty.
I will say I will now have to dip out. So I'll see you guys tomorrow. But for now, adios. Ciao. See you tomorrow. See you guys. See you, chat.
Cheers, mate. Cheers, LJ.
Good luck with NFP. Don't get caught out. Be careful. Trade the aftermath. Okay. All right, guys. All right. See you then. Ciao.
Ciao, LJ. Have a good one. All right, that was LJ, and earlier we had Dirk that left us. Thank you very much to the two of them for holding the fort. Will, what's up, mate?
Yo, what's good, my man? I just realized that was a close one. I did mute myself, but I unmuted it.
I could have sworn I saw your mouth go.
Yeah, it did. No, it did.
Earlier.
Hold on, it did.
Ooh.
Yeah. I'm trying to sort my light out. Do I look okay?
Krishna saying, instead of giving giveaways, please make offers like buy now, pay later after passing. Well, we do have one account that is like that, and that is the bootcamp account. So the bootcamp account, you're basically paying, let's say, 15% of the account's cost upfront, and then you only pay the other 85% after you've completed phase 3. So we do have an account like that. But here's another thing. The high stakes accounts, you get refunded. So if you passed the account, let's say you bought a 50K account, you pass the account, you will get refunded your evaluation money along with your payout. So your payout's going to be 80-20 split, and you will still get your initial account fee back.
Yeah, it's more like a pay now, get refund later.
So you're saying the rules are strict, but the rules are strict for a reason. So the thing is, we want to ensure that we have the best traders, first and foremost. And secondly, we want to make sure that everybody that is participating in these evaluation accounts, even though the rules are strict, that when you get to the funded phase, that you are not a gambling kind of person, that you have very specific rules that you follow that is there to protect not only you and your capital, but also the company, the Fivers, and its capital. And remember, all of the traders that are part of the funded portion all go into one pool. And then we all trade a portion of that pool. So if one person is being very gambly and doesn't like the rules, then you're going to go against what the majority of the already established traders are trying to do, which is not a good thing, in my opinion. I just noticed, why did the high stakes 20K and 60K change to 25, 50K? It's purely for the scaling. It's so that we can go from 25, 50, 50, 100, so on and so forth. It's just the numbering. It's also cheaper. So it goes from 70 to 75, 75 to 100, that kind of like thing. So it's just for the scaling. It's the only reason why it was changed.
Yeah. There's a question here. I don't know much about Apex funding, but can you summarize the Fiverr's USP over others? Well, yeah, it's quite easy. They've got me and Rich. That is a USP. No, all jokes aside, though, like I said, I don't really know the whole USP or the selling point, the SP for others. But the Fivers, they really do push and support the community with all sorts of up to date. I cannot stress enough how up to date they try and keep their learning material. They're always active. Creating all sorts of like voice channels in the community, in the Discord, making sure that you guys are staying up to date with us. Not only that, we're live every single day, pretty much all day as well. You know, we haven't really gone too much into New York session yet. It could be something we look into in the future, but we are opening up more doors into the live stream. And you're meeting more of us, and you're getting to spend more time with us, where you get to ask us absolutely anything regarding the prop accounts, regarding trading, regarding all sorts of different education types, different strategies, as well as the fact that what Rich has just shown you here, if I'm correct, we have indeed been with several awards with prop firm match, and we're still getting several awards, and we're at events as well. You know, so if you guys were in London in September, I was actually speaking in London. Where also the CEO of the Fivers, Sol, was speaking, you know, and Mickey was speaking as well over in Trade the Pool. So, guys, we're very present. We put our face to it. We put our face to the name. You know, you can speak to us. The CEO, Sol, comes on live stream as well to speak to you guys live, where you get to ask him all sorts of questions. So, yeah, the USP couldn't be more obvious with the Fivers. It really couldn't be.
Yeah,
I'm going to go
to summarize all of that, we literally have awards from a third-party independent auditor that proclaimed we are the highest rated prop firm. We have the best customer support. We have the best trading conditions, and we are the most user-friendly prop firm. And not only that, we've been in the industry for 10 years. 10 years. Let that sink in. 10 years, and we're still adding things. And we're consistently, not in the beginning, but like consistently, we have been proving that we are the best prop firm. When it comes to CFDs, there's no prop firm that even comes close to us in terms of our reliability, our consistency, and our ability to pay our traders. So if you see somebody popping up into the chat saying, oh, Fivers is a scam, how would the Fivers have survived for the last 10 years if they were a scam? So just let that sink in. So just, yeah, like I said, just let that sink in. So yes, I work for the Fivers. I do. I also trade with the Fivers. Yes, I do. I also trade with other prop firms. That I do as well. I also have my own capital that I trade. And I can say with my opinion, without a shadow of the doubt, best prop firm. Best. And when we release the futures section, I can guarantee you that based on what I know from the Fivers, that is going to be the best futures platform as well.
Mm-hmm. Yeah, 100%. Well, that's why it's taken so long, guys. That's why, you know, we're not just going to release it to you guys and go, there you go, deal with it, do what you want with it, go trade and enjoy it. And I don't know, enjoy. It's not like that. It's a case of we're going to keep this until it's ready to release. We're not just going to release garbage to you guys, because our reputation matters to us. Our presence matters to not only ourselves, but to you guys. And not only that, but we want you guys to have the best time and most optimal user-friendly experience with us. That sounded really salesy, but you know.
Please enable the English captions. I will have a talk with our producer about that. What I do know is that once the live stream is over, you should be able to just click on the closed captions and you should be able to change it to English. We do also have a Portuguese channel as well, YouTube channel. I do believe that their description is in the box below as well. Pedro is the lead there. And then I believe that we have an Indian channel as well. So if the English ones, if we cannot get that sorted, then I really apologize. But we're going to look at how we can get the closed caption English ones, or whatever language that you need to have your English caption in, or at least your translation in, for that to work as well. Krishna is saying, how many lots should be taken on a 10K account if I trade gold? All right, cool. Let's go through that very quickly. First and foremost, Krishna, go and get yourself this thing. It's called the earnforex.com position sizer. It's an EA. What you will see here is I'm going to go onto the gold chart. So there's the gold chart. I don't have my wait, maybe I can do that. Let's do this. Okay, so you can see here at the bottom that this is the gold chart. Maybe if you just can like zoom in a little bit. I can't zoom for you, but yes, it says XAU USD. So this is the gold chart. This is a 5K account. So here's how you can go about it. Always consider percentile risk. Always consider how much you're going to need to trade in terms of percentage. So if I want to risk 1% of my account, which would be $50 of this account, my position size is going to depend on where my stop loss is, which I first need to go and find. Okay, there it is, it's all the way down there. Let's say for the sake of argument, I want to, on the 5-minute chart, enter right now with my stop loss just below this most recent swing point, and I'm aiming for this top target. So that is effectively a 28 pips to 40 pips movement. So $28 to stop loss to about $40 in take profit. I will need to have a lot size of 0.01. So for a 10K, you just need to double that. So that's why I'm saying, go and get yourself this positionsizer.com, position sizer from earnforex.com, and you don't have to do that calculation at all. You can just use this one. Just make sure that you always select, let's say for argument's sake, 1% or 0.5%. And then as you adjust, so wait, I'm gonna change this to 1. And then I'm going to move this stop loss up. And as I'm moving it up, it goes to 0.02, 0.03, 0.06, and so on and so forth. So that's going to depend on the stop loss that you have. So how much dollar you're risking versus how much of your account that is. So the dollar of my account size, it's 1%. If I risk 1%, it's going to be roughly 0.01, where this stop loss is right now. So it takes away the guessing. So go and get yourself that. Remy, if you don't mind, if you can just paste the link for that into the chat. Yeah. All good, mate. Like being a beginner, we all start here. The nice thing is that years and years ago, we didn't have this stuff. You had to go and calculate it for yourself. You had to go onto a website and use their exact calculations and then input that before you take a trade. And then while you're doing the calculation, the trade is already moving and it's starting to go up against you. So,
dude, you know, I used to work out on average how many pips my movement or my stop loss would be. And then I'd actually go onto my risk calculator on this website, and I would put in these different stages. Like if it was a 5 pip, 10 pip, 15 pip, and a 20 pip, they'd be like maybe my 4 different average trade sizes. And then I'd actually get a notepad and I'd write down these four different sizes on different currency pairs that I trade. And then when I went to execute, I'd have to look at my page and be like, right, okay, I need 4 lots for a 10 pip stop loss, and then I'd actually go and place it and hope that it was close enough to that 10 pip stop loss. And that's how I would use it. Now, like Rich said, that's how you used to do it, and that was if you were smart about it. Now we've just got the luxury of using all these AI tools, which is fantastic.
Yeah, and it's completely free, and it is allowed on the Fiverr's MT5 terminal, as well as the MT4 terminal as well. So what I do know is that with the futures program that will be released very soon, you don't even need this. You don't need this EA at all. It's all of your risk calculations will be there prior to you taking a trade. So you can trade according to percentile risk, dollar risk, lot size risk. Everything will be calculated and shown to you before you take a trade. Tim Sheldrick is saying, that's what puts me off. What is it that puts you off? You allow overnight trades. Yes, we do. We do allow. Apex doesn't allow holding overnight trade. Most are the same. I don't often hold overnight, but sometimes require the option. Yeah, we do. We do allow overnight trades.
And weekend trading, or weekend holding, I should have said. No limitation.
Yeah. So once again, if you go to the website and you have a look at, okay, maybe I should zoom out. That might actually help. If you scroll down and you look at the funds that we, or the accounts that we have, you can go and search for, way at the bottom, where is it now? FAQs. Okay, the FAQ, it's blocked by me here. That is unfortunate. Terms and conditions, there we go, way at the bottom. If you go to terms and conditions, it will take you to the terms and conditions section. And if you scroll down, you would eventually get to registration processes, the account, obligations to act services, evaluations, exactly all of the information is here. And then eventually you'll get to termination is one of them. So on termination, you will see exactly one-sided bets is not allowed. Trading conditions or copy trading from other traders or accounts. Expert advisors which scalp during rollover night, stuff like that. So if you read all of this information, you will get exactly all of the information that you need, stuff that we allow and stuff that we don't allow. And then when you have the individual, so here we also have the prohibited trading practices. It tells you exactly what is prohibited and what is not prohibited. And stuff like holding overnight is 100% fine. We allow overnight holding of trades as well as over weekend holding of trades as well. So it's all in the terms and conditions. You can literally go and read all of that information just by going to the website. I think you're muted, Mike.
Oh, for God's sake, I did it to myself again. Is there a way for a person to invest money and not actually trade? I deposit money somewhere, someone trades, when then we do profit sharing. I mean, that's an interesting comment, but yes, it does exist. I wouldn't recommend it at all. Yeah, unless you're like putting your money into a hedge fund. So unless you're a big like top dog money guy, so unless you're sort of willing to put like $1 million into a hedge fund, and then therefore they'll take it, they'll regulate it, and then they'll obviously put your money and put your funds into a pool where you will get a profit share from it, or you can just put your money into the S&P, into the NASDAQ, into Bitcoin. There are loads of investment vessels that you can actually put your money. But as far as retail is concerned, when it comes to FX markets, commodities, indices, whatever asset you're trading, I seriously cannot stress enough, I do not recommend you give your money to absolutely anyone that's in retail or certainly unregulated in the markets to trade your money, and then you take a profit share. So that's a big no-no, in my opinion. Anyway, look, people do it. I've seen it out there, and I actually know some people who do it, but I do not recommend it. What about you, Rich?
Look, there is a lot of people that make a living like this, where they have someone trade on their behalf. Understand the risk involved. You're putting your faith in sometimes random people that you've never met, and you're giving them sometimes large amounts of capital to trade on your behalf. And then you have to really, really trust that that person is going to follow through with actually giving you the share. And you don't always have the transparency of this person. They'll tell you, oh, no, sorry, this month I made $10,000, but in actuality, they made 15,000, and they're giving you the profit share on 10. So I've heard some horror stories, specifically here in South Africa. So I know that if it's happening here, it's happening abroad. I've heard horror stories. Personally, myself, I would never do it. On top of that, I won't even trade my own family's money. So if my father wanted me to invest money on his behalf, I would politely decline. That's the fastest way that you burn bridges and you burn relationships, because I understand the risk and I can vocalize the risk to someone, and all they're hearing is, oh, you're going to make me money, you're going to make me money. And they don't always know the losses that you go through. So personally, I wouldn't.
When you do sort of explain why they're going through losses, why they're losing money, why there's drawbacks or pullbacks, drawdowns, etc., why there's a bit of a lull in the market, when you're trying to give them analytical reasons and good fundamental analytical charting reasons why potentially they're not having a great month, all they're hearing is, you're losing me money, you're costing me money, I've gambled and it's not worked out well. So it is, certainly don't do it with family, certainly don't do it with friends, and certainly don't do it with strangers. Who are you going to do it with? Companies, institutions, regulated authorities. That's the only place you can do it with, and they're not going to take you $100-$200 unless it's 1.2 or 2 million. So try and avoid it.
Yeah, like I said, I've heard way too many horror stories around that. Obviously, there's a lot of people that are sharks, that they're just waiting for people to give them money and then they disappear with it, and then those victims are going to come and say, oh, but trading is a scam. No, you just got scammed by a person. So once again, if you do intend on doing this, if you do intend to make sure it's with somebody that A, has proven track record that they are a profitable trader, first and foremost. Secondly, it's somebody that you trust, somebody that you know is not going to run away with your money. Because remember this, profits and money make people do stupid things. Seriously. So I had a friend that was a very nice guy until he kind of got a little rich. And then all of a sudden, nobody around him was good enough. So that same concept applies for once people start getting a lot of money from, for argument's sake, trading as an example. Their true nature comes out. So once again, just caution. I would preface caution like crazy when it comes to doing that. So always be careful. Just wanted to show this. We are less than 70 subs away from 98K. Let's hit 98K live in the stream. Drop a like and help push us out to more traders. Yes, the YouTube algorithm works on engagement. So if people are subscribed and people are arriving on the daily, watching us, engaging, liking, subscribing, sharing, the YouTube algorithm likes this. And it brings us out to more people, and we can potentially help more people either get funded or help them with their psychology around trading, or help them find their strategy, their system that works for them.
Yeah, speaking of engagement, though, I'm not sure if this helps the algorithm. Maybe it does. Maybe we want you spamming. However, we'd rather really good engagement. We'd rather positive engagement. Sorry, man, I've just brought another comment
that's
up.
okay. Yeah,
I was going to say, please stop spamming the chat and to avoid timeout. Let's keep discussions clear for everyone. Thank you. This is really important, guys, because there's a couple of you guys now who have commented saying you guys are ignoring my comment, or please answer my comment. Because some of you do spam, we will ignore you. We'll ignore your spam comment. which then sometimes ends up with someone who has a genuine question being ignored because they've been mixed up in spam comments and we've not been able to see it. So please, guys, don't spam because it ruins it for the guys who genuinely want either help or genuinely want to interact with us and become part of the community. So let's keep this enjoyable for everyone, guys. If you're asking for an account, you're not getting an account today. It's as simple as that. If you do want the chance for an account, though, there is a link in the description below. So yes, you can get an account potentially if you head over to the event, which is happening and taking place next week. If you want to get involved, the link is in the description below, but you're not getting an account today. So please stop spamming about accounts today. And if you are spamming about when the accounts are going to be given away, description.
Sorry, I clicked the star to star this comment, and then I clicked show. Because even if you hover over the star, the show thing still. Anyway, can we trade NQ in the Fivers? Yes, we can. So once again, this is my 5K live stream account, the one that I use on the live stream. NAS 100 is the NQ. So if you go to symbols, it's this Control U, this little, what is this, orange symbol button. If you go to, you'll see this pop-up screen. If you go to indices, you'll see all of the indices that we have on the Fivers CFD version. So we've got the NASDAQ 100, which is NQ. We have Standard & Poor 500, which is the S&P 500. We've got the FTSE FTSE 100, which is the UK 100. We've got the Japanese Nikkei, which is Japan 225. We've got the US 30, which is the Dow Jones. And then finally, we have the DAX 400, which is the Frankfurt stock market. So these are the indices that you can trade with the Fivers. And then when it comes to Forex, you can trade all of the majors, EU, GU, USD CAD, you can trade all of the majors, and then a lot of arguments like AUD NZD, you can do AUD JPY, Euro CHF. There's a bunch of them. You just need to go and check that. Then also, we've got precious metals, which is gold and silver, which you can trade as well. Crypto, we've got Bitcoin and Ethereum that you're allowed to trade on the CFD portion. And then on energies, we've got Brent, the UK Brent spot, as well as the US crude spot as well that you can trade. So that's what you can trade with the Fivers. And let me just tell you this. If I just show you the window. Okay, so NAS has got a 1.5 pip spread, but that's CFD for you with indices. Gold has a 42 cents, basically. So if you're looking at the counter, it's 5,083.4 to 5,083.6. So that's just a spread. But all of the majors, it's either 0 or 1 spread, which is the best in the industry. Like you cannot have less than 0 spread. So you get 0 spread on.
How would that even work?
Can you imagine you open up a trade and they give you money?
They put profit into your trade.
Yeah. And then the commission structure that we have is also standard across all of the currency pairs and whatnot. They use the same, except for gold. Gold has a slightly different calculation, but all of the other ones uses the exact same on the Forex side, uses the exact same commission structure. You don't pay commissions on indices. So, yeah, that information is there. So, LR, yes, you can trade NQ. Shari Khan saying, "Hi Richard, can you share your trading style and strategy?" I will share something with you in just a moment. I just want to go through chat quickly and see if there isn't any more questions as well that we can start, and then we can get back to this one. So I'm going to keep this one start. Oh, and by the way, guys, it's Wednesday today, meaning that later today we will have Sol, CEO of the Fivers, join us potentially to come and do some live trading. So do stick around for that. It should be within the next hour or so. But do bear in mind that he's a very busy person, so he may be a bit late, but he definitely always pitches up on the second Wednesday, or every second Wednesday to come and trade with us. So do stick around for that as well. Let me just have a little quick gander. Are you seeing anything in the comments, mate, that is making... What is this? What is this?
I'm seeing comments that's making me laugh, to be fair. It's Tim Sheldrick saying, "I can trade for you." Shall I send you my bank details? 1 million should do it.
That's good.
MGN, in all fairness, though, if that is the route that you want to go down, then it would be better to go to a long-term investment and talk to an investment banker instead. Yeah, absolutely. Yeah, good shout, MGN. Definitely something you can look at. Hamosh saying, hello, how are you doing, my friend? Welcome to the live stream. I have a problem in verification. I put space in my name by mistake, but I tried to solve it by emails and Discord. It's been a 3 days. I don't get any solutions. Best thing we can do, my friend, is wait it out. Speak to support. I like, it depends on your situation and what the actual issue is. If it's a case of just verification and it's a simple mistake, then I'm sure support are on it, and I'm sure the team in the back end are on it. So just be patient with the team. They have got an absolute array of things going on at the moment, a massive to-do list, especially with the 10-year anniversary coming up next week. So just be very patient with them, and maybe if it's been a week, like, we do apologize for being slow. There's a lot going on. Just maybe send a reminder follow-up email, or just speak to support. Saint as well. I want to answer this real quick, because Saint has, I have noticed, he sent a couple of questions saying you're not answering my question, but I've not seen your question, Saint. Chris, I do apologize. I'm asking questions, man. Check what I asked. Glad that you asked it again, because like I said, I haven't seen your question. Is the 2.5K account ever coming back? That is a great question. You have been so persistent to answer for me to answer this question, or for us to answer this question. I hate to give you this answer. I don't know. Is it ever coming back? Maybe, quite possibly. Not definitely, but not definitely not. That's the best I can give you. Rich, do you have any more insight into whether the 2.5K account is ever coming back?
Well, I will have to go and check. But the last time that I had a look, the 2.5K account was available. It was just no longer on discount. I think it was $22 for the 2.5K account with the high stakes program.
I thought so too, but I didn't want. I haven't looked in the website in like a week or two, possibly. So I didn't want to get it wrong and be like, well, actually, it's still there, and then look like an idiot because it's not. I thought it was still there, but perhaps it's not.
Well, just give me a moment so I can log in.
Absolutely, my friend. You take your time. St. Chris, do not worry. We are on the case, my friend, and we shall let you know if it's ever coming back or if it hasn't gone anywhere. Nasira saying, hello, how are you doing? Welcome to the Fiverr stream. Hope that you're doing well, my friend. Let us know where you're coming from as well. Let us know where you're trading. What is the spread on gold? That is a good question. I don't have the MT terminal up because I don't want it to crash my Wi-Fi.
The spread at the moment is 42.
There you go. 42. Oh, and then you just commented 2 minutes later saying spread is bad, bro. I don't know. I mean, that's a pretty good spread actually for gold.
What spread is bad? Dude,
some of the best spread in the industry.
Spread, if not the best spread in the industry.
Yeah.
When we're talking about one, we're talking about pipettes, meaning the fourth, the decimal point.
Like not even one. Like
no, not even like not even a pipettes. The fifth decimal point.
Yeah. So I don't know. I think the spread is pretty good. I mean, we're pretty well known for having the best or one of the best spread rates in the industry. So. There we go. That's a better question. Why is it so good?
The reason why it is so good is because the Fivers has multiple data feeds. It has multiple liquidity providers that it is a part of. So Fivers has gone and scoured for just the best circumstances under which to trade. So you'll see as well that the Fivers' data feed is fed from multiple brokers. Like multiple brokerages. So the information that we're receiving is just the best that you can possibly get.
Yes.
Anyway, if you go and you get a new order and you say CFDs, and you go to the high stakes program, the 2.5K is there. The 2.5K account is there, and it's $22. So all
There
you
you
need
go.
to do is you just need to log into the hub, go and purchase a new account, or go to at the purchase accounts option, and then you just click on the two-step high stakes program. The 2.5K is the very first option on the left hand side. So it is there. It is there. Just need to go
There
and
you go,
check.
my friend. Yeah, saying your question has been answered successfully, my friend. There is your answer. It's still there. Maybe just refresh your page if you haven't seen it. Navdeep saying, hello, sir. I am from India. Well, welcome to the channel, my friend. First time in the live stream, trying to learn. Well, you've come to the right place, because feel free to ask any question whatsoever, especially if you're looking at any trades, because we are here and we have all sorts of array of experience, all sorts of wealth of knowledge from myself being in the markets for 7 years. Rich, I think you've been 4 years,
Yeah, give or take.
give or take 4 years. So, there's 4 years there. LJ's been in the markets for like 13 years. And, we've got all sorts of technical analysis, fundamental analysis. We've got swing traders, day traders, scalpers, all sorts of fantastic traders that you guys can learn from all over the world. Samir is actually from India. He's coming in shortly, I believe.
Yeah, in 15 minutes.
Yeah, and I was going to say, I'm sure he's coming in about 15. So Samir, he's also from India. He's going to be coming in about 15 minutes. We've got LJ from Australia. Myself, I'm in Hong Kong at the moment, but originally from the UK. South Africa, like literally, guys, we're all over the world. We are literally all over the world. So, yeah, that's, feel free to ask us absolutely anything. Speaking of, where is Samir? He's coming in very soon, my friend.
Yeah, he's coming in 15 minutes or so. We all have allotted slots, so we all have a start time. So he'll be here.
This is an interesting one. Another beautiful day. I like that username. That's a really nice username, man. Get the EA Simple Trading Manager in MT5. Has draggable lines and is much better than the one you were using, to be honest.
What do you
I was
mean
going to say yours.
lines? Is this one not draggable? I'm pretty sure I'm dragging my. I can even make it thicker. The lines are all draggable as well. There's my stop
Yeah, I was going to
loss.
say, in all fairness, it's one of the best interfaces that I've used on a trade manager EA point of view.
Yeah, no, it's very good. I have zero complaints. There was a question here. With a bootcamp account, if you pass a stage, do you keep the money on the account for the next stage? No. So how it works is, let's say hypothetically, you are on the 100,000 bootcamp account. You have 3 stages that you need to pass. Your very first stage is going to be a 25K account. So you're going to trade 25K. You're going to try and make 6%, or try and make 5% actually. And then you have 6% of drawdown available to you. So that 5% that you need to make, you just, once that's passed, you go over to 50,000. So your second phase is going to be a $50,000 account. And then once you've passed that one, you will get a $75,000 account. And once you've passed that one, you will be given a $100,000 live funded account. So the evaluation phases, the 3 evaluation phases that you have, start at 25, then 50, then 75, and then 100,000. Anyway, let's back to. I want to scroll up to. Oh man, to Shari Khan. So, hi Richard, can you share your trading style and strategy? Yes, I can. I will give you. So we're getting very close to NFP. NFP will be in 11 minutes. So I'm not really looking at trading this. So we may as well just kind of like go through a specific strategy. So Shari Khan, this is for you. All right. Now, I trade NASDAQ predominantly. I've had this same strategy on EU and GU as well as UJ. It works slightly differently on some of the other assets, but I found that on NASDAQ it works really well. So if I go over to the 15-minute and I look for a random day, let's just look at this day. So what day was this? This was Thursday the 5th, well, my birthday. Anyway, so the way that I like trading is I will remove these markers. I have the sessions indicator up because I like looking at the highs and lows of previous sessions as well as the highs and lows of previous days. So in this case, I'm looking specifically at the highs and lows of the previous day, which was the 4th, and then I look at the Tokyo session. I trade 2 sessions at a time. The first session that I trade is from the beginning of London until roughly around 3 o'clock, somewhere around there, my time. So from, 8 o'clock GMT until 1 o'clock GMT. So I will try and get my London session trade during this segment. And then the second time that I'm looking for a trade is just after the open of the New York session until roughly around, 9, until 9-ish my time. So 7 o'clock GMT. So these are the 2 segments that I trade in generally. I have a small little pause. Sometimes I don't get a trade during the London session and I get one during New York, and sometimes I get one in London. I don't get one in New York. So I have 2 strategies that I follow and 2 different times that I follow them. Okay, so let's just look at the London session as an example. So if I mark up the previous day's highs, which is all the way up there, this is the previous day high, and I look at the previous day low, which is over there. This is generally the 2 areas that I will try and look for if it hasn't already been taken by either a New York session or the beginning of London. Okay, if something like what happened here is neither one of the 2 has been taken at the open of London, I will look at the Tokyo high, but I would look at it as if it's a range like this, and I would look at the most recent low apart from the Tokyo low. So in this case, the low of New York session, which happens to also be the previous day low. Then what I'm looking for is I will zoom in. This is still on the 15-minute. I will zoom in to see if there is some sort of reaction off of either one of these 2 points, as an example. So in this case, I'm seeing as we start the London session, we have a reaction on this high point. Now, I don't just look at this high point alone. I look at whether or not this high point had some sort of reaction. So in this case, you have the high point of the Tokyo session, which also is just slightly lower than the opening or the close basically of the previous day. So Tokyo opens up over here, and then we start pushing up into this area, and then suddenly we have this volumetric push down. So I look for areas like this where we've had this very nice volumetric push down from, and then I want price to come back to that point, and then I want to gauge the reaction. Now generally that would be either the London high or the previous London high, previous New York high, Tokyo high, that kind of like thing I want to see. So I call it established areas. And the reason why I'm calling it established area is because the reaction in that area established either a new trend or it re-established a previous trend. So in this case, you can have consolidation and then we re-establish a downward trend from that area. So that's why I call it established zones. All right. So then based on that, I will go down, once I found it on the 15-minute, I will go down to the 5-minute to try and find what I call drop-based drops or rally-based rallies. In this case, we have moved into this area from the bottom. So I'm going to look for a reaction where it starts producing drops. I want to see it start pushing lower. Okay, so I go down to the 5-minute. On the 5-minute, I'm going to look for 2 things specifically. First and foremost, I want to see momentum shifts. I want to see this upward momentum, this upward momentum that we have here, I want to see this momentum slow down when we get to this established area. Now, obviously, I've already seen that this price has gone into my area. I then want to see it change direction and then either do the other thing. So the first thing is I want to see momentum shift, and then I want to see a structure shift. So first and foremost, this area becomes my new high. Whereas if I go back towards the left, I'm looking for a previous lower swing, which was this one over here, the most recent low swing, which happened to be at the London Open. So what I then look for is I want to see which one of these two gets taken first. Is it this high, this local high, or is it the local low that is being taken? So if it's the local low in this case, it was close. I don't want it to wick. I want it to close underneath the previous low point. So you can basically see that all the way down here, this is now technically a lower low because it is lower than the previous low swing. If we were in this upward momentum, I would have expected after this high point for us to make a higher low and then a new higher high. So I want to see either the continuation or I want to see the shift. In this case, we're seeing a bit of a shift. Okay, so now we have a lower low. So what is the next thing that I want to see? I want to see a lower high. So what is the next lower high? It's right there. So if you pull it back, you'll see that it is lower than that. So I have a lower high. There we go. So now I know that on the low time frame, that there is a potential shift in the direction because we were, during the Tokyo session, towards the end, we were bullish and we came into a established area. So in this case, I know that in order for it to go up, that's failed. The shift is no longer bullish. The shift is now bearish. So what I'm looking for then is now I'm looking for what I call drop base drops. So a drop and a base and a drop is something simple. Here you have the establishment. So I know with this lower high right here, you can almost imagine that my information was up to that point. So I've already seen that, okay, there's the lower swing. I'm waiting for a confirmation lower high swing, which I just got with the close of this bearish candle. Now I'm going to wait for the drop. So there's 1, 2, 3 candles. 1, 2, 3. These are what I know or what I refer to as drops because new establishment after a established zone. 1, 2, 3 candles is bearish. That is a drop, followed by one bullish candle right here. That is the base. And then a follow-up bearish candle. This bearish candle is what it is that I'm looking for. So if the momentum is correct, if the momentum is showing, yes, there's definitely some volume coming in now to try and push price lower, I will enter a trade on the close of this bearish candle, and I would have a set take profit and stop loss. In this case, it would be a 1-to-1, and this would have been a loss. It would have been a loss trade. So it doesn't always work out. I have a roughly 62% win rate with my account, specifically on this daily portion, but because I'm looking for a 1-to-1, it's already profitable. It doesn't have to be vastly profitable. My most profitable trades happen during the New York session. This is kind of like if the New York session didn't provide me with a trade, then I can have a bit of a trade during London. So in this case, it would have been a loss, but that's fine. And anyway, so then if this trade has been a loss, I will then go and look for a potentially follow-up trade. Where's 1500? Right there. One more. What I would then look for is, okay, I've got one trade that's a loss. That's fine. I have something called best of 3. So Will knows this very well. Best of 3 is I'm allowed 3 maximum trades a day. I go out of literally which one comes first, the best of 3. So there's only 4 outcomes that I can have. I can win 2 trades in a row, which would then be best of 3 because it's effectively 2 wins out of 3. I can have 2 wins and a loss. So 1 win, 1 loss, and then another win. So 2-0, 2-1. Then I can have 1 win and 2 losses. So loss, win, loss. Or I can have 2 losses. So I will always end with 2 of something. It's either going to be 2 wins or 2 losses, whichever comes first out of 3 trades. So I've already lost 1 trade here. That's fine. I risked 0.25% on that trade. I will wait until there is a follow-up trade that proves that indeed we definitely want to carry on volumetrically, or if this is just going to be consolidation. In this case, if I get this trade where we basically almost have an equal high, I'm going to feel like, oh, we're just consolidating. So what I will do then is I will then drag this most recent high and the most recent low all the way through until we get a break of one of those two. And in this case, we get it right here. There's this break. So volumetrically, it's starting to really push lower. And on top of that, we already know that I have the previous day low that I can come and test. So what do I wait for then? There's the drop. There's the base. There's the follow-up drop. All I do is I enter the trade on that one. I look for another 1-to-1. Or in this case, I will try for a 1-to-1.5 because a 1-to-1.5 would be much closer to this target here at the bottom. And that's it. That's what I'm looking for. It's going to be a 0.25 risk on the first trade. My second trade will also be a 0.25% risk, which means that on the day I've risked 0.5%. I've already lost one. Now I've won the second one, but this one technically adds a 0.125 or 0.125% gain. So 0.25% risk, I lost on the first one. I've made up plus half of that on the second trade. And then after that, I wait and look for the New York session to provide me with the same setup. Slightly different. I'm not always looking for the drop-based drops necessarily, but that gives you a broad picture of what it is that I am looking for. And the thing is, I execute on the 5-minute and I execute on the 5-minute only. I will sometimes go over to the hourly chart and I kind of like look through, but that's about it. Saying the news has come out.
Have you just seen the Dixie?
Let's first and foremost go and have a look at what was the information. It was actually positive. Wow. Non-farm employment change was scheduled for 60 or forecast for 66 and came out at 130,000. Unemployment rate also came down, but it makes sense because you've got 130,000, like you've doubled that. Oh, sorry. You said the Dixie, yeah?
Mm-hmm.
Wow.
Yeah.
Yeah, that's kind of good. It's going to be good for the NASDAQ as well.
Yeah, I was going to say for the NASDAQ, for the US 30, for the S&P 500, all looking very good.
Yeah, this is pretty cool. Let's have a look at the majors. EU. Oof. Oof.
Yeah.
Oof.
I mean, hey, look, if anyone's holding sells on EUGU, then congratulations, guys. Well done on your payout or phase 1 pass or phase 2 pass.
See, me just closing basically at the bottom of that one, and then this happens. Woo!
Man, yeah.
Could have easily have gone the opposite direction. Let's just be straight up.
Oh yeah. Yeah, I remember the days where NFP would like jump up like 30 pips, then wick, and then jump down like 50 pips. It would wick either side. It was just scary to trade. But man, that's actually quite a nice candle. I'll be honest. That's one of the nicest NFP candles I've seen. I'll be honest.
Yeah, no, it's definitely, but I think it's because the news came out so vastly different than what was expected.
Yeah, fair.
But I think
LJ give it 5 minutes, it'll work.
Yeah, LJ mentioned earlier that he doesn't quite know whether or not it's already like worked into the market. Like he doesn't quite know whether or not the market is actually ready for this information. So
fair, yeah.
Looks kind of crazy. No, like for everybody that's thinking, oh yeah, no, Richard, you're just saying like, imagine if you held this. No, I would never hold through news. I don't trade news. I don't.
Hell no.
Never. That was just a joke. I was saying, just imagine. I kept it open. No, I don't trade through news. Priced in. Thanks, Henry. Thank you very much for helping me with the word. Yeah. Hello, Victor.
Hello, gentlemen. How's
Where's
the
the
NFP
ball?
excitement? Samir, William?
Hello,
How are you guys
guys.
doing?
I want
How
them
are you
all.
guys? I'm seeing something is going crazy, melting.
NFT just now, a few minutes ago. Richard, William had you guys have positions on? I don't think so, right?
Can you guys
Me or
hear?
you are?
I'm glad that you were about to say that, Rich, because Victor, I'm struggling to hear you, my friend.
Ah, okay. You're struggling to hear me? That's still the case?
Yeah,
It's
now
better.
it's
No,
fine.
no, you're all good now. Yeah, you're all
You're
good.
good.
Okay. I'll double check in the background if everything is at least to me it is. I don't know. We'll see. Let me know if that's the case again and I'll check it. But so far it looks to be as usual. So
Awesome. Yeah, no, you sound great now.
okay, no problem. But did you guys have positions open for this previously? I mean, maybe you did with a swing trade or some other setup before the news.
No, no, I've not traded today. I took about $300 from the market. No, I didn't. I took about $200 from the market yesterday. That was enough for me. You know, the markets haven't been how I want them to be at the moment. Although EU was stunning on Monday, but I didn't feel like myself, so I didn't feel great. So stayed out Monday, traded Tuesday. Tuesday was lovely. Wednesday, due to NFP day, I chose not to trade.
I see. Yeah, usually that's the case with me as well. I try to be out of the market when these numbers come out because market can be unpredictable, and that's not you don't want to be creating more variability in your results, and that's exactly what it brings to the table. But I did have a position on that I had earlier, kind of a swing, a different strategy actually, but a multi-day position open, and I had positive slippage, which is not too surprising
Mm-hmm.
when I got out, when the TP got
Very
hit.
nice. What position were you in?
I was some short EU and actually on two different. Maybe I should share my screen to make it a bit more
Yeah,
visual,
yeah, absolutely.
if that's okay with you
100%. Yeah.
guys. Okay.
Yeah, of
So
course. Go for it. Let's see.
I I was in a short on the main strategy, which is using order blocks and quasis, and it hit TP right before the news came out. I got
Beauty.
TP here before the news came out. I was about to close that before the news because, as I said, normally I wouldn't be holding that position through news. But luckily it did get hit before. But I was in a previous in a separate trade. I was with a TP of 83. And that position was based on the extended move that we had, and we had also, you can see here how we were unable to hold the resistance lines, which is actually a breakout line from before, right? From September 17. That was a breakout line. We broke through it very convincingly, but then came back, and that's basically the line or the resistance line that was trading. We can see here, we talked about this before, how we broke through it, came back and used it as support until we didn't anymore. And we came back, and then was resistance all the way through. And I was looking for that squeeze coming in on a that position was taken before, not on the lower time frames, but based on that resistance line and reversal patterns that we saw on Monday. So I was holding this position earlier on for the breakdown, and I not knowing. Well, my target was just to break this low and get hit on a TP right here, and this is the place that I put my TP, and this is where I got failed. So basically, I got a bigger chunk of profit because of that NFP. That position, because it's much further the stop loss and it's a different strategy. I usually can leave that on open for these high impact events, but that's not with my intraday. Intraday, I typically don't get to leave that open. The distance towards my stop loss is too risky, and that's something I do not. It's not. We're here to take calculated risk, and that's not exactly a good risk to be taking. Not at least not for me.
Sorry, I missed it. Did you left this trade open or you closed it before the news?
Oh no, there were two trades open. One did hit TP before,
Okay,
and that was based on my intraday strategy using order blocks and
okay.
quasis. But the other one, which I left from Monday, was targeting the break of control, and that one got hit and actually had conflict.
Did your TP got slipped or something like this?
Yeah,
Yeah.
TP was here, and actually execution the kill was all the way up
Okay.
here, about 15 pips, maybe 17 pips, positive slippage, which is, you know,
That's
Nice.
good.
um,
That's good.
which is always nice. I mean,
Always.
Yeah.
We
Always
never
nice.
Not often
complain
do you
about
get
those.
that.
uh, doesn't happen very often, but I do see it. I do see
Yeah.
it and
These
it's
are
usually
the
only
moments
high
which
impact names.
traders like.
I beg your pardon, Samir?
These are the moments which traders like.
Yeah.
Of course. I mean,
Yeah.
that's almost like free money, right?
Yeah.
You were supposed to get this, but you get a bonus.
Yeah.
So
Exactly.
but then again, I don't I try to if you don't do anything, you will get negative slippage as well. So they
Yeah.
even each other out. But I try to avoid those negative slippage by closing the position before the news, when the distance is too close. So in that way, my negative slippage, the times that it happens is a little less often than with the positive one, because you know, I kind of select them to be open when I am already in profit.
That's pretty good. I just want to get to this one question before myself and Will, I'm assuming, is going to hop off. So another beautiful day. We were talking about the position sizer just earlier, and another beautiful day is just saying, but you need to put the lot size from the EA in the quick trade buttons, right? No, you don't need to. What you do is the following. I will bring my screen up very quickly. So you have 5 tabs here at the top. You have main, risk, margin, swaps, and trading. So once you've established all of your risk parameters, where exactly you want your stop loss, where you want your take profit, for example, once you've moved it around, you click on the trading one, and there's a button here that says trade. Then you can trade that. Or what you can do is you can use the hotkeys, which is Shift plus T, and then it will take the trade based on where the current price is in relation to your stop loss and your take profit. As simple as that. So no, you don't need to. You can see that here my quick buttons are disabled. So if I go to where is it? Properties, show quick trading buttons is off. So no, I don't need to do that at all. I can take the whole trade and everything, do all of my risk management straight from this position sizer, and I can use the hotkeys to trade as well if I want to. So no, you don't need to put it in. It's like this. It's faster than you think. Anyway.
Yeah, the one thing that I do regret is that I haven't put. I say I regret. I can do it really easily. It's not gonna. It's gonna take me 2 minutes, but I haven't put it onto my laptop yet. I set it all up beautifully to how I want it to on my PC back in the UK, and it's just it was a bit of a faff, like trying to set it up to how I wanted to. So I just haven't been. I haven't put in the effort to actually put the EA system on my MT5 on my laptop, which is I probably should. Like I said, it takes like 2 minutes to put on, but then to tailor it to exactly the precise how you want, it's a little bit of a faff, but it's probably an extra 2 minutes. I'm just lazy.
I was gonna say, you make it sound like very, very arduous work, but
It's really
well,
not, yeah.
I don't think that's that much. But no, it's still. I mean,
Yeah.
maybe you have an elaborate system around it, because I know you can break them down in multiple TPs. You can color. You know, you can have a template for your
Yeah.
colors, and if you really do them manually, then actually that can take like 20 minutes. To be fair,
Mhm.
so maybe my comment was misplaced.
No, it's
No,
not.
no,
I'm just
no.
lazy.
Yeah, I was about to say, Will is just lazy.
Yeah, literally, there's no
Um,
excuse. Just lazy. I don't do it on stream, even though actually no, I think I set it. In fact, there you go. Maybe tomorrow, I'll actually set it up on stream. So for those of you who don't know how to do it, tomorrow jump on stream with us, and I will set my EA up on the terminal live in front of you guys. Therefore, sort of getting rid of that laziness. I'm at the charts anyway. Plus, you guys get to see exactly how it's set up and exactly how it works.
Yeah, that's
There you go.
that's a lovely idea. We'll do it in with the audience so they can see each step and
Yeah.
why, perhaps why you're taking it, how, what experience you have by setting this or that a certain way because you had this experience or that. It avoids this or that error. So it's that's a great idea.
Yeah. Yeah,
You were saying,
exactly.
Victor,
See?
this and that, this and that.
Did I?
All right, gentlemen, Victor and Samir, you guys must have an awesome trading day. For everybody in chat, thank you very much for joining us. If you haven't already, please consider dropping a like and a subscribe. We tantalizingly close to 100,000 subscribers. Once again, for just like the shameless plug, in the description box below, there is a link to the 10-year anniversary event. Once again, that 10-year anniversary event is happening on the 17th of February, which is next week, Tuesday, from 2 o'clock until 4 o'clock GMT. If you follow the link, and you will eventually get to a point where it will show you exactly according to your local time when the start time and end time of that event is. That event, we will have $2 million worth of giveaways. So that is going to be
Wow.
free accounts, among
2
other
million,
things.
That's nice.
2 million is a lot. It is genuinely a
2
lot.
million is a lot. I think this is the biggest giveaway, if I'm not wrong.
Yeah, it is. And the thing is, you have to be there on the day. Nobody is going to get an account if they're not there. You have to be there on the day because we will give you a link on the day on the live stream, which you need to go and register for the giveaway, and then you're in it. And it's literally a random number generator that will decide who gets it. There's no favoritism. Everybody that's there has an equal opportunity chance to win an account. On top of that, we have some awards that we will be giving out to members of our community for their outstanding commitment to either the community or to the Fivers. We will have some speeches from the CEOs as well as the founder Gil Ben-Hur, which is pretty awesome because we haven't seen Gil on the stream in quite a while. And then we've also got some very awesome announcements as well, pertaining a certain platform as well as pertaining potentially a certain program. So you have to be there in order to get this information. So yeah, shameful plug over.
That's that seems suggestive.
A lot of surprises
Program
for you guys.
prizes.
I mean, look, $2 million worth of giveaways for free. Literally, you just have to be on the live stream, like rock up on the day, watch it, be subscribed, have liked it. That's it. Costs you nothing, and you have an opportunity to participate. And
no, the one thing it does cost you is a subscription. You must subscribe to the channel if you haven't already. If you've already subscribed to the channel, then it's not going to cost you anything. But if you haven't already subscribed to the
your
Fivers
wife
channel,
to also subscribe, or maybe your child,
Yeah.
or your grandmother,
Yeah.
anybody.
everyone, create an account for your
Introduce
pet.
the Fivers
Yeah,
to your
them to
family.
subscribe.
Yeah, introduce it to your friends, even your enemies. Introduce it to everybody.
Yeah.
Yeah.
Anyway,
I don't have any enemies.
Shane Henry saying starts at midnight for me. I work the next day. Henry, do you know what? I'm seeing
Call in sick.
a vision issue. There's a vision issue for you on that day. I don't see you going to work the next day. It's a vision issue.
Yeah.
You might be sick. I think you're sick.
I
and
think
heard
you're
you
going
cough
to
something
definitely
fierce.
be sick that day.
Yeah, Henry, you're coughing something fierce, mate. I can hear it all the way in South Africa. You've got quite the cough, and I think it's going to last until at least the 18th.
Bro, I can feel a fever coming through the screen. It could just be these absolutely smoking hot gentlemen beneath me, mind. So who knows?
Well, anyway, all right, guys, have a great day. Don't forget, Sol might be joining us. He's a very busy man, so give him a few minutes. But he's almost always here when we say he's going to be here. So Sol will be here a little bit later to join you guys. I hope you guys have fun today. Good luck with the NFP aftermath. Victor, Samir, Will, cheers. Have a great day, guys.
Take care,
See you
Rich.
later,
Take
man.
care. Thank you
You.
very,
Bye
very
bye.
much for all those announcements. That's very, very excited what the Fifers has in store for us. And it's all, we haven't even divulged every detail of it. So there's more to it once you know all the details and the good stuff. I mean, 2 millions in giveaway. William, when was the last time you heard that? That's unheard of.
It's
Yeah,
not,
that is the
yeah.
biggest giveaway, literally.
Not since I've been in the industry have I seen a $2 million worth of giveaways. That is absolutely insane, dude. I'm so excited. Like genuinely, I'm really excited to see it. I'm excited to celebrate it with the Fives as well. You know, it's awesome to be part of a fantastic family of traders and like-minded people in this industry. So to be able to celebrate it with everyone here streaming and all you guys in chat as well, it's fantastic. So guys, make sure you do show up on the 17th because it is going to be a great event and a great session.
Yeah, I'm
But
excited. I'm really excited about 17th now. We are
yeah,
having the
man. So
biggest
not only that,
giveaway
it's
and many things.
yeah,
I'm
not
getting
only
that
that, it's Chinese
excitement
New
now.
Year as well. So like, I'm gonna be celebrating the Chinese New Year with my partner. So it's gonna be like it's gonna be a massive day of celebration. So I'm looking forward to the whole thing, and the event is like late night for me. So it's just gonna be like the
Okay.
perfect end to a fantastic day. So I'm really looking forward to it. But on that fantastic bombshell, guys, I'm gonna have to love you and leave you. I shall see you all tomorrow. Have a fantastic. I hope, in fact, guys. Also, I hope that you survived the NFP. Those who are trading it, those who weren't trading it, smart move. You survive another day in the markets, guys. I shall see you all tomorrow. Thank you very much. Peace out, people.
Thank you,
Take
Will.
care, William.
Bye. Take
Happy
care.
traveling.
Okay.
All right. Samir, how is everything on your side? Just starting out here our stream.
Yeah, it is good. To be honest, I fell a little low in the morning, but I think now I'm
Mhm.
fine. I just, cheered up myself. So yeah, now I'm fine. I'm seeing the charts here and there, and somebody is asking about gold. So maybe you can break it down for our lovely viewers. So let's see where gold. What are your thoughts on gold? Then I might
Yes,
can.
let's
Then I'll be
sure.
sharing my
We have
views.
mhm. We have about 8 minutes to the turn of the hour. We have the CEO of the Fifers coming in,
Okay.
today. So it's a good idea we analyze the market, for the next 10 minutes or so, because maybe afterwards, it's not maybe we're gonna have the CEO here with us, so we'll be focusing on his trading and everything, how he scalps the market, how he trades after NFP, which is quite exciting. So let's take a look at gold. Yes, for sure. Um, let's see the chart. So on the higher time frames, so there is really nothing to look at on the monthly. Um, I still check it, even though a lot of the times there is nothing to trade. I still want to have a glance of 5 seconds or so, just to make sure that I'm aware of any structures or any um, potential signals coming from the monthly. That's not the case. The weekly is the same. The last structure we had from the weekly is below us. It has not been touched yet. And it seems that the market is breaking out without touching the order block. So there's nothing on the weekly as well. So the first time frame that I'm actually looking for is the daily. The daily we can see how the market came back after creating that order block, right? Came back and moved out, which is exactly so. That trade, that setup is already gone, and currently there isn't anything else for me well, there's one information that maybe we can not maybe that we can use from this this time frame, which is the positive retest of a fresh order block. We can make a target based on that. So we have the ATR, which by measuring on the candle that created the order block, which is, let me move this a little bit higher so we can see it. I think you can. All right, so it is 215, and we doubled that, so 430, and plus the lowest high of the area, right? So from the low of those two candles, which is 430. So there you go. That's gonna be my target there. So 5,314. not to take this trade right now, but if I were to getting into the trade from the order block, that would be my target based on the daily time frame. So I will call it out as a macro target based on, and actually also give out the day, right? The day that this is based is on the 3rd of February, right? So just to be we can check this later when it hits it before breaking that order block. We can use this as, if you're already in a trade and you're having difficulties putting a target, this would be a nice swing target to have based off this order block. All right, so that's the daily. Anything else there isn't. We are in a bearish order block, but I mean, that's only if we have a reaction of a confirmation. That's not the case yet. So that's subjugated to the bullish structure we have below. And on the higher time frame, I would be looking for, that was the area you want to be getting into that trade that I just mentioned. But currently there isn't. Let's take a look. We do have a retest of this. Let's measure that like that. H4, and we did have their reaction, right? This is the first retest, and this whole complex, all of it pertains to the first retest. This is currently the second retest, meaning I wouldn't be able to trade that. And you can see how nicely that worked. But currently there isn't anything else to trade. This order block that I'm seeing here, we did have a nice reaction before, but it's not an structure we can break. This is can trade from. This is the left shoulder on a bigger quasi, right? As you can see here. So it's not, it's nice to know that there is a structure there, but it's not something we can trade. At least I wouldn't be able to trade that. So what do we have? Currently in a daily order block, a bearish order block, but it is not the one to be at play. The one to be at play is the one we created and retested successfully, and we're having likely a follow-through movement all the way to that target. So we have the H4, which is not to be traded anymore, but you can see that the market still reacted on the second retest. I do not recommend taking trades from the second retest. In this case, it did have a very nice reaction, as you can see. Let's eliminate these levels, right? Just to keep things clean. What else do we see? There isn't a quasi, a bullish one on the H1. There is really nothing to be traded. If you're looking for that H4 basis for your setup, this is the second retest. The first retest was yesterday. So there, to me, I wouldn't be able to look for a setup here or take a trade based on that strategy. What else do we see? So far, the market, there's not even a reversal quasi on the H1 as well, a bullish one. So I'm left with a H4 structure that likely is still at play, as we can see here through price action, but which is already on a second retest. So there's nothing here for me to trade. I don't want to be taking a short from this level because I don't have anything alignment on the H4 with the H1. And we're coming from a daily structure. So all of that makes me think, be hesitant and sit on my hands. I would just be sitting on my hands on waiting for a bullish structure, perhaps later, if it happens and going to that level, right? If it happens again or something a little bit higher, just fine. But I'm going to be listening from the daily that this is the intention of the market, right? Market typically has sometimes it doesn't give you any indication of what it wants to do. But when it does give you that indication by creating bullish order block, coming back, retesting them, and having that reaction, then you want to be listening. And this is the direction that I want to be in. I want to be long gold up to this level. And I'm not seeing anything here to go long. If anything, I want to be waiting for that daily order block to be retested. And if that's not going to be the case, maybe something on above it, right? So something like so. That could happen in maybe today, maybe tomorrow, and then I'll be looking for a long. And whenever I see this on the hourlies, I just stop on the stop. I don't go to the minutes to catch my entries because I want to have everything aligned for us to go in the direction of the daily in this case. So we have Soul in the background getting ready to going live. Whenever he is ready, we will have him on the stream. So, and EU, in the meantime, I'll look at EU. Let's take a look at what we have very quickly. I'm not going to go from the monthly. Let's take a look. Whenever you're ready, Soul. Oh, you are. Okay, perfect. And we'll have Soul coming up here with us in a few seconds. Hello there. Welcome.
Hello, hello. Hi, Saul. Good evening from here, as it is evening. I don't know what kind of, maybe from your end it is afternoon, so good afternoon. I think you're muted.
Yes, I think we can
Yeah,
hear
yeah.
you, Soul. You're muted.
Okay.
Yes,
Again, how are you
Yeah,
doing,
now,
guys?
now it's fine.
we're doing great.
It's good. How are you?
I'm fine. I'm fine. There's a weird noise coming from my computer, and I can't figure out which tab is causing it. So you might sound it here and there, but hopefully it's not very.
To us, it is fine. I cannot hear any
Yes.
sound other than your voice. I think your microphone is doing good job.
We're doing good. No, it's like a sudden like a ring or something like that. You, if it comes, I'll tell you. Anyways,
Okay.
guys, how you doing? How's trading?
Great. It's very
It's
exciting.
good.
We have NFP, of course. What was it? 30 minutes ago or so, and I had a trade in the morning, but more interesting. How is your trading going? So, have you had any chance to trade today? We know you're very busy, and you try to trade as much as you can. Um, how was it your trading day today?
Wait, I figure out the noise. It's from the speakers.
Okay.
Okay.
Whatever it is, we're not listening to it. Whether it's a notification bell or anything. Luckily,
Okay, I'll leave it. I'll just use the headset, and that's it. That'll be easier.
Oh yes. How was your day? Your trading day so far? So,
Here,
oh, someone is saying we have drumming sound. Is could that be what you mentioned, Sol?
I don't see any drumming sound or I don't hear any.
Me neither.
Yeah,
Or
there
maybe
might
it's
be.
the, I don't know. Maybe it's the special effect that Krishna wants to create. The
Yeah.
all right. So in the meantime, while you're setting you're checking your system. So uh, I'll do a little bit of analysis on EU. I think it looks like Sol is frozen. So I'll go
There
ahead
might
and
be
do the
some
analysis.
technical issue, but Saul will be back in a couple of minutes. So in the meanwhile, definitely you can break down EU. Yeah.
Yes. So on the higher time frames, let's say on the monthly, it's actually a bit complex. I don't want to spend too long on the monthly because I do touch upon this very often. We
Okay.
did react previously on a entry order block on the quasi, but we're no longer, since we tapped into the second one. It means that this one is not the one to be looking at, but the following order block, which is quite wide. Uh, we have Sol again with us. Can we add you to the stream? Yes. Okay.
sure. Yeah. Am I coming
All right.
through okay this time?
Yes, you are.
Okay,
Yes, you
all
are.
good then. Excellent. Sorry, guys. You were in the middle of analysis or something.
Yeah, no problem. We were filling in on as you were, waiting for you. So
Yep.
we thought we would do some analysis. But now you're here, we want to get all the time to see what you're watching in the market. What you maybe have you traded today pre NFP release?
Yeah, not today, but I have
Okay.
I have some analysis that I can share with you.
Oh,
Yeah.
perfect.
It would be
If you want to share
lovely.
my
Victor can put your screen, or Remy.
Yes, I can put your screen. There we go.
So I'm looking at dollar yen.
Okay.
Dollar yen. If we zoom out on the dailies, we see we're on a high levels. Okay, we're kind of like on close to resistance levels here. Okay,
Mhm.
if we zoom in a little bit, we can see we had last week or 2 weeks that we have a very strong low. We have a strong drop that broke like previous lows over here, retraced to supply and reacted. So this could be like the beginning or the potential formation of a Quasimodo pattern, which is
Mhm.
similar to the head and shoulders, but bit not as aesthetic as the head and shoulders. So if we manage to break through the previous support, that would be the trigger or the confirmation of the pattern to be completed. And these are the places we want to start looking for reversal patterns where we are at the top, or at the bottom of larger time frames. That's where these kind of patterns might trigger and continue and develop. So following the current impulses and direction to the downside, that kind of gives me my bias from the dailies, which would be bearish. If I zoom out to the dailies to try to mark my levels better, then of course there's the support we mark, which is we can actually see the demand here, which is we already reacted to that. We had this supply. Let me zoom in. Supply. And then we have multiple supplies over here. So we have a lot of supplies. We need to make sure to zoom in even more and make sure those are like valid supply areas. But we already reacted from the demand. We already reacted from the supply. We had news like half an hour ago, and we can see we tested demand, tested supply, and now we're back to the previous prices. So I want to zoom in a little bit, and of course this movement creates a new supply. If we go down, I'm guessing there's going to be demand. So I can wait to price to reach one of these places and trade off them, or I can try to look for patterns on the way to those areas. We've discussed just from opening the charts. We had the volatility from the news. We're back to the prices, and then what I ideally want to see is like this channel to continue forming, something like that, towards the supply area, and this would be like a compression channel. And once we get to the supply area, then I would be very comfortable selling from that point. That's one of the possible patterns that might form. If we had a strong break to the downside suddenly, then let's say we see something like this, strong, then I would wait to confirm that becomes like a new supply, and then a retest from that area would be a great opportunity to sell again. So we have like, I really need to wait and see what the market does, but I have like a clear bias coming from the dailies, which is bearish, to that Quasimodo pattern to potentially form. We right now we're not at any strong key level, but I can wait and try to find price action patterns to help me get into selling orders. The other things, I want to make sure I have enough money to be made from pivot point to pivot point. So I want to make sure these legs are large enough, and I can see, I'm on the 1 minute chart, and these legs, or
Mhm.
they have their 20 pips or 25 pips or 29 pips, so it's plenty of pips in between. So even any volatility to the upside, I can try to short and just grab a couple of pips on the way. So Right now, I'm waiting, but if I have strong volatility to the downside and then a pullback, then I'll try to short. If I have from this point a pullback to the upside, I can also try to short, and I'll just try to scalp this price action. As long as we have enough um, ups and down movement, I'll be able to make money along the way.
So your
Um,
bias for today is you want to look for shorts only.
Primarily just to be
Okay.
aligned with the Quasimodo pattern.
Yeah, yeah.
That could, don't get me wrong, that the pattern could never unfold, right? We can find
Yeah, yeah.
ourselves going up again, and that would invalidate the pattern. Just following like the price action from previous days, we can see has been consistently bearish.
Hmm.
So I just want to align to that um, to that momentum. So here you go. Like this is a good candle. If we can establish like a close from it, um, that would be great. And then ideally this candle, another candle, and then any pullback would be a great setup to short. Let me adjust my lot size here. So we have a couple of seconds to close.
So you have, based on the Quasimodo on the daily, you have a daily bias, and you're looking for a short. Um, does that mean that because you have a very clear a pattern on the daily, and that is, the market is moving according to that pattern nicely, does that make you want to take the short more so than the long? Because always we have, when you're coming along, even though you have a bias, you're still able to be flexible going long and short, but
Correct.
you're just aware of the bias. But now that we have a clear pattern telling you short is a great direction, would you still equally be flexible taking long and shorts, or would you be predominantly looking for that short
Yeah,
on this session?
I'll get back to you, Victor. Just following, you see how very very quickly you can find yourself of course in the profit or in the loss. But I already sold like three lots. I booked one. Um,
You booked one.
yeah,
You mean you barely open it? You already had some profits?
yeah. I traded as this candle was forming. I sold three lots, and then inside there's enough volatility. So inside each one of these candles, you can already make profits. You can see within the same candle, the 3 pips that you usually see me taking, you can
Hmm.
you can book them.
That's awesome.
So that's it. So
So within the 1 minute candle, you booked some profits already, and you closed the position already, as we can see.
yeah, so that's the little scalp you're looking for. You will see me already like usually taking. Let's see. So this is our position. Um, so that's 80, 80 76 dollar
Hmm.
from the 3 lots. Um, and we can continue with this pattern as long as our pattern is still valid.
Okay.
We can continue trying to look for this. It's very unusual to have these 3 pips within the same candle, 1 minute candle, but in this case, there's the volatility after the news. We have nice volatility, and we can try to get advantage of. So I'll see. Let me take one. We'll see. I'm anticipating a revisit of the lows here. So
Hmm. Which makes a lot of sense because the market is, had a very that was about 9 minutes after the NFP release.
mhm.
The move up was the NFP, and this was after the NFP. I'm not sure if that was a revision or some other numbers that came out. But these are probably exaggerated moves. So expecting price to actually be retesting and making new, or at least retesting these lows or these highs is very, it makes a lot of sense.
Yeah. So now what I'm counting is this level to hold, and then when I if we retest those levels, I can short again. You know, I like to start small and grow. So let's see here. Let's see if we can have a little movement to the downside, and you can see if I set my take profit even here, that's already 8 pips, and I'm just looking for 3, right?
Mhm.
So let's see.
One question I have. Go ahead.
No, ideally we don't break that one up, because if we do break, then we're in trouble. Let's see if we can. Yeah, so we're reacting from there. Let's see if we can have some follow through.
Mhm. Do you have? Do you sometimes let these initially scalps? Do you let them run and let a few run since you have a daily reason for market to continue go lower? Do you upgrade them to, like, instead of scalps, more of a
To swing.
intraday? Yeah, actually, yes, of a swing. Do you do that on days like these?
No, very rarely, because
There you go, another TP.
yeah, because
That's TP.
yeah. So let's see how it did. Yeah, another 4 lots, so that's $148. Very rarely. I mean, I'm very bad at the holding positions. So
Mm-hmm.
and usually because I go with the lot size of a scalp,
Mm-hmm.
I tend to go big. And then you see, you're already in profit, and you see how it reverses on you, and then you see all the profit you made, unrealized profit, um, going back to break even. And so I struggle a lot with letting trades that I initiated on the 1 minute setup to let
Mm-hmm.
them swing to other to swing them, basically. So
Yeah.
Okay.
it's not something I do. If I see a setup on the dailies or on the hourlies, then I will set up the trade accordingly to the setup on the hourlies and the dailies, which will be less, smaller accounts, like smaller lot size, because usually you have like a large stop loss and all of that. But yeah, like initiating something on the 1 minute chart and then expecting it to go to daily setup is hard, at least for me.
Yes, it is.
And the stop losses is gonna be way too huge, I think,
Yeah.
because your plan was on the 1 minute and you're going to the daily. I think,
Uh,
yeah,
yeah, and the lot size, like
yeah, lot size also.
because on the 1 minute chart you can go with bigger lot size, just because the stop loss is closer. And then if you swing that to an hourly setup, then it becomes an overload size setup, or stuff like that.
Yeah.
Let's see if we can do
Yeah, I
this
understand that. It
one more
makes
time.
sense.
If we can revisit this little resistance, every time we touch the same level, I kind of lose confidence on it.
Mhm.
This time we reacted to the downside, and we didn't go all the way to the lows, um, and we're climbing again to the upside. So this movement to the downside was weaker than the previous one. So I don't want to rush into another setup. But let's see if I get. There's no more zoom in. As we approach here, if I can recognize some price action confirmation, I might sell again. And if not, we might break it to the upside, and then I'll wait for it to come to the next, let's say, resistance level before adding to any position. So let's see. Let's read price action. Um, okay, you see that tail forming.
Mhm.
So let's see if we can
That's a
grab.
reason for you to. That's an indication of possible selling coming in.
Yeah, because at the resistance level, we got the reaction. So let's see. There's no more zoom in. So let's see if that can give us our 3 pips. And if not, if that fails to continue lower, then this is a good. That would be a good sign to close the trade for a loss, for example, because you had the reaction. You want to join that movement to the downside, and then it fails and continue higher. So in that yeah, you see like what's happening now. If it continues to
Yes.
the upside, you might want to just kill it. Don't hold it.
In this case, it closed halfway through the high of that candle. Is that enough for you to close it?
Yeah, this is a good. This, for example, is a failed setup because I was expecting after the tail we saw together,
Mhm,
I was
mhm,
expecting continuation lower. So
mhm,
when that got invalidated, like it's happening now, that's your TP, right? Like that's your stop loss. That's where you want to.
mhm,
That's where you want to kill the trade. Okay, and when you don't kill it, it continues against you. So
mhm,
um, just because I go very very small, um, I can sometimes allow myself to not close them and try to fix them, but it's not always the best thing to do. Like when I saw this pattern failing, the best thing to do is just to close it. Now if this becomes this close high and continues higher and higher, then fixing the trade becomes more difficult. So yeah.
understood. So basically, on that, within that reaction that we saw within the 1 minute candle. So basically, it's a reaction that it was a pattern of a few seconds, right?
Mhm.
It just created that wick, and then you expected the flush or the follow through movement, which didn't come.
Correct.
Whenever it came back and closes within that range again or that box, that's the cue for you to reconsider that trade. And at best would be to close it, but you can tolerate a little bit of uh, you know flexibility in that regard because it's only a one lot position.
It's a one lot, and this was like a pattern within a context that my bias is still there. I mean,
Hmm.
I don't like how momentum is forming to the upside, but we still have um, this level to visit, and if that fails, we have the supply area to visit. So it's not that everything is lost, but I do want to certainly see volatility calming down, slowing down as we approach this resistance level, and then a potential turn. But if I was just opening my charts, and I do like a clear analysis,
Hmm.
and I'm not on any position, nothing, then I would be looking for shorting opportunities. So I would be waiting for price to come to resistance, look for some confirmation, and short. So now I need to do that setup only to fix the the trade I'm already on. By the way, I
Hmm.
did close. You don't see my
We do. We don't see the dialogue pop up, but I did see your volume drop a bit.
Yeah, I closed half of the position.
Hmm.
So I was in one lot and I closed for a loss. I closed half lot. So that gives me even more flexibility. Um, so now fixing this second half becomes a bit easier. Again, I want to see slowing momentum. Uh, let's see. Okay, let's see price action. So at resistance, we see the tail. Tail is good. We'll want some selling pressure to come in. If we just break through that level, then we might find ourselves all the way to the next level, which is way higher, and I don't want to be in that situation. So ideally, we start seeing, okay, we see a little wick, which is good. Let's see if we have smaller candles and then a reverse. If not,
Hmm.
I might just
Close it.
close it for a
Yeah,
loss.
yeah. We have someone asking, Wakisa in the chat, asking about your targets and stop losses. I believe you mentioned that your target is typically 3 pips.
Mhm.
You mentioned that, but it's not like a fixed 3 pips. What about your stop loss? Do you have a specific number of pips? Or actually, I know the answers, but for the audience, is it a specific number of pips, or how do you set your stop loss per
Yeah,
entry?
the stop loss is usually okay. Sorry, I'll get back to this. You see how we see the tails.
That's
Let's
a
see if we can
beautiful
have
one.
let's see if we can have some follow through now. Okay, I like it. Now we really need some continuation lower. The
Don't
stop loss
remember.
is
Go ahead.
usually set based on the setup. So, for example, here, my stop loss needs to be somewhere here where we break the resistance level. That's where the
Mhm.
pattern gets invalidated. So the the TP is usually fixed at 3, and my stop
Mhm.
loss is usually more flexible based on. Let me close some of this. The natural movement here was a continuation lower and didn't come through, so I want to reduce lot size. It's like taking partial losses.
Mhm.
So bottom line, the TP is usually like 3 pips unless volatility is super super high. My stop loss is based on the setup and where the setup breaks down or fails.
That is clear. And you also, your TPs. The question was per entry, but you
Mhm.
don't see their TPs and your stop losses per entry. You basically have it's one trade but has multiple entries. So you look for the average break even level, and your TP and stop losses are related to that average break even level. Correct?
Correct. Mhm.
Yeah. Perfect. And this account is an account you trade only with, or mostly predominantly when you're trading live, correct?
This is the trading room account.
Exactly.
Yeah, I don't trade it like so often. And usually, I forgot I didn't do this year, but usually January at the end of the year, I withdraw the profits from the account, and then I trade it along the year, and I see how much I can make on it, just by trading it like once a week.
Do you have
Meaning,
like multiple accounts for multiple purposes, something like this?
I have this one for the trading rooms, and I have another one similar to this one, but it's just the one that I trade when I not for educational purposes. Let's put it
Okay,
that way.
okay, okay.
Perfect. All
So
right. So
I keep reading price action. We had a white candle, not a nice one. We had some reaction, and now let's see if we can, if we can have the resistance holding and having some follow through to the downside.
we have a lot of people in the audience asking you many, many questions. Thank you all for being so engaging with our stream today. While you're doing that, while you're asking these great questions, don't forget to like the not the question, the stream, and subscribe to the channel. We are very, very close to hitting that 100K subscribers milestone. So let's hit it as soon as possible, I would say. Do you trade gold, Sol, with some frequency?
No, very rarely. No, it's not one of my no, not one of my most rated pairs. I usually
Okay.
trade currencies. Yeah.
Okay. And while you're concentrating on that trade, and we
Mhm.
definitely want you to be concentrated on the price action, we have a few questions also about what have you seen as what kind of strategy do the top traders have at the fivers? That's a question from TechnoFeed. So what are the most profitable strategies you've seen at our firm?
To be honest, I don't know the strategies traders use. I just see the patterns. I don't see. I only see the trades. I don't see. I don't know the reason why they taking the trades they taking. I don't know
Okay.
if they're trading indicators or ICTs or order blocks. I don't know the strategies, but I do know the styles, and I do see that swing traders are the best performers. Scalpers like myself tend to pay a lot of commissions, and that affects a lot the trading performance. So unless you get like to a certain mastering level, is I usually see swing traders performing better.
And the position is going in your direction quite nicely. We did have
Yeah,
a breakdown basically of that microstructure we had while revisiting that supply zone.
yeah, but it's tricky. It's like there's some high volatility coming in, and it's not convincing. I'm fearing this will turn around and go higher.
Yeah, you just closed some position. I can see.
Yeah, that's what I'm closing because it
Okay.
looks like it's going to reverse to the upside and continue. But I think on overall on this position, I'm not on the positive side yet. I don't think I'm in profit.
Okay.
But I did alleviate because you can see the tail, and you could see with me the how it was struggling to go down.
Yes.
So I wanted to bank some profits, but yeah, it feels like it wants to break higher. So I want to be cautious with that. I would like to see candles like these ones, the previous these candles back here now to the downside. That would give me like the more certainty on the trade. Right now it's like struggling to go either direction. So I wanted to book some profits in case it goes up. I can reallocate that profit again in the trade.
So you want to see big bearish candles with small lower wick, correct?
Correct.
Yes.
I want to ask if there is any trader who is getting that scale up, whose account is scaled up and he's getting or she is getting monthly salary. Is there any trader who is that
Um,
consistent?
yeah. There've been a couple. Wait, let me just concentrate on the trade.
Oh, nice one.
Yeah.
Yeah.
Nice move.
Okay. Now I want to see a close. There you
Nice.
go.
So
But
nice
even now you
volume.
can. Okay, took the trade. Let's see if we. Yeah, we broke even. So we work hard to break even on that one. It's the bottom one. Because as I was losing money, I was banking losses again, and then I re-added those the lots, and I just fixed the trade. But at least, that was a trade. I think we can review it here. I think it's this one.
Mm-hmm.
So I started shorting back here, and then I was adding to the. Yeah, it's hard to on the netting accounts. It's not so clear, but I shorted here, and I took some losses here. I don't know if you can. No, you don't see the pop up, but that was
No, we don't
minus.
see the pop up.
Yeah, it says minus 46, and then I added up here, added here, close for a loss here, added here, and banked profits here. So I was losing banking profits, banking losses on purpose, and then reallocating the lot sizes in order to have this little movement in my favor, and that gave me the break even point. So
That's a beautiful example of fixing a trade. You were initially in a trade that went underwater, and you closed a bit of it in loss, added when you read the market was gonna reverse in your favor, and closed the position in break even.
yes, and I also remind the audience that I kept open a trade that I saw failing back here. So that was my first entry when we saw the tail failing. So if I just taken the loss, I could have re-entered a new position up here and beating the profit instead of having to fix it, for example. So that's why it's so important when our setups fail, just to bank the loss, because recovering from losses is not an easy task. Anyways, if I continue, price action has changed. I don't know if you can see the amount of tails and how
Yes.
price is suddenly not super directional, but it's like going up and going down. So I need to be careful with my trading, just to take that information into consideration. And going back to your question, Samir, there's no
Yeah.
one active right now at that level, but we do have someone that we send him the agreement, and every time we have someone at that level, we send an agreement, personalized, but on his training history and all of that. And then once he signed and we sign, he will be in that in those levels.
Nice.
Okay.
Awesome. That's very inspirational for every trader watching this stream, watching the scaling program we have at the Fivers, and seeing that monthly salary. It's real. People do reach that level, and you can reach it too. That's the bottom line here. If you work hard, if you're disciplined, and you apply yourself to it, there is it's a possibility.
I'm tempting to remember we had this level back then. We broke it, so that became like a
Bless you. Bless you.
that became a sorry, thank you. That became like a swap zone, and this created also like a mid-range demand. And as I'm seeing the price action, I see how bullish pressure is coming in. So I'm tempted to go long right now. But I'll wait and see if we can come a bit lower before jumping in.
It's there's a lot of volatility because you measured one leg being 28 pips. That's a lot.
It is a lot. You can see one candle, like this candle is already 9 pips. So 10 pips now. So it's just one candle. It really is a lot.
It is.
And this is also new information. I was about to go long, and I'm suddenly seeing this candle out of nowhere, telling me, okay, this might create like a new mid-range supply, maybe a pullback and to short instead of going long. So let me reanalyze this whole setup. And that was a candle I needed back here. Came late.
So the sellers are coming back to the table, basically. The ones that we saw after the news causing that big drop, like 9 minutes after the release of the news. With that 1 minute candle just closed, it's like almost, tempting to think that they're coming back to push price much lower.
Yeah, let's see if I can grab a couple of pips here.
You mentioned, Sol, that when I just said, what you just did was a very beautiful example of fixing a trade. You quickly said, also said right away that it's important to close your position when your setup is invalidated. Would you say for beginners, they should not try to fix their positions
I
and
think,
go for.
yeah, before trying to skip, you need to fix. You need to understand how to fix it, and maybe and to practice that, on a safe environment, and to understand what opportunities are there to fix trades. Because not every trade is fixable. Sometimes you don't have lines of defense above you or below you that might hold in order to help you fix. For example,
Mhm,
in our case, I short here, but I
mhm,
knew, like, we shorted back here, but I knew I had this resistance above, and I could use that resistance to fix the trade, and that's what I did. But if there was no resistance close enough, um, that could run against you non-stop, right? So you need to first understand if trades are fixable or not. Um, I took another
we saw it. We saw
yeah.
it.
So let's see if we can. It was very, very quick, but as this candle was forming towards the supply that this candle created, I was
Mhm.
shorting, and as soon as I got my 3 pips, I just took it off. Yeah, it was almost 5 pips, in fact. So I closed it. So
That TP was a mid answering the question.
yeah,
So as you coming back to the answer you were giving, which is very insightful. You said the first thing, well, before anything, it's better to. Actually, I didn't ask that question, but is it better to close and take the loss? Or can you even say that? Is it better to just close it than fixing it? Or you cannot say that because it depends on the situation?
it depends on the setup, but many times, if you haven't practiced enough, trying to fix will only get you in trouble. Um, and I think this past example was a good example of a setup that, um, if I hadn't had the initial trade back here, then I could just have waited for price to come to resistance and just take
Mhm.
a fresh sell here and profit from it without the need to fix a trade I left open down here. So if you don't have if you haven't practiced enough fixing, then fixing might only make things worse, and just closing, and then refining a setup and profiting on the setup might be just the easy way to go.
So fixing basically is only allowed, according to you, if you have enough experience fixing. Otherwise, it should not be something anyone should be pursuing. We should just accept the trade is the setup, the entry was invalidated. Close
Invalidated.
it, take the loss, and get a new entry.
Yeah, yeah. For example, if I had just entered a trade, here at resistance,
Hmm.
and then it fails. Let's analyze it. Okay, let's say I have this reversal candle. I
Hmm.
pull the trigger. Then my setup zone is very easy, right? When the pattern is invalidated, you take the loss, and you have a predetermined loss. But if you leave it open, counting that, okay, you then up here you have the next selling area. You can leave it open and sell it up here, but then
Hmm.
you're holding a trade. Instead of 6 points of drawdown and killing it, you're holding it for, in this case, 30 pips, 30 pips of drawdown, which you need then to recover. So taking the 6 pip lots and entering again up here might be easier than fixing the initial trade. I hope I'm clear.
Yes, I understand that. It's some trades are fixable,
Yep.
but only if you know how to do it. Otherwise, it's just more risk. And we're seeing the market reacting nicely with the zone you marked 5 minutes ago or so, the supply zone from a couple of minutes ago.
Yeah. So we climbed to it.
Exactly that one.
We reacted strongly, and we're revisiting it. So, but
Mhm.
now it's a weak zone. It happened to us back here. Okay, we had the strong reaction like this one. We have
Mhm.
the first reaction, which is this one, and then when we revisited, it broke through. So, so
You're
in this
not
case,
inclined to go short again.
yeah, I don't want. I mean, I could do the same that I did back here, which is looking for confirmation and then trying to short. But um, yeah, now this is a strong candle up. Looks like this has potential to break higher. So
Mhm.
I'll hold on my cells.
What you wanted to see was a lower low, right? Before to assess, that the reaction was strong enough. But
Mm,
because it didn't make a lower low, you assess, it's a weak reaction, and chances are there's a good chance it might break the structure of the supply zone and continue higher.
correct.
Hmm.
So we're now speaking of this. What kind of trap here?
So you trade major pairs or like only one pair, which is USD JPY, or you are focusing on other pairs as well?
Mainly the majors. You see me trading a lot of counter trend trading and ranges.
Yeah, yeah.
So usually the major pairs: euro, pound, dollar, dollar CAD, dollar yen, Aussie dollar. Those tend to be like balanced trades, and I'm comfortable fading those supply areas and demand areas. And um, of course, if
And
I
you
do
must be
find that,
also getting good spreads on those
and
major
yeah,
pairs.
and of course the spreads are important because you train
Yeah,
a lot and you don't want to be paying a lot of spread each time.
yeah, yeah.
I will hardly trade the minors. Sometimes euro yen I do trade, or pound yen. I like the volatility over there. But mainly mainly the majors, and other assets I usually do for more swing or position trading, like indices or
Mhm.
gold and silver. I do buy ETFs for those assets. Um, okay, let's see the breakout. We had a range. We're breaking now. Let's see if we can have um, some follow through, and if so, this the breaking area and this candle, the breaking candle, will become a supply area, and then a retest to this area will be a good selling opportunity.
Mhm.
Let's see if we can do that
Uh,
together.
what is the P&L on of today, so far?
So we've done $317 minus commissions. So we're at
That's in about 40 minutes.
$250 net. Nice. So yeah, we're
I want to
approaching.
know what is your point of view on these gains. Like some traders see it, I want to make 3%, 2%, or some traders are like, I want to make, $100, $200, whatever I get from the market. What are your point of view on these gains? How you view it?
I think you take from the market whatever the market gives you. These, these gains are small compared to the account size.
Yeah, yeah.
Usually, when I trading like normal lot sizes, I do get to the 0.5% a day or 1% a day. So I do get to those to those P&Ls, but by building it. Like every setup will give me a 0.25% or I don't know 0.3% or even 0.1% of the of the account size. But you see on the 1 minute chart you have like multiple setups. Let's say on your trading session, and having a couple of setups profitable. Um,
Mhm.
you get to that 0.5% or 1% an account. There's days that you kill it and you make above that. But I don't tend to go 1% in one setup. I usually
Okay,
build
okay.
towards it. Um,
We had nice reaction from that supply zone you indicated before.
yeah, I didn't pull the trigger, but we had the pullback towards the area, and then we've seen the reaction. Let's see if we can visit support now, and if we do, um, I anticipate we will have another reaction of this down bottom area, and then we will be able to sell again. If we break to the upside, then that's a new story.
People have all kinds of curiosity questions in the chat. Is there something, I know it's kind of private for those who are getting bigger payouts, and we're not able to at freedom to you know talk about them, but anonymously, I mean, what are the uh what is a big payout for? Is there anything you can say about bigger payouts? A lot of people in the chat and during other sessions, they want to know, what are the big traders gaining in payouts? Is there anything we can say about that without crossing any privacy lines?
Sure. I mean, a large payout or a small payout is very individual, right? There's traders that $500 it's a weekly salary or a monthly salary. There's traders that a $500 payout is not big deal. I can tell you we're processing every day all kind of payouts, from a couple of hundreds to a couple of thousands to a couple of dozen of thousands. There's everything for everything. Um, but overall, I think you shouldn't be mining a lot about large payouts. I think large payouts are not the do not represent the majority of traders payouts. So I would be more focused on trying to get consistent, and that way, getting my multiple payouts, a couple of thousands, a couple of hundreds, multiple times, that trying to go for the home run that will give me a very, very, very large payout, because those are less common than the others. So I would only say there's everything. There's traders withdrawing every 2 weeks, and there's traders getting a lot of single payouts, very, very, very large ones. But I would try to focus on my own individual situation and try to make sure I'm improving every time, and I'm managing to get my funded account, keeping it for longer, withdrawing some, uh, growing it again, scaling, and not trying to get flashed by single large payouts.
Market breaking down quite nicely towards that support area. So basically, you're saying it's best for traders not to focus too much on these big numbers payouts, but to focus on themselves and not comparing themselves to anyone else.
Absolutely.
Much looking for consistency, which is more important than one big flash payout, which may come from time to time.
Absolutely.
Yeah, perfect. It makes a lot of
Okay,
sense.
we're approaching the support. This is where I get excited, because these are great setups, but I also short on time. I will need to end, at the top of the hour, and I don't want
Mhm.
to get caught on a trade. So I'll trade it, and whatever the PNL is at the top of the hour, I'll just have to close it. So we either visit the support area and we can buy off there, or if we see it's going to break down, then wait for the break, retest, and join the short.
Mhm.
Or if we have a pullback, again to this level or this level, I can short again. So let's watch one more candle and we'll decide.
That's very exciting to see how you trade. Lots of questions in the chat about your strategies, about other things as well from the firm. But of course, we're focused on the trading. We can't answer them all. We are at this year is our 10th anniversary, so we have a lot of surprises this year, but specifically this month on the 17th of February we mentioned before 2 millions in account giveaway. So everyone listening in, that's your chance. Now is your chance to watch, like, subscribe, and on the 17th, it's your chance to win a lot of accounts. 2 million. That's I said it before, but it's true. It's
Yeah, that is
unheard
the
of.
biggest giveaway actually
It is.
we are doing.
Yeah, it's gonna be fun, guys. On the 17th, that's next Tuesday. We have some surprises. We have the giveaways. We have keynote speakers. We have awards to traders. We have some program releases. So I think it's going to be like I'm guessing 1 hour event.
Hmm.
Make sure to be there, and to subscribe for the event, and yeah, it's gonna be fun. It's next Tuesday, the 17th, 2 p.m. GMT.
Perfect. All right. So we did touch we went through the demand
Yeah, that
zone.
area
You're
really,
looking you're
that was
looking
good
for
area.
a
Sold off.
yep.
I think I missed the
Yeah,
entry. I don't have a way to. Uh, if I sell now, I would be chasing the trade.
Yes, I
Um,
agree.
but you know what? Just for the exercise, let's do it. I'll reduce lot size. Let's see if there's follow through. Okay, so I'm focusing on pips and not on the profit right now.
Hmm.
Just for the trading experience. So
There you
let's
go. 3 pips, 4 pips,
yeah. Yeah,
and
so that
TP
was
hit.
another like five pips. Yeah, we should be visiting. We should be, going to the areas we marked down here.
Hmm.
I think it looks at this point at least looks like it's going to continue with the momentum down and the bias. And we'll see. I'm not sure today we're going to break any key levels, but if we reach the bottom here and we hold those levels, we might see tomorrow or the day after the continuation and potentially the confirmation of the Quasimodo pattern, which would be the break of the daily lows.
Beautiful day. Well,
Yeah.
what is the I don't what is the P&L you mentioned? It was 250 last time we checked
Yeah,
on
it
this
didn't
session.
change because I took a very short, a very little trade. I don't want to be
Okay.
yeah, but on a full lot that would be an extra $40 or 30 something dollars.
Would you say that that is reasonable when you get a good day and in like 1 hour of scalping you get and you're trading small, right?
Yeah,
These are much smaller lot sizes than you typically take. But
yeah.
I
I
mean,
look at
given the
I look at two things: the win rate and the pips I made, and that's why I'm always trading like full lots,
Mhm.
because that way I can focus on pips. So here we did like okay, there was previous to the session, but that's almost 8 pips, 15 pips, break even, 8.5 pips, and 3.6 pips. So I made decent amount of pips. I mean, if you can consistently make 10 pips a day, you will make a lot of
all you
money,
need.
right? Yeah, that's all you need.
that
So
is a nice point of view.
yeah,
You are seeing this in pips.
you make every day 10 pips, and you will increase your lot size, and you will make, those 10 pips will be $10, then $100, then $1,000, then, and you will keep
Mhm.
you will you'll make a lot of money as you scale your account. So I did a lot of pips, which I'm happy, and my win rate was quite good. I mean, I had this break even minus commission. This is a losing trade, but it's kind of basically break even, and all the rest were profitable. So my win rate is high. That's what I care about. No, I don't
All right,
care about
that's
I don't care about the money, because I trade, small for the account I'm trading, but that's just to not be focused on the money side of the trade.
and this is, and now you're trading much smaller than you normally usually trade on, outside of educational purposes.
Correct.
Yeah, that's a very beautiful session we had. So we're very thankful for your, being able to take some time to address the questions from the audience, to talk and display your skill, your trading skills. We have come to the end of the stream. It is turning of the hour. We would like to thank you. Thank you for taking that time off from your busy schedule to show us and show the audience what trading is about from your perspective. Any last words before we close our stream?
No, grateful as always. Thanks everyone for joining, and looking forward to seeing you next Tuesday as we celebrate the 10 years of the Fivers. It's going to be fun. So make sure you make it.
All right. You have it. You heard it from the CEO himself of the Fivers. We're inviting you for the 17th of February. And thank you very, very much for watching. That's it for today. See you tomorrow again. Bye-bye.
Bye, everyone.
Take care, guys.
Bye.